Good morning, traders. My name is Greg Lewis. I'm the marketing manager for MetaStock, and you are about 2 minutes away from day 3 of our Grand Traders Conference, sponsored by MetaStock, TechnoTrader, CMT Association, and Technical Analysis of Stocks and Commodities. I've never actually referred to it as the Grand Traders Conference, more the magnificent, awesome, huge, but whatever. Pick your adjective. Let's stick to the notes. First speaker is Headley. Price is going to be talking about big trends, as he often does, which is very important. I know you're going to love Price, so stick around for that. And then after that, we have 7 more speakers to round us out till 6 p.m., 7 p.m. Eastern. We do encourage you to participate. Go ahead and comment and ask questions. We're very casual. We're very encouraging of participation. Just we ask that you be nice and respectful to the presenters and your co-viewers. Do make sure you like and subscribe and hit that bell so you'll be notified when we have live events like this. And finally, I usually edit out this part in the beginning where I open us up, but I can't for these long-term events. So if you're seeing this in the recording, just fast forward. You don't have to listen to me talking. All right, we're going to be starting in about 20 seconds. I'll let you listen to some jazzy music while I make sure Jeff's good to go. Thanks again for joining us, and successful trading.
Hey everybody, Jeff Gibby here with MetaStock. I hope you're doing well. Thanks for joining us for day 3 of the conference. It's good to see you. I appreciate your being here. Let me go ahead and kind of kick off with our obligatory legal disclaimer. So today's demonstrations are designed to instruct you on using MetaStock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. MetaStock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in this presentation should be construed as investment advice or a solicitation to buy a security. So, good morning, everybody. How are you doing? It's good to see you. I want to say thank you for coming. Thank you for being part of our event. And thanks for being here bright and early. It's good to see you, Vincenzo. You should be able to hear me. I should be coming through well. Before we get started, I want to say thank you to a couple of the sponsors that have helped us put together the event. The first one I'm going to start with is Stocks and Commodities Magazine. Great magazine. You can find out more about them at www.traders.com. And they've supported the Traders Conferences and the Traders Summits that we do here at MetaStock since day 1. So we appreciate that. Also want to thank the CMT organization. CMT organization is a very well-respected, well-reputed organization. If you have any assets under management and want more, if you work for a bank and want more responsibilities, if you want to work for a bank, there's some pretty huge advantages to having that CMT designation after your name. And Tyler Wood's going to come in a little bit later to kind of talk about that and kind of how that can be helpful for you. So if you're interested, if that sounds like something you'd like to do, cmtassociation.org. And finally, I want to say thank you for TechnoTrader. If you go to this website here, which I'll put in the chat box for you right now, there's some free mini courses that you can sign up for, all that kind of stuff. So I do have a bit of a trying to connect error message. Can you guys still hear me? Let me hit refresh here. Okay. Well, I guess Google just didn't think I was connected, so no problem. Maybe we're having trouble connecting to them. So, in any case, TechnoTrader is awesome. They've developed all their methodologies into MetaStock, and we appreciate their sponsoring the event today. Of course, we're MetaStock. We've been rated number one 31 years in a row. We're going to be talking about a lot of the products that we've developed over the years, including next with something that we developed with Price Headley, a product I'm super proud of. Our software, MetaStock, has been rated number one in its price category for 31 years in a row. You can find out more about that at metastock.com/conf promo. You can give us a call if you have some questions, if you want to talk, 800-882-3040. And you can go to metastock.com/sales-chat. Kamel, thank you for saying hi and welcome. It's good to see you. All right. So our first guest is Price Headley. Price Headley is a top market timer. He's been rated several times as a top market timer by Timer Digest. He's been inducted into the Traders Hall of Fame. Good friend of mine, decades relationship with this guy. One of the first projects actually that I took on when I kind of took on the business role, which has been a long time ago. But like there's a lot of things that I like about Price. Specifically, I like when we talk about how scanning is so good about being able to go in and ignore opportunities that don't exist and kind of focus on the opportunities. Price's kind of methodology and mentality around the market is, and this is exactly words that he's said to me. There's thousands and thousands. Right now, there's 5,600 optionable stocks, and his research is like, how can I just ignore small opportunities and focus on big ones? And I think that's the type of mentality it takes to be a top market timer. So that's where we're going to start today with. Let me go ahead and kind of bring Price on. How are you doing today, Price?
Fantastic, Jeff. Great to be with you to kick things off today.
Cool. I just sent you the screen share, so I'll wait to make sure I can see you. Make sure I already know we can hear you. Also, while we're waiting for that, one thing I forgot is if you're watching us, if you're joining us on YouTube, either now or in the future, like and subscribe. We do a lot of really cool videos like this. It helps a lot. It helps a great deal. So, Price, I can see your screen. I can hear you. I'm going to get myself out of the way. Your turn.
Well, wonderful, Jeff. Thank you so much, and good morning, everybody. Thrilled to be with you to kick things off. I see a lot of big trenders in there, including William and Arnold and Carlos and more. And if you're new to the Big Trends methodology, welcome. We're going to walk you through that. Like Jeff said, I've worked with Jeff and the MetaStock team now since soon after I launched BigTrends.com back 25 years ago. So it's really been a pleasure to see how responsive Jeff and all of the team at MetaStock have been, where we've made lots of updates into our Big Trends toolkit to keep on adding value, adding different techniques that you can use day in and day out to find opportunities, like Jeff said, looking for the bigger opportunities in the market. The funny thing, we're going to share with you today a new strategy. The funny thing is that my name, Price Headley, people think, oh, you must have named yourself that to be in the investment game. But actually, I'm the third, and my family's been in the thoroughbred horse business for generations. So I told my dad I wanted to do something more conservative than breeding thoroughbreds. I wanted to trade stocks and options. He thought I was nuts, but here we are. I've been in the game 35 years and counting. And we're going to talk about, speaking of price, trading pure price action today. So really looking for price action patterns where you can use that with short-term options. The weekly options, as you may know, have become incredibly popular. Everybody's talking about the zero DTE, 0 days expiration options. I'm going to focus a little bit bigger picture on the next week or so's action and look for things that can take potentially a day or two or three to double, and know that, hey, not every trade we make is going to double, but we're looking for that kind of quick opportunity. And then we're going to talk about risk management always. As we lead off here, just a reminder, of course, the information that I share with you today is based on our proprietary research. It's intended for illustrative purposes only and should not be considered specific advisory recommendations here. As you know, stock and options trading have large potential rewards, but also they have large potential risk. The past performance of any trading system or method is not necessarily indicative of its future results. Do see our terms of use on our BigTrends.com homepage for more information. So what I want to teach you about today that's worked well for me is a pure price action pattern. And so when you trade pure price action, you've got to see some things start to develop where the momentum is truly getting on your side, right? When, especially as an options trader, you need speed of movement. You know, that you can have a long-term view on any security you want, but in the short term is where we need our momentum to be working for us, right? That old quote of, in the long term, we're all dead. We don't want that, right? Especially we don't want our portfolios to be dead. We want to make sure we waken them up and awaken you to how to start putting that momentum pattern into your favor. So that's what I want to share with you today. I'm going to show you a bunch of charts that show you success stories. I'm also going to show you, when we get stopped, what stops look like. So the key is that whatever you set up your risk and reward as an option strategy, you just got to make sure that the numbers make sense for you over a large sample of trades. Any one trade, anybody can win, or even on a good system, anybody can lose, right? So the thought is, okay, how do you make sure that you stay in the game for the long haul? You've got to be able to execute the same pattern developing consistently. And that's what my subscribers tend to focus on, is how we do the work for you to then allow you to just focus on execution. So we're going to walk you through this quick options doubler system, show it to you, and how you can start getting it for a sweetheart deal that I've made for Jeff, and thanks to Jeff and the MetaStock team, that I don't make to others on the outside. But bottom line, if you don't know me, I've been trading options for 35 years. I just thought back to when I started trading options. My first options trade was April of 1990. You know, back then, we're going to do a quick look back history lesson, but the idea is that there were ticket charges on every time you traded an option contract. Even if you were just doing a one lot, the broker would hit you with a $20 or $30 ticket charge. It made it really tough to be a super active trader at the start of the 90s. And as I thought back to when I got started in the game, going, okay, well, then I better find the bigger trends, the bigger moves to offset those cost potential issues. Not an issue so much comparatively anymore. You know, now, of course, there's no ticket charge in options trades. Of course, if you're a stock trader, there's zero commission on all the big brokerage platforms. But even on options, it's $1 or less a contract with no ticket charge. So that's a huge benefit to you being more active and to being able to take advantage of the leverage potential of options, while, of course, always managing the rest. I founded BigTrends.com back in 99, so on our 25th year of business, and it's always been about a trading system. You know, systems are not necessarily the sexiest word, but they're the most effective word in your trading vocabulary when it comes to managing not only a clear buy and sell routine, which is what MetaStock gives you so well with the buy and sell arrows, and then the ability to go back and explore for new opportunities, but also to look at the history of how it's worked and what you can have confidence in going forward. But it's also about then taking your emotions out of the trading game, right? Your emotions, I found my ego, those three letters, E, G, and O, are the most costly three letters in the trading landscape for me. I cannot get into that goal of I must be proven right, because you know what happens? That's what happened to me in my early days of trading. Before knowing about MetaStock and the power of harnessing technology, was I was trading off of my ego, and I'd been trained through all my university training to be right all the time, right? To get A's and A pluses, to always be right. Well, if you have to be right in your option trade every time, guess what that doesn't allow you for? It doesn't allow for you to allow yourself to take losses properly. So part of the skill of staying in the game for the long haul is not just making money on winners, it's managing your losers well. So your system should do both of those. Quick history lesson for me. I got the trading bug right after the October 87 crash. I was a student at Duke University, entered a trading competition November 1st of 1987. So I've been reading the journal. Why did the market crash? Is this an opportunity or not? Obviously, back then, everybody was talking like it was the end of the world. It was the next Great Depression, you know, the doomsayers coming out. And I said, okay, well, there should probably be some value buying opportunities here. I figure I'll follow the Warren Buffett approach. I remember buying Coke, Gillette, Procter & Gamble, and getting my statement with a month to go in a 4-month contest. It was among college students, something like 14,000 students in this AT&T investment challenge thing. And I was like, okay, this isn't working. Like, I'm the bottom quartile of all participants, the bottom 25%, just buying the quality stocks and watching them go nowhere. Again, after the A7 crash, there was a lot of bobbing and weaving, a lot of back and forth, everybody wondering what's happened next. I said, well, there were still a lot of takeover rumors. I've been reading the journal and seeing how these patterns were developing where stuff would spike up on a rumor, and then the next day it would come back down more often than not. And so I started, frankly, scalping those situations with this paper trading portfolio, went from the bottom 25% to the top 1%. They even sent me a letter saying they hadn't seen that big of a comeback in such a short period. And I told my dad, I'm not going to study to be an equine veterinarian anymore. I want to trade stocks and options. He thought I was nuts, but like I said, here we are 35 years later. And, after having been an analyst and ultimately had a research for the nation's largest options newsletter in the 90s at the time, I got them into the internet and really said, look, the internet is a game changer for transmitting information. After taking a little break playing golf, realizing that was not, I enjoy golf, but it's not where my passion lies. My passion is the markets. It's why I follow them each and every day for the last 3.5 decades and counting. And the idea is that now, having launched Big Trend since November of 99, 25 years in business this year, bottom line is that it's about constantly staying on top of things. You can never assume you've figured it all out. And that's what I've got a great team that works with me to constantly look for tweaks, look for new little methodologies. And so that's why I'm going to share with you my latest methodology, which is a pure price action focus on this one I'm going to give you today. But also blessed to be featured in Barron's, actually not once, but twice. This was the first of two Barron's features they did in the early 2000s where I said, hey, we've got problems out there. Everybody's buying the dip after Y2K in tech stocks. All the indicators I look at, the call options activity was off the charts on the dip. That was a bad sign, right? And fortunately, we haven't seen with this AI wave that we're in now, artificial intelligence is kind of like a mini tech bubble of sorts. We've got the NVIDIA earnings due after the close today, but bottom line is that, we're not seeing quite the same level of speculation that we saw in the late 90s. It's starting to get there, but it's not nearly as off the charts as it was late 90s, early 2000s, which of course was a big problem for the markets with the 50% drawdown over this next couple of years after I'd sounded that alarm bell in Barron's. But fast forward a few years to 2007, Jeff mentioned it. I was inducted into the Traders Hall of Fame, sponsored by Traders Library, joining a lot of my trading heroes that I learned from. And my goal is to encourage you, not just with my presentation here, but with all the great speakers today and throughout the rest of this awesome conference that MetaStock has set up this week, is to learn from what others have learned in terms of what works and also, more importantly, what doesn't. And then when you're implementing after the fact, when you've made notes and whatnot and figure out what works for you, focus on one new strategy to implement at a time. Don't try to do too many things at once. And that's why when I say I ask for your full attention here, and I would ask it for whichever and hopefully all the presenters that you're able to listen to today and beyond, is that if you try to multitask while you're doing this, multitasking is proven to lower your IQ, right? Our goal for me and all the other fellow speakers and traders is to obviously teach you what we've learned. So focus on these, and really I think you'll find it's worth the time investment with a lot of focus here. So let's kick it off with a recent winning trade example. Then I'll go into more detail on how this quick options doubler strategy works. So here's one that we did on Spotify last month, SPOT, the online streaming service. So, again, this is not a cheap stock, right? This is a stock that was trading at the time in about the, when we called it out, it was in about the 290 area, okay? So why do we buy it after that gap up? You say, oh, it's because of the gap up. It's a breakout, right? But there's actually a lot of setup that goes into our patterns, right? It's not just that it's breaking out in this afternoon where we get in here in the low 290s and you see we're buying the 287.5 calls. Now, I'm not sure how many of you have traded options. Maybe you could type in to your chat box, it gets you active here. Got a great crowd already. How many of you are trading options or have traded options? Give me a Y if you have or know about options. Give me an N if you don't in the chat. That lets me know where folks are at. But I don't want to spend too much time on the basics. But this is a simple strategy where we just buy a call or buy a put. Okay, so the idea is that we are looking at how do you buy a call will basically set up your brokerage account to get yourself permission to trade options, first of all. And buying a call or buying a put is about as simple as it gets, right? There's that, and there's also what's called covered calls, where you own stock and you sell call options against it. Is another strategy a lot of people use. But a lot of you are very versed, and I see some big trenders in there: Carlos, Robert, Michelle, Stephen, Robert A, as well as Robert S. So yeah, I mean, just a lot of you very versed. So we are big believers in the KISS principle. Keeping it simple has usually worked the best for me in options trading, rather than trying to get too complicated. We will do some credit spreads at big trends, some debit spreads, but really a lot of my best trend following strategies are simple options purchases. Because when you catch the trend right, you actually have a big edge on the options pricing model. The options pricing model assumes that you can't predict price action, you can't predict trends, so it assumes that stocks are going to stay basically where they're at, and maybe add in a carrying cost tied to interest rates, right? So that they're, with interest rates having risen here in the last couple of years, there's a little bit more of that interest rate factor than there was a few years before and beyond back. But the idea is that the same, which is that, look, when Spotify is trading in the neighborhood, when we got this signal about 291, and we buy the 287.5 call, for those that aren't as familiar with options, a few of you said not yet, okay, and that's fine. So when you buy a call, you are buying the right to own the stock at this strike price here of 287.5. And that's kind of a weird strike price, I know, but it fit our risk reward parameters really well. Because think about it, the stock's at 290, it'd be a $2.50 intrinsic value. We were at 291, so it's about $3.50 intrinsic value. And we're paying $3.82 as our average entry, $3.82. So that means that you multiply that times 100, you'd pay $382 to control 100 shares of stock that would cost you over $29,000 with the stock at 290, 291 officially, right? Cost you $29,100. We're controlling $29,000 worth of stock for under $400. So our goal is to double that, right? So if we can double it, say, well, what would double it just intrinsically, right? If you paid, just for a round number, what if we had paid $4? Well, then we needed to go to $8, right, to get our double. In this case, our 382, we needed to get out at about 770 or just under that. So we got out at 770 the next day. You can see, look at how high Spotify traded the day after we got in. We got in here in the afternoon. That was April the 3rd. And then we got out April the 4th. And you can see we didn't get out the top. The high of the stock was about 304. What's it worth at 304 if you were perfect? We were not perfect here, and we still got our 101% gain in this case. But the idea is that, of course, past performance never guarantees future results. The next time we trade Spotify, it might be a loser, right? We've got to play the probabilities, and that's why you never go too heavy on any one trade. The best way to stay in the game for the long haul is to trade small on each individual trade. Never let any one trade make or break you. But the idea is that, okay, 287.5 going to 304. Think about that. We're basically about 16.5 points in the money at that point, right? We theoretically could have made at least 16.5 as our exit price if we were perfect. We don't hang around for that. If we get the double, because we're trading options that basically have, in this case, just a few days to go before their expiration, right? The first week of April was the expiration, the first Friday. That was April the 5th. So we were in this trade on April the 3rd, just a couple days before the expiration, right? So you say, why would you do that? Well, because we're not paying as much time. If you can trade them closer to the expiration and buy them what's called in the money, look, if it was $3.50 in the money and we paid $3.82, that means that about 90% of our option premium was intrinsic value. That means that you're only paying about 10% time value over and above that, what's called intrinsic in the money calculation. In the money just means when you take the current price, say it was 291 minus the strike price, it's 3.5 points in the money. We paid 382. So not much time, 32 cents a time if you're doing the math with me here. So we're betting that this stock's going to follow through. If it doesn't follow through, we've got a stop plan, which is a 50% stop loss. You say that seems like a lot. But the idea is that if you're targeting doubles, you've got to give yourself some wiggle room on the downside to not get noised out by too tight of a stop in options. And if you're afraid of that, that's why I say trade smaller. Even if you just traded one contract where it went from 382, if it lost half of that, you would lose 191 bucks. You know, if it makes, in this case, double that, then you would make 382 bucks, right? In this case, trading $1,000 invested, you would have gotten two contracts in, and you'd have made about $776 on that $764 investment. Made just over 100% target, 101.5%. And we book them, Dano. We take that money and we run when we get the doubles. We don't try to sell partials. We don't try to trail or stop to, because there's just too much volatility where you want to let that volatility work for you, and you don't want to get noised out or have it work against you. Although there's going to be times where, of course, there's going to be enough times where we're going to get stopped. But if you can even double and then take a 50% loss, double and take a 50% loss, as long as you're not doing dumb things with capital allocation, if you had $1,000, you made 1,000 on a trade, then you lost 500 when it lost 50%. Make 1,000, lose 500. Make 1,000, lose 500. You'd be averaging $500 gained over 2 trades. That would be a positive expectancy of $250 a trade before commissions. Not saying that's what we always can expect, but the idea is that you're trying to set up the odds in your favor. Any strategy that you trade, you need to know that the odds are in your favor. I talked to a lot of traders who love to sell premium, and they say, I win a high percentage of time. And I say, but when you lose, how big do you lose? And that's where I've seen a lot of options sellers get into trouble, is that they win small amounts, what we call picking up nickels and dimes in front of a bulldozer. Then they get run over when they're wrong. They give back way too much on even the minority of trades that are wrong. If you lose too big, that can be a problem. So you got to control your losses. So this is assuming that you allocate up to no more than $1,000. You made $776 on about that same amount invested. So what are we doing on this strategy? The idea is that we're trying to set it up so that you can trade it as a small account, not just a medium or larger account. Obviously, as you grow it into a medium or larger account, you can keep trading it. It's scalable. Our average contract price year to date in 2024 has been less than $200 per trade, controlling 100 shares. It's quoted as $2, but times 100 means $200 or less per contract. So that means that if you're investing, say, $1,000, that would get you at least 5 contracts at $200 a piece. And so you get plenty of contracts. It's more about making sure the risk reward is the right choice. We like to use in this particular quick options doublers strategy the same week, the Friday expiration weekly options that are coming up. So the idea is that what we're after is something that can signal typically on a Tuesday or a Wednesday and be out by Friday. Obviously, or before, preferably, right? So we go ahead and book it, we lock it down, and then move on to the next trade setup. So we're going to talk more trade setups, but we're focusing, even for such a short-term option strategy, we like to use the daily chart because the daily chart, I like to always say that even on the intraday charts, there's a lot of battles fought intraday, but the war is won at the close. You've probably heard people talk about how the first hour of the trading day is often called amateur hour. It's basically a lot of people that have put their stops in off the prior day's highs or lows, and they're getting whipsawed a lot off of those next morning kind of flushes that happen. One friend of mine who was a market maker, he's now retired in Singapore, but he was a market maker in Chicago and retired off of what he called the flush, which is the morning after, the next morning, stops getting hit, those traders getting flushed out, and then things flipping right back after those stops are cleared out, right? So you don't want to be one of the flushies. You don't want to be one getting flushed. You want to be one that's basically able to take advantage of the bigger opportunities that the end of day chart is telling you is potentially coming for the next trading day. So we'll send our trade alerts out via real-time emails, and you can also get it once you get set up. You can get also a smartphone update as well. We send these out between 3 o'clock and 3:45 p.m. Eastern. So that's Wall Street time, New York time, which is an hour to up to as little as 15 minutes before the close. But most of ours are sent out between 30 and 60 minutes before the close. So you got plenty of time to act. But the key here is that we like the daily chart because we're trying to reduce market noise. I don't know about you, but when the shorter term I go, if I look at intraday charts, I notice that the market noise seems to go up almost geometrically, almost more dramatically than you could possibly expect. If you're trading a 1 or 2 minute or a 5 minute or even a 10 minute, I would suggest that you may see opportunities, but you will also see a lot of fake outs. And we want to cut down on that noise and find the true trend, like Jeff alluded to earlier, the bigger trend, leave the little trends and the little fish for everybody else. What we also do that's kind of unique is that we don't just blindly take trades that might get kicked out from a scan that we might run in MetaStock to find this. That basically what we'll do is we'll say, look, we want to filter that further by looking at historical profit factors. What does a profit factor mean? In a nutshell, it means that we're looking at multiple factors. We're not just looking at the win rate of a system. A lot of people ask me, what's your win rate? And I'm like, that's part of it, is the win rate. But another big part of it that a lot of other traders miss, especially newer traders, is it's not just win rate. It's also how big you can win and how relatively smaller you can lose, right? If you can set up your average win to loss ratio to be potentially 2 to 1 or higher, and we've got some that are 3 to 1 plus, winning 3 times bigger than it loses, 2 times bigger than it loses, then even on a 50-50 win rate, you can make a lot of money in trading, because when you win bigger. When you lose half or a third of what you win. That's going to give you a great opportunity to say you don't have to have a 90% winning percentage to have a very good profit factor. So we will filter regardless of which stock, which sector we're getting signals. We want to say, has that worked? Looking back over typically at least the last 10 years, the last decade or more. Because the idea here is that we're looking at history being a guide. History in the past never guarantees anything about the future. There are no guarantees about the future. We all know that instinctively, but we're looking for at least a guide to say, I tend to believe that stocks are a lot like people. They have different personalities, right? There's a variety of people in your life that have all kinds of different personalities. And guess what you can kind of count on is the next time you see them, their personality probably hasn't changed too much from the last time you saw them, even if it had been quite a while since you saw them, right? A lot of those personalities stay relatively predictable. I'm not saying that stocks are as predictable as people in that personality aspect, but I think there's some guidance in my personal experience that past history on how if a stock moves very steadily and trends very well in our historical data, it's more likely to do well than something that's very noisy and choppy is probably going to stay noisy and choppy and less predictable. So we're trying to enhance that predictability, even though we can't make guarantees about the future, but we have a lot of confidence following the system consistently looking for that profit factor filter as a guide. So what we're looking for is a very specific setup. So what's our price action, pure price action pattern we're talking about here? We want to see consecutive higher closes for long signals and consecutive lower closes for shorts. That seems kind of obvious, but we actually want to see 3 of those in a row. And we also want to see 2 in a row of green candles, or it says green bars in here, but the idea of a green bar or green candle is that we are closing above where we opened 2 days in a row. So if we open lower, close up, even if we're only closing slightly positive, that would be a good sign for the momentum started off the day poorly, then it came back up. Or even if it gapped up, that it keeps going, right? The reality of that is that you have to think about who's driving the markets. Are you and I as individual traders and investors driving the markets? Whether we're trading $10,000 or $10 million, no, we will not be driving the markets. The institutions, the hedge funds and the mutual funds and the big institutions that are driving billions of dollars in and out of the markets are the ones that are the big whales that we need to follow what they're doing, right? Are they continuing to buy? And a lot of times the advantage that you and I have over the big institutions is that we can be more nimble. We can get in and out more quickly. Institutions usually have to build their position over multiple days or multiple weeks if they're looking for truly meaningful build of a position, because if they built it all at once, they'd rush too many millions of shares of buying power in or selling power out all at once. That'd be like the 800-pound gorilla jumping into the baby pool and splashing all the water out, right? It's just not a good way for them to make money and build their positions and ultimately have too much of a price impact in the markets. Now, we give our exact settings to our paid subscribers, but I'm going to show you today what the trades look like. So before I do that, just why should you care slide about performance since inception. I'm always hesitant to say don't expect this going forward compared to what we've been able to generate in the past. You can never assume that the future will look like the past, that future results will vary. It could vary worse, could vary better in the future, but the idea is that it will vary. But in the past, going back to just before COVID hit, January 1st, 2020, as you know, COVID hit mid-February to late March. The markets lost almost a third of their value in 6 weeks. I mean, that was an insane time on the downside. And then, of course, the big rally back up. Then, of course, the 2022 bear market, then the rally back up. We were looking at a slide just yesterday about since the beginning of 2022, the S&P 500 through yesterday, it was even with dividends was only up like 15%. You would think, man, it's ripped over the last almost year and a half now to the upside, but that 2022 bear market had to be made up first, right? So the key is not just making money, but holding on to more of what you make, not giving it back so quickly. That's one of the big secrets to being able to grow your account faster and more consistently over time. So a $5,000 account grew to 23,900 in profit, meaning it grew to actually almost 29K gross. So almost a $24,000 profit, but that's a gross number before commissions and before the subscription investment. But commissions, like I said, are down to very low. We're just buying options here, so you don't have a whole lot of commissions either versus, say, multiple spread legs that other traders might do. As a spread trader, we keep it more simple than that. But the bottom line is that, yeah, keep those things in mind. This assumes also that we always allocated up to and never more than $1,000 a trade. So there's no compounding in this number. So again, don't assume the future will look like the past, but we do have a lot of confidence in the system based on how we consistently execute. So let's talk about trades and charts more now. So how about another success story? This one's on Amazon. So when we go in, and remember I was talking about closing higher. So when you look at these red candles back here, remember we said we got to have 2 green candles? There's the first green candle and there's the second green candle in a row. But the key also is that on the higher closes, we'll mark those off of that this first, we'll call it A here, was a first higher close. Then B was a second higher close on that bar. And then C here was the third higher close, right? So we're getting that momentum build in Amazon happening across multiple bars there. So what we did into that third higher close, and that's why we wait for that last hour of that trading day. Amazon here is trading just over 178, and here we're having to buy just a little bit in the money, the 177.5 calls, and maybe it's a $0.50 or 65 cents in the money, something like that. You can see we paid a little more than half of the total option premium was time. So there was more time risk in this trade than the last one I showed you on Spotify. So this one, okay, we bought because this was coming in near the end of a week. So we said, let's go out and buy the next week's expiration. That was going out to March 28th. So we had to buy more time. And so that's why we were paying more time premium. We paid $185 a contract on each of those $185 that we invest. That's one contract controlling each 100 shares. 100 shares would cost you $17,800. So we're almost in the theoretical, like 1% of the stock cost is what we're paying for the option, roughly just a hair more than 1% of that stock that we're controlling there. So that's where you get like almost a theoretical 100-to-1 leverage. Obviously, that leverage will diminish as time passes. So we never expect to get exactly that type of leverage. As you can see, what happens is the stock the next day pops up to about 181.4. And what do we need intrinsically? If you pay just under $2, you need just under $4 as your double target, right? So 370 was our double target. If you add 370 just intrinsically onto your strike price at 177.5, that takes you up to 181.2. Notice it traded to 181.4. Obviously, it's going to at 181.2. We will have already gotten our target profit because it will keep some time value. These options still had a week to go before their expiration when we exited on the 21st of March, and it's got 7 more days till it expires on the 28th. So you're going to have time value in there as well. But that's why look at what happens though after that big surge to the upside the next morning. It rallies some more, but by the end of the day, look what's happened. It's reversed back down here, that red candle. We've already booked a profit. This is a great example of why we take the double when we can get it rather than using a trailing stop. Because by the time it's the end of the next day, you're back to about where you got in. So you've done a round trip from up 100 to back to near zero. We don't want to do that. We want to say, look, okay, in this case, you could, if you bought $1,000 worth, that gets you 5 contracts in, cost you $925 total dollars. So when you're making that same $925, that's your 100% gain before commissions. You said, thanks, I'll take the $925 gross and be real happy with that the next trading morning. So the objective here is, okay, looking for that momentum to pour it on, hopefully very quickly like this one did the next trading morning. It's why we get in before the close to try to take advantage of what we think is going to be that follow-through gap in our favor. Doesn't always happen, but you'll see in a lot of these examples it sure does, or that at least we're ready for a pretty big potential explosion the following day. Like Shopify, another Shopify example and success story going back into February. So again, you see some other patterns where you say, well, gee, it looks like kind of a classic price action breakout as well. That probably doesn't hurt either, right? Breaking out through that 83 resistance where it had kind of spiked a couple times there. But again, you've got to still check the boxes on the higher closes, right? So 3 higher close, or, you know, as we look back here to, this was a setup where we got the higher closes here, and we got the positive green bars hitting, not by much on that first one here, but then that second one is really positive, kind of that J hook, if you will, that you look at and say, yeah, that's that second bar here into that close here. So at that point, we're just over $85, and we're buying the 85 calls. Now notice again, we're going out into the week 2 expiration here, which is just a few days away. And we say, okay, we buy on February 7th, we buy those 85 calls. Maybe they're $0.50 in the money. We're paying almost $1.50, right? So there's still some pretty healthy time value in that trade, right? So we're expecting that Shopify is going to go from about $1.50 up to about $3, which means we're thinking it's got to get to about $88 in the next day or two. So in a percentage terms, that's about a 3% move, right? 3.5% move even. So you say, well, you look at that and say, okay, that seems aggressive. But look what the stock did the next day. If we needed to get to 88, it went to 91 plus. 91.44 was the high the very next day. So while it opened flattish, maybe even a hair lower, and then it flipped up, it's like, okay, once it's getting here into this, about this 88 target, which is about where it closed that day, but intraday, of course, it was going a lot higher. You can always look back and say, man, you could have made more money. But the objective is controlling risk while taking a set double. We find is a nice strategy for these short-term options. So if you're putting in up to $1,000, you'd have invested in this case. Couldn't get 7 contracts, you get 6 contracts here. And so when you make almost $1.50 on those, you see you're making $882 gross. Remember, on commissions on 6 contracts in, 6 contracts out shouldn't cost you more than $12. And if you're reasonably active, you should call your broker, and you might get your commissions down to as low as 50 cents or 60 cents and further reduce your costs. But they're still very reasonable in keeping the vast majority of what you make, even after commission. So that's Shopify, again, one that you can tell we like. But how about some other names? What about Devon Energy? Again, we can do this across multiple sectors here, right? So the idea is that you can see this thing's obviously in breakout mode. And the question is, where's the spot to get on the horse here? How do you figure out where you've got an opportunity? Well, we're in early April, we're saying, okay, April 2nd, we're getting those positive higher close than the open. It was really close on this prior bar here, right? We opened and then just barely closed above it, right? If it closed flat or below where it opened, it would invalidate the setup. But it did still make sense as a setup. So then the following afternoon, we said, look, just over 51.5. We're buying the 51 strike calls, paying almost $0.75, 74 cents. So it's about 50 cents intrinsic, 24 cents a time. It's about 2/3 intrinsic, 1/3 time risk. So you say, oh, gee, that's a theoretical 33% loss if nothing happens. True. You got to keep that in mind. But that's why, again, you've got to adjust your trade size so it's never – you never want to trade scared. You always want to, as you see, I'm lacing a lot of psychology in here, but money management is a big way to manage your psychology. Instead of going all in or going for the big score on any one trade, just look at it like a probability game, saying in order to play the probabilities correctly, you should be taking small size bets regularly rather than taking big outsized bets irregularly. Okay. That's a big secret to what's kept me in the game for 35 years and counting. So that was April 2nd. You see the next day it gaps up and then it keeps going, right? We're looking for a $1.48. We get it the next day. You see intrinsically it gets even above that. 52.83 was the high. Still has a couple more days to go, but that would be worth like a $1.83 intrinsically with some time value on top of it. So that $1.48 we exited might have gone to $2 plus. We don't care. We're happy to take the 100%. That would get you $962 of gross profit because you would have bought in this case more than 10 contracts. You'd be into the neighborhood of about 12 contracts. So from that perspective, you say, okay, that's what we're looking for, that kind of quick momentum. Whether it keeps going or not, we don't care. Again, this is a very short-term strategy. But the beauty of the strategy, I haven't mentioned it yet, but you see, well, gee, you're in and out in about a day. True, but it's not a day trade. So that's important, is that we're not day trading here. We're looking at getting in one afternoon. Even if you're out the very next morning, right off the open, you're still in 2 separate days. Therefore, 0 day trade issues. If you're a smaller account, you don't have to worry about day trades, which is, for smaller accounts is a valid concern. You don't under $25,000 account, you could be classified as a pattern day trader if you do 4 day trades in a 5 consecutive day span. So even if you're following proper risk management, it's just stopping yourself out the same day, then okay, well then that could still cause you to be called a day trader. So we don't want that. So we're not going to have that problem because we're getting in that final 30 or 45 minutes or so. And so we're not going to get stopped or profit targeted typically in that last half hour or 45 minutes. So the idea is that, okay, here's another one, Walmart. Walmart often is considered kind of a slow stock. It's split here earlier this year. But yet here it goes. Look at the pattern. Again, checking the boxes. We're getting the higher close here on this first point here, point A, than we were the prior bar, right? So even though it looks like kind of just a choppy candle, right? It was down, then it came back up. It's still above where it was the prior close. So that's the first close higher. Of course, the second close higher with a big positive green action here. That would be B here. And then C, of course, it gaps up and keeps going by the end of the day. So you've gotten the 2 higher closes to go with the 3 closes in a row that are higher. So we're getting in that third higher close, that second green bar in a row, about 60, just over $60, and we're buying the 60 calls. So yeah, guess what? Those are going to have more like an all-time premium situation, but that's why they were cheap, right? And on note that we're buying the week 2 options. That means the second Friday in March, which is March the 8th. And we're buying them there on March the 5th. So we're in on a Tuesday afternoon. So we're like, okay, we got 3 more days to go here before the expiration. What would happen, by the way, if we took it and we weren't getting our 100% gain or our 50% stop, we would get out in that final trading day, usually around the middle of the day. So basically we'll give you plenty of time to get out before those options would hit their quote unquote expiration, which would be at 4 p.m. on that March 8th. We were out March 7th when the 45 cents went to 90 cents. Now, what did it take for the stock? The stock had to go from about 60 here to about 61. So stock rallied about 1.5%, and we made 100%, right? So that was tremendous leverage for such a relatively small move. But it kind of just shows you that the options were priced, we thought, very cheaply. And the cheapest options are the ones where you get the trend right in your favor, right? The market assumes that you can't predict the trend. So if you've got a trend advantage over time, knowing that there's going to be times we'll show you a losing trade, I think I've got one of those coming up too, is that, look, the cheapest options are where you catch the trend correctly, because the options pricing model, as I said before, does not account for trends. And remember, the guys who developed the options pricing model, they won a Nobel Prize for the options pricing model in the mid 90s. And then the couple of the guys went on to long-term capital management, which if you look up LTCM, or long-term capital management, it's one of the biggest hedge funds of its day for a year or two. And then it blew up completely because the flaw of betting against trends came back to bite long-term capital. So the flaw, don't bet against trends, bet with trends, okay? Find the trend and ride it. The trend is truly your best friend in the options pricing model. So bottom line is losing trade. We got to talk losers, right? I mentioned Shopify winners. Here's a Shopify loser, okay? You cannot expect perfection, and you've got to expect you're going to get a reasonable share of losses to go with your doublers. So that's the key, is being able to stick it out across that, never getting too high. If I just hit Shopify 2 winners in a row, I wouldn't change the next Shopify trade, would not change my capital allocation on that. Just basically, you're just setting yourself up to second guess yourself if you mess around too much with your capital allocation. So just work on being consistent in your capital allocation. That's why we show you on our history, not putting in more than $1,000 a trade as an example, or whatever you decide is your trade, a dollar commitment per trade. Be consistent with that. So here we are buying an option. Each option is going to cost us $141 on average back on March 20th. It looks like everything's all systems go. Everything I just mentioned, there's the 2 green candles. Feeling really good about this thing. 81.5. We're buying the 81 calls, about half buck in the money. We're betting that this thing's going to go over the next couple of days, and it does go briefly, but you can see it doesn't quite get us where we need to be. It got almost to 83 there intraday. That would be worth about $2 intrinsically, and that maybe it was up to 2.5 or something. But you know what? Then it flipped on us, and we don't mess around with the stops. If it hits the 50% loss, we say get rid of the trade. So you'd be pretty much fully committed here on your $1,000, and you'd lose $497. So the idea is that happens. And so the key is, again, that's assuming $1,000 commitment. If you're investing more, it would be a bigger loss in dollars. The 50% loss has to be respected. And if you say I'm gonna change it, I'm gonna go with a 25% loss, you will whipsaw yourself out of what can turn into a lot of good situations with just quick little next morning fake outs. So you don't want to do that either. So you want to give yourself enough wiggle room, but still have an uncle point. And for us, the uncle point is that 50% loss. Those are call trades. Let me focus on a couple put trades real quick. 3-day rule on Starbucks. We were betting on it getting there, but by the expiration, it hadn't gotten to the double. But you see, now here we go. We're moving to the downside. We've got the 2 big red candles down, and then actually 3 red candles down, 3 closes lower. And there it is. We're getting in just under 104. We're buying the 105 strike puts. That means you got to write to sell the stock of Starbucks at 105. It's at 104, so it's $1 in the money. We're paying $1.52. It doesn't get to $3, but it goes on and gets us a 54.6% gain there. And so another one that sometimes they gap in bigger than you expect, right? Here's PepsiCo of all stocks. Pepsi gapped down. You see this back last May, but bottom line is that we bought it at $1.06. We're not early, right? This thing's been dropping for the last week plus. When we get into it here, when our pattern sets up here just over 186, we're buying a 185 put. You say that's aggressive. That's a little bit out of the money. True, but we've got a little bit more time on this one, so we feel like, okay, let's give it a chance to go. And it pops from 186 down to a low here about 182. Obviously, a 182 level would mean a 185 right to sell would be worth $3 intrinsically. We got a 253 on that gap lower around 182.5. So 253 was our exit. It was 138% gained on the downside. So on up to $1,000 invested, get you 9 contracts in for $954, would make you $1,323. Again, past performance never a guarantee of future results. And again, looking at past performance, never a guarantee of future performance. But the idea is that, okay, you see, stacking all those winners and losers, every trade that we called out from the system called out from the beginning of 2020 through yesterday's close, 478% gross return. Again, $23,910 gross profit, adding up all winners and losers before commissions and before subscription investment. Speaking of subscription investment, I'm going to give you a great low-risk entry point into this exclusive trading package that we call Quick Options Doublers. 3 months of trade alerts, the next 90 days of trade alerts with a bunch of educational bonuses. It's not a black box system, folks. It's something where I give you as a subscriber the settings and rules. You can then plug it into your MetaStock. You could actually turn it into a system that you can follow as well. But we do the work for you on the trades that I show you that we're calling out each week for our Quick Options Doubler subscribers. I also do weekly video training for subscribers. So that's posted on your member site on the Big Trend side every Monday evening, and then also a dedicated email to me and my analyst team. So if you've got a question, we're there for you. That 90-day access would be an $891 value when you add up our $297 monthly subscription investment times 3 months. But I'm going to drop it dramatically. Thanks to Jeff and the MetaStock team. They've been really good to me. I want to pay that backwards and pay that forward as well and say, look, let's take it down to 177. Why did I do that? You got 90 days of access. It's less than $2 a day, 177 to find out. Also, I like to price things so that on one trade, one good trade should easily be able to pay for your 90-day trial subscription. So here's the link you go to, members.bigtrends.com. It's not a www, it's members.bigtrends.com/quick. It's really simple. I want to show you that page real quick as well, members.bigtrends.com/quick. And you'll see it'll pop this up, which is, it's already been, all the discounts have been taken. There's no promo code apply because we've taken $891 down by more than $700 to just $177 trial for 90 days, the next 3 months. You'll get plenty of trading opportunities. Like I said, that's less than $2 a day, less than half of a cup of Starbucks, right? But basically, bottom line is that we've got the PayPal link. We've got the simple ways to complete your purchase on the secure page. Like we said, our 25th year doing business. We stand behind the product to make sure you're not just satisfied, but frankly, I want you to be thrilled with the value we give you and with the support we give you. My client care team available via clientcare@bigtrends.com, or if you need to give us a call anytime during normal business hours, Monday through Friday, we're available for you at 800-244-8736. If you can't remember that, it's 800 Big Trends on your phone. But I promised Jeff I wanted to leave him some time to talk about the Big Trends toolkit, because the toolkit is such an amazing set of things that he helped me to work on. It wasn't just like one system. There's like a dozen key elements that can go in there, with a lot of newer additions as we did the upgrades to the toolkit that Jeff and his team were so awesome about, to help me basically say, I'd like to create like a total composite indicator, which we called Big Trend Score. And Jeff and his team did a great job helping me do that. So if you say this is too much information, you can actually summarize it all in the Big Trend Score. It's one of the coolest things, I think, in the toolkit, in addition to the dozen or so different methodologies that you learn about, and an incredible value that I want Jeff to walk you through on our Big Trends toolkit. So Jeff, if you don't mind showing people the toolkit, I think it's pretty awesome what you guys did for us and for our Big Trends community. Thanks so much for having me. You there, Jeff? That's okay. Not sure about, but basically, remember, yeah.
Muted.
I turned on. I'm here. I'm sorry. I hit the wrong button and turned on.
Unmuted.
All good, but yeah, thank you for all the great work you and your team have done for the toolkit. It's really a phenomenal toolkit and full of so much great information for people.
Let's see if we can just answer a couple of questions real quick, if you don't mind.
Sure. Go for it.
PJ wanted to know: Do you send any signals out pre-market?
We will basically remind folks like what our stop and our target are. So we'll send out reminders before the market opens the next trading day. But it's really simple. Once you know you paid something for an option, whatever your double on that is, that's your target. Whatever half of that is your stop. So incredibly a KISS principle, keeping it real simple. But we'll send those reminders, yeah, every morning when we're still having open position.
Nelson wants to know, do you pay attention to earnings? Like, do you trade around earning dates? I know a lot of people will see how earnings come out and shake out. Do you look at anything with earnings when you're kind of looking at the recommendations?
Yeah, on this service, it's a great question, Nelson. On this service, if we have like NVIDIA, say NVIDIA was a perfect pattern with the earnings due out after the close today, you know what? We're not going to be buying NVIDIA calls, right, or puts right before earnings, because it's just too much event risk. So what I will do is, the beauty of weekly options is that if, say that a company's got earnings 2 weeks from now, in the old days, you might have to buy a monthly option and you might have to buy that volatility on the earnings. Now you can buy a weekly option before the earnings week is going to hit, be in and out before that, and that's how we navigate earnings. We don't want the gap risk in this strategy.
Michael wants to know, when do you close the position?
Yeah, so basically you close it at the double or at the 50% stop. So if you make 100%, you lose 50%. Those are your exit points. Or if it's still open come the expiration day with neither one of those target or stop hit, then we send out follow-up last day instructions as well via real-time email. And like I said, you can also get it as a smartphone update via the WhatsApp technology once you get signed up.
Robert has a really good question, and I'm kind of interested in the answer to this one as well. How do you handle morning gaps, ups and downs that are against your trade?
Yes, good question, Robert. So the thought is, okay, you're talking, I assume, about market gap ups and gap downs. So one of the things we would do is we'd want to be aware of if you do have a big event risk situation, like the big one would be the jobs data the first Friday of every month, right? That if you're setting up to want to trade that, we don't want to trade that kind of gap risk. We'll want to be out before that by Thursday's close in that type of a week. But otherwise, if the market just randomly is gapping up or gapping down, our view is that the stocks that we're seeing these patterns on, as you saw a lot of the examples I showed you, they're set up for the gap in your favor more than the gap against you. I can't guarantee that one's going to gap in your favor or against you. That tends to shake out over time, but we've seen so many examples where once this pattern starts to pour on the gas, it's like the institutions just want more of that stock, and they'll keep on pouring on that buying power on the upside or that selling pressure on the downside after we see the pattern confirmed.
And last one I think we have time for. Avni wants to know, do you have a trade every day? So about how frequently do you issue a trade recommendation?
Yeah, great question. Yeah, great question, Avni. We do not have a trade every day. I've always said I would much rather trade for results rather than activity. So we will typically be targeting about 2 trades a week at maximum, and sometimes 1 trade a week. I'd rather have the best of the best than the rest. So the idea is, like Jeff alluded to at the beginning, we want the bigger, proper, best setups, not just any old trade setup. So we're very quality focused at Big Trend. So like I said, probably in the neighborhood of 6 to 8 trades in a month would be typical with this strategy.
All right, I think that's good. For the other questions have to do more with the toolkit. So I'm going to talk about those. Price, before I let you go, I just want to say thank you for, gosh, you were literally the first project we worked on when I started in BD. And I don't even remember how long ago that was, but it's been a great journey. I really appreciate you, man. Thanks for
appreciate you. Thank you, Jeff, for you and all the team at MetaStock. You guys do a great job.
Cool. All right. Let me go ahead and talk about the toolkit. One of the things, actually, Price was literally the first person that I reached out to as part of the toolkit. And I remember he was somebody that was well aware of, somebody that I'd met, somebody that I really liked. Let me make me the presenter so I can start to show my screen. And so I kind of told him, and I said, hey, I like the work that you do. I want to kind of get this ready for MetaStock. And that was the beginning of Big Trends 1. And then we did 2, and now we're on 3. And you can always tell if it's somebody that we've been working with for a long time, if we're up at 3 or 4 on an add-on version. It's just somebody that we have a heck of a lot of respect for. So, Vincent, Vincent said it's good to see you. Thanks for coming in. Happy to see you. You wanted to know if the options trades can be made with the add-ons. And so what I did, a lot of people have been kind of asking about NVDA. And so I put together one of the new systems. I just pulled up the chart for it. And I wanted to kind of just show you what it looks like. There's not any current signals on NVDA, but this one kind of looks at the score and kind of gives you an idea of what's going on. And the reason I wanted to kind of just show you this particular part of the program, Vincent, is I wanted to kind of give you an idea of how the add-on can be helpful for you in terms of structuring a trade. So what I'm going to do here is I'm going to open up the expert commentary. And what I'm going to do is I'm going to go ahead and let it load. Where is it? Okay. Okay, there it is. Good. I thought it was going to not load for a second. But just before we kind of do this, in case you're not familiar with MetaStock, this is the chart right here. This little triangle right above the bar, that's telling me that this is the bar that it's on. Okay. And if I'm kind of looking at it, one of the things that I like about the score, this was something that I liked so much that Big Price wanted to do, is it takes all of his favorite indicators and it kind of sums them up and kind of gives us a total score. But I can kind of see that right now the Williams percentile is bullish. 2 days ago, it was also bullish. The CCI, the Commodity Channel Index, is bullish. You just see how well that's kind of put together. You've got efficiency, you've got acceleration bands, all that kind of stuff is kind of put together very, very well. Now, for this particular method, because there's a number of methods that are actually in the program, if it kind of goes up above this little line here, if the total score goes above this line, which is 80, it's going to trigger a long condition, which is going to give you, if you look right here, there's a diamond where it says there's a buy alert on the chart. So if I was running a scan for anything that has a setup for potentially tomorrow, it's going to kind of alert me there. So right here, you get the diamond that gives you that buy alert. And then what needs to happen after that is it needs to go above the high of the very next bar. Okay, I understand what I'm doing wrong. So right here you had, and I'm going to zoom this in real quick. So let's see, zoom box. Okay, here we go. All right, so here you had the setup, which is denoted by that trigger, okay, by this diamond. This basically just said, of the indicators price likes to use, it's gone above 80 and a possible score of 100. That triggers a buy scenario or a buy setup, okay? What has to happen after that is we need a penetration of that high. So what price basically wants is he wants a confirmation that this is going to continue to move up. It's very, very simple, okay? When that happens, you get kind of the buy signal on the chart. And when that happens, what it's going to do is it's going to give you kind of the answer to those questions that you have. How does this help me put together an options trade? And so what I'm going to do is I'm just going to kind of just read this out loud a little bit. I'm going to kind of zoom it a little bit in so you can kind of read along with me in your book if you'd like. Traders interested in taking advantage of this opportunity could buy the stock, or you could buy a call option 2 months before expiration. So it's telling you, okay, you could either buy it. If you want to do an option, look 2 months out. Okay, that's the expiration that you want to look at. If you want to be aggressive, you'll typically look at call options that are one strike out of the money. So he's telling you time, he's telling you strike. That cost $200 or less, while conservative traders will typically consider a call option with more intrinsic value, usually one strike in the money. Traders should look to exit this position when this happens or when this happens. And depending on the method, because there's a ton of methods in here, it'll actually tell you when to get out of that trade as well. So very, very good. In fact, when we had initially, just to kind of give you a frame of reference, when we initially created Big Trend Toolkit 1, I asked Price, I kind of explained commentary to him, and I asked him to put stuff together. And he did such a good job with it that I use that as a benchmark of how commentary should look when we develop projects. So he did a really, really good job with it. And so, yeah, hopefully that helps. It will definitely, Vincent, help you kind of structure an option trade. He gets really specific about when, what option, what expiration, what delta, all that kind of stuff is pretty well laid out. So, and of course, it does take advantage of the scanning engine. We've been talking all week about how do we find trades that exist? You know, and that's the thing I love about Price and how well it matches with his methodology, because his ideas are designed to be selective. And so if I can just go through, find and just focus on those trades that actually have an opportunity and ignore all the noise in the market with 5,600 optionable stocks, that's what I want to do. So anyway, if you can't tell, I'm super proud of this. It's been a very, very good selling add-on over the years. Since we're on our third version, it's pretty mature. We've got all of these different methodologies. I think it's like 14 or 15 different methodologies. And when we were kind of looking at 3, we were like, well, okay, what can we do that's useful? And Price kind of talked a little bit about that scoring methodology, about taking all of the indicators that he's got that he likes, putting them in the program. And I liked it so much, I put it in every scan. So even if you're not using the big trend score, maybe you really like the efficiency or the force index system or the option shark system or any of the systems that are in there. Anytime you run that scan, you can kind of get a score of that big trend score to see how many of the other indicators are actually lining up. I don't really have enough time to do this particular add-on justice. It's just we've worked on it. We've worked on it twice. We've worked on it a third time. It's based on all of his decades of resource. And it's something that's been a very, very big seller. Brad, thank you for using it. We do offer, Brad says, I have version 2. And can I get 3? Yes, I don't remember exactly what the price is on the Big Trend Toolkit 3, but it's not very much money. So if you give us a call, Brad, our sales team can remind me. I'll actually look it up as soon as I get transferred over to Scott, and I'll put that price in the chat. I think it's very, very low. We try and reward you for using it. We try and develop it in such a way that you want the new features, all that kind of stuff. Doug says, is there a scanner on the Big Trend score? Yes. So if I look at the methodologies, there is a Big Trend score, but every single scan that exists in there is actually going to give you that Big Trend score because I liked it enough and I went and reworked all of the explorations, every single one of them. There's like 17. All of these are explorations in MetaStock, right? With the Big Trend Toolkit. I liked it so much that I reworked all of them to include the Big Trend score. So here's what we're going to do with that. Again, this add-on has a special place for me because it's the first one. And but over the years, we've improved it. We've added things to it. It's got 17 different experts, 17 different scans. All of them have the Big Trend score, Doug. You've got the system test, so you can go in and test them, see how well they work. You've got templates. In total, the custom indicators that come with it are 18, and it's based on all of Price's work. He's got a couple of other toolkits. This is kind of the definitive edition. So normally it's $697. Here at the event for the conference, it's $497. Like all of the products we sell, we're going to back it for you with a money back guarantee. We're going to give you 30 days to try this out. If for any reason you don't like it and you want to get your money back or you want to exchange it or whatever, just let us know. We'll be happy to do that. If you haven't tried MetaStock, I'm going to remind you real quick. 31 years in a row, it's been rated #1 as the best software in its price category. If you want to try out this toolkit, I don't want not having this award-winning MetaStock to stop you. So I'll include a free trial to MetaStock as part of your purchase, or you can do our extended trial, either one. To do this, though, you can give us a call, 800-882-3040, metastock.com/sales-chat, or metastock.com/conf promo. So big thanks to Price for all the stuff that he's done over the years. Big thanks for you to being here. And I will get that question for you, Brad, in terms of what the upgrade price is. I just need to look it up. So we'll do that in a second. I'll just type it in chat. I don't think it's very much at all. So we try and reward you for having the program, and I appreciate your using it. So thank you. All right. We did talk a little bit about MetaStock. Scott's going to talk a lot more about MetaStock in just a second. Before we do that, I do want to thank our sponsor, TechnoTrader. TechnoTrader has been friends of MetaStock for years now. They've always done such a great job. Martha came in and she talked both on Monday and on Tuesday. If you go right here, they've got several mini courses that you can go ahead and sign up for. That'll take you right to them. And I'd recommend you do it. It's free. If you don't like them, it's free, and you're going to like them. They're very, very good. So big props to Martha for helping sponsor the event, helping us put it together, and TechnoTrader. Thank you. Our next guest is Scott Brown. Scott is actually the owner of MetaStock. He's what am I going to say about Scott? Scott is such a nice guy and just such a positive influence. And I always kind of, when I'm teasing Scott a little bit, I'll call him the cheerleader for MetaStock, because one of the things I love most about Scott is he's always kind of energetic. He's always positive. He's always upbeat. And he's such a generally nice guy. He does such a good job. And I think we always talk about how we like it here. We like the culture around it. And I think Scott's a really good example of, why the culture at MetaStock works so well. So without further ado, I'm going to go ahead and make him the presenter. If we have any problems, I'm going to run out of the room because he's 2 doors down. I'm going to make him. So Scott, but what you should see right now, I can see you. I just sent you the screen share, and I'm just going to, I don't think we're going to run into any issues, but yep, no, perfect. First try.
I do have my, I wanted my camera on from my, above my monitor, and I ended up with my camera on my laptop. So
That's a 10-second fix. I'll come and do it for you.
okay.
Start talking.
Big thanks to Jeff Gibby, everyone. Come on. It's because of him that we are absolutely getting this done, right? What a place to be. So many speakers. There's well over 30. And how much work this is to do. He's unbelievable. Can you believe he just traveled through time and space to get here to be with us? So super happy to be with him. And he's just going to fix this real quick. There we go. There we go. Now you can mock me even more. You get a close-up. Thanks, Jeff. So my voice is a little bit shot. I got to apologize for that. My son's playing in the state baseball playoffs, and we're in the state of Utah, and we've made it to the semifinals. And last night we were playing the #1 seed, and we beat them. And it was super cool because my son hit the game-winning hit to take us on to victory. So that was awesome. Let me just shut this door. And so I lost my voice cheering so loud for the Lehigh baseball team, which was so cool. Price Headley, guys, he is one of the best guys out there. We are so happy to work with him. And what Jeff just showed you on that add-on, if you don't have the Price Headley add-on yet, I highly recommend that you get it. It really, really, you know, we've had so many great comments from it. Price's trading experiences are in there. All of his trading ideas, showing you how to get in and out of the market. And that's one of the reasons why MetaStock is so great. You know, because MetaStock, we can take anybody's trading theories or strategies and we can put them into the software. And that is something that is so valuable. One of the reasons why we've been around so long. MetaStock, we've been around for over 40 years. I mean, that's forever, right? We've been around, I think it's even before Microsoft. We've been creating charting software. My name's Scott Brown, for those that are just joining and brand new. I've worked for MetaStock for close to 25 years, and it's awesome. It is such a great place to work. We have such great customers. We just got back from touring 20 different cities across North America, and it was so great to interact with our clients. If you were the one of individuals at our seminars, thanks for coming to those and really seeing our latest version of MetaStock, MetaStock 19. Everything I'm going to show you today is in MetaStock 19. So if you don't have MetaStock 19 yet, it's time to jump on board and get that. So let's go ahead and dive in. There we go. You know what? Jeff usually does our, we don't have it in this one, Jeff. There it is. This is what we wanted to show. I know our attorneys will be happy that we showed the disclaimer.
Hey, Scott, I'd be
By
happy
the
to
way,
recite
everyone,
that for you
wish
if you
Jeff
want.
a happy birthday. Just last week, he turned 50. So if he forgets something during this conference this week, just remember you got to go easy on him. Okay, he's 50 now. So, but he'll mock me because I turned 50 like a month ago. But just so you guys know, obviously, the demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and it's not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Basically, what we're saying is, hey, trading can be hard, and you're not going to win every time you trade, right? And that's just natural. Obviously, you would not be in this room right now if your trading was always perfect, right? The reason you have joined us today is in this great conference Jeff put on, is to try and learn how to become a better trader. When I travel the world, and I just got recently back from Hong Kong, Singapore, India, Australia, and London, when we meet with people, whether they're institutional traders or whether they're retail traders, they're looking for an edge. Everyone's always looking for an edge. And MetaStock can provide that for you. Technical Analysis of Stocks of Commodities magazine has ranked us with the Reader's Choice Awards 31 straight years for the best trading software. That's a big deal. That is awesome. 31 years in a row. That's unbelievable, right? And one of the edges that MetaStock is going to give you is the forecaster. We have one of the best programming teams in the world. And we have a gentleman named Ken Hunt. And Ken Hunt is phenomenal. He was one of the first, he's been with MetaStock for like 35, going on 40 years. He was one of the first programmers to ever program in backtesting for software. And he was a part of us for so long, and then he quit for a few years. He just didn't want to create a chart anymore, and that's what Thomson Reuters at the time wanted him to do. He wanted to create new technology. So he quit and worked from home. He drained his own 401k, funded the whole thing himself because he believed in it. And he actually created what the forecaster is. And so when I bought MetaStock in 2013, I wanted to get Ken back on board with MetaStock. And so I asked Ken, I said, Ken, we're getting the band back together. We need you here at MetaStock. And he's like, Scott, I have something really cool to show you. And he showed me what the forecaster is and what it does. And I was floored, just blown away at just how he created this idea. Instead of just looking at past events, well, what if we could look into the future for probability price action? It answers that question, where the price is most likely to be in the future after an event occurs. And so that's what we did. And we brought Ken back on. We ended up purchasing the forecaster from him. And it's been a great piece of software. If you're a MetaStock user and you do not use the forecaster yet, I am so glad you're here. If you don't use MetaStock yet, you're going to see why this is one of the biggest reasons why you should be using MetaStock. This is a patented piece of software inside of MetaStock. No one can use or do or copy what we've created inside of MetaStock. So this is a huge piece of functionality for you. So inside of the MetaStock forecaster, you can draw your own patterns with your mouse. Are you kidding me? If you wanted to draw a head and shoulders, that functionality is now inside of software where you can just draw it with your mouse. I've been doing this 25 years, and that question is asked all the time in our events. Hey, can it do this type of pattern, this type of pattern? Can I create those on the chart? And now we can do that for you. So let's go ahead and look a little bit about inside the MetaStock forecaster, and we're going to show you some things. right now, there's over 70 plus events. These events are just systems or indicators, right? And you can see those right there on your screen. Anytime you bring up a security inside of MetaStock in the forecaster, it will absolutely show you every time there was a buy or sell signal on the chart, much like this, okay? So here's a chart that we're looking at Rio Tinto, and these little yellow triangles are events. And these events right now are being specified by the moving average 50 cross down. Now I could click on any of those and it would show me which one of these event markers are on the chart. Now, when I click on an event marker, it will draw a cloud into the future, showing you where the projected probability is based on the moving average 50 cross down. So on this one right here, it says, and we can do this for a 30-day cloud, a 90-day cloud, or a 180-day cloud. And this one, it's showing that it's going to go down. Now, this is our probability scale right here. The darker the cloud, the less probable it is to go in that direction. Whereas if it's a brighter color like a yellow, pink, red, there's a higher probability that the stock price is going to go through that cloud. Now, again, there's no guarantee of this. Let's be very clear. And I really love how Price Headley said that too. There's no guarantee of results, right? Of looking at past performance does not guarantee future performance. But what we do is we take number of statistics and we look at specific probabilities and margin of error to create these clouds. And so we'll get into quite a few examples of these. Now, also in these clouds, this is really cool because, AI is the massive buzzword right now, whether you're a company, whether you're my son, for example, that's playing for the state playoffs. They thought that chat GPT AI was the best thing ever because they could say, write me a 3-page paper on the writing of the Constitution of the United States, and it will spit it out. And then their teacher will look at it and start laughing and say, I know you couldn't create that type of paper with those words. But anyway, MetaStock does something really cool. Every time we get a new bar of data, and you can have a real-time bar of data or a daily bar of data, anytime we do this, what we can do is we create a cloud and we actually update that cloud to show you where that performance could go. And I'll show you an example of that in just a second. So right here is a price, volume, and event marker. We're looking at the CCI overbought, the commodity channel index overbought with the Adobe system. And when we click on this, it will show a cloud that goes out into the future, okay? And as that goes out into the future, it's projecting a price movement, right? Now, who is this good for? Man, if I traded options, wouldn't this be really awesome? Because this is showing a 90-day cloud. And if it's really going to go from, let's say, 52 up to 60, man, wouldn't that be great to buy some call options on that? And as you see right here, it actually, this is on the Adobe systems from December 7th, before we had it. Every time, let's look at that, December 7th, this cloud will never change. On this tab, price, volume, and event marker, it's a static image. And the static image that you have there will always show this cloud. It can't change. And look how it mirrored that price movement for you. And so what we're doing right now is taking a look at that as we can connect another one. Jeff was just fixing my camera. You guys, right? I guess that, anyway. Don't shield your camera because you can see more of me now. I feel bad for you. But this one, this never changes. If you click on past performance, that one will change. That's where it's getting a bar every day. And it's generating this cloud right here and updating it. Okay. So that's enough of this. Let's actually, we're going to go in here. And we are going to go into the software for the rest of the day. So MetaStock 19. MetaStock 19 has been created. It's been released. And now we have it on the market. It's only been out for a month, maybe 6 weeks. And we are having incredible success with our prospects and our existing customers that are taking it on. We have put so much time and effort into this version of MetaStock. MetaStock 19 has more changes, updates, new functionality in it than any other upgrade in the last close to 25 years that I've been here. We have put in so much in there that all of our customers are truly benefiting from it. So let's say today you don't own MetaStock, or you get MetaStock 19 and you're like, I loved what Price Headley said. I liked what Scott said. I want to play around with the forecaster. So let's take a look. So when you open up MetaStock, you're going to get this power console that will automatically pop up on your screen. And if you were charting and you wanted to go back in it, it's right there on that icon. And from here, you can do charting. You can open up a quote. You can do explorations. You can do a system test. You can look at the forecaster or our option scope that really dives into option analytics. Okay, so we're here in the forecaster. For example, let's look at eBay. So we'll type in ebay.o. And what it's doing is, let's take a look at this recognizer library. This has all the different systems or indicators that you can scan and look at. So when I bring up a security such as eBay, it will then show every single system, and then it will provide buy and sell signals and the event markers right on your chart. Okay. Now you can sort these based on the highest profit potential, profit potential long only or short only. You can look at the most current or the most accurate current forecast, most pronounced current breakout, most distinct forecast cloud, most recent event, or the most events. How about we look at one with the highest profit potential? Now, what we want to do is see the key in looking at the forecaster is you want something that shows, something with at least, 15 to 20 events. Because the way the cloud is generated, it looks at all these historical events, and then they will create, the cloud based on these statistics. So you could come in here, click on one of these. Here's a 30-day cloud, and what we're doing is we're looking at the 52 weekly low on eBay. And it's showing me over 30 days, wow, the price really followed that pretty well. It's the cloud basically said, in 30 days, it's going to maintain its current price level. So where we want to go now and explain the forecaster is our statistical report right here, okay? And what this is saying is, hey, look, this event has occurred 23 times between May 23rd, 2019 and May 22nd, 2024. On average, the event occurs every 18 price bars. The recent frequency of the event appears to be decreasing rapidly. Recently, on average, there have been 0.478 events for every 100 price bars, okay? Then it comes down here and it gives you tons of statistics. Statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears to be about 2.44% higher, with a standard deviation of 0.0506. The statistical margin of error is approximately 20%. Okay, so you're getting all this data that traders, especially technical analysis traders, love to look at, right? So as we see this, but again, if we can find something with more bars than this, it's going to decrease our statistical margin of error, right? So as we scroll down these, we're looking for maybe a few more of those. And as we come in, we can say, oh, here's one with 18 bars. Here's one with 19 times it's occurred. And that's the Armo buy. And you can come through these and say, hey, let's look at one that goes out 90 days. So we click on that and you say, wow, eBay back here in April of last year, you know, a 90-day cloud came out. And look, and in those 90 days at the end, it said, this is where we think it's going to kind of be. And it really followed along that pretty well. Now, remember, this is our probability scale right here. The brighter the color of that probability scale, the greater the chance you have that we feel that that price is going to move into that. Again, no guarantees on that. So let's take a look at maybe what 180 bar. That's a very far, you know, location. And look, it did really well with the 90 bars, but then it thought it was going to gap up here, and it didn't. But I'll tell you, look at that, how well it followed that one right there. So we can come out here and say, okay, let's take a look at the latest event that we have and see what it did on a 180 and a 90 bar. And then see, it moved up. It didn't like that. So you're saying to yourself, I like the Armo buy, but that cloud is not looking that great. Well, once we go from here, from price, volume, and event marker to the forecast cloud, remember, every time we get a daily bar or a bar during the day, this cloud right here will update. It'll update for you. So right now it's showing you, based on the Armo buy, that what we have here is that it looks like it's going to kind of maintain itself. Okay. So let's look at some more examples. So let's take a look right here. Here's a chart of Microsoft. Okay. And as we're coming in here, we'll look at a 30 bar. This is the, now down here, this one, we're going to look at the most accurate current forecast. And we're going to go ahead and click on that. And we'll look at different clouds here. Here's a 30 bar cloud. Here's another 30 bar cloud. And it's actually tracking that one pretty decent. Gets a little choppy there. You can see what 90 bars looks like. Wow. Wow, let's go. Look at that. That looks really nice. And then look at that. So again, if you're an options trader, and back on our event on February 1st, it showed that we were trading, somewhere in the neighborhood of about 410, maybe 405. And it said, hey, look, out here, we think that we can get to 450. And look at that trend. And it looks like it might make it through there. And you probably could have bought some options there pretty cheap. So that's a great example right there. Let's take a look here of E-minis. Obviously, E-minis are very popular. And let's sort this one based on most events. Let's do that one, most events. Okay. So these are some indicators that we've created. I've created all these. This one is awesome. The Kelly Selment instead of sentiment. You see what I did there? You don't have to laugh at my horrible names. I know they're horrible. But this one is based off of a pattern that I created here. And I'll actually show you how to create that pattern here in a minute. But we're going to jump down here to the statistical report. Let me get a drink. Sorry, again, I was yelling too loud at the baseball game last night, and I apologize. Actually, I was cheering, not yelling. Okay, so in here, this event occurs 188 times. So statistically, 7 bars after the event occurs, and with a probability of 95%, the closing price appears 0.13% higher with a standard deviation of 0.0217 with a statistical margin of error of only 7%. So the more events, we feel like we can really get that cloud in the right place and really decrease that margin of error down to 7%. And let's take a look at some of these, right? So you can look at this pattern match and it's saying, hey, look, that one's a 78. This one's a 76. This is an 85. It's got to be at least a 75% match. And let's go here into our recognizer library. We'll go up to the Kelly Selment indicator, and you can see that is what we're looking for, was that pattern right there. We come back in here, and let's take a look at some of these bars, okay? So we'll start back here, and we'll kind of move forward. We'll click on one of those, and look at that, just dialed in. Again, the more events that you have on the chart, we feel the more accurate it can be. Okay, look at that. You can come in here, we can say, let's look at a 30 bar. And you can go, out all the way here and see what's going on. Now, again, if you're really interested in where you think the pattern's going, currently, you can always look at the forecast cloud. Right now, it feels that it's very bullish on Microsoft based on this pattern that we created. And then you can come in here, you can even look at a 90 bar. Let's look at our most recent event right there. This is where it thinks it's going in the next 90 days. This is where it thinks it's going in the next 180 days. Oh, sorry, this is not Microsoft. Okay, E-mini, I was clear about that. Again, we're looking at the E-mini. Okay, so that's where they think that's going to go there. Okay, so now we're looking here at JP Morgan, okay? Let's just do a highest profit potential. And I am going to show you something it really is mind-blowing. There's no other software in the world that can do this, right? We have over 3,000 people registered. We have people all over the world. I'm about to blow your mind, okay? Now, if you have a pattern on a chart, when you say to yourself, hey, that's exactly what I love. This is exactly the trade setup that I want. These 5 bars, if I could get a pattern of those 5 bars, I would be so happy because then I could have these events. So we can do that for you. We can actually create this so easily for you. It's unbelievable. We come up here to user defined pattern select. We click on that. Again, this is only available in MetaStock 19. You need to upgrade or try this out. So we come in here and you look, hey, I love these. Well, no. Okay, good. I want to select these bars right there. That is my trade up. 4 or 5 bars that are trending upwards. I'm going to capture that, yes. And then look what happens. It automatically draws the pattern for you in the software. It automatically programs it in the software like that. Are you kidding me? Show me another software that can just highlight bars and automatically create the pattern for you. It doesn't exist. So right here, we're going to name this Gibby Palooza. Oh my goodness. Gibby Palooza. Here we go. We're going to click save. We're going to scan only the Gibby Palooza on JP Morgan. Okay, rescan selected analyses. And let's see if we get any hits on this. We do. It says, hey, look, the Gibby Palooza, there were 68 times that it hit on JP Morgan. Okay. So we come in here and we say, let's look at some of these historically, right? You can just click on these event markers and it will show you. And these event marker clouds, again, are static images and they will never change. Whereas if we go into the forecast cloud, again, every time I get a daily bar, it will update. If I was looking at 10-minute bars, it would update every time I got a 10-minute bar. But it just shows you here the Gibby Palooza right there. Down here, it tells you all the statistics of the Gibby Palooza indicator that is on that. Hey, Jeff can't interrupt me yet, but maybe I'll create an add-on and we'll name it the Gibby Palooza. We'll make millions on it. Anyway, as you can tell, I love doing this. I love showing off MetaStock to our prospects, to our users. I get really excited about it. It's so much fun. Okay, what's something else that we can do in here that no one else in the world can do? So if we go up here to draw a new pattern and we name it, since it was Jeff's birthday last week, let's name this the Gibby 50th. Oh, ouch, that's gonna hurt. And what we're gonna do is we're gonna have a decline of our health. But I got to tell you, Jeff's health is not declining. That guy, he is going to the gym every day at like 4 in the morning. So we should probably do an incline there. But we'll just, oh, wait, you want to do an incline? Look, we can invert the pattern just like that. Come on, guys. This is amazing. Unbelievable. We can do this for the default cloud, like we can do it for 30 bars, 90, or 180. We can click save. So we'll do that. And we're going to actually scan this on JP Morgan. And let's rescan the Gibby 50th, because again, he's getting healthier. Oh, look at this. We have actually quite a few. We have happened 36 times. And remember, I drew it by hand with my mouse for that pattern. 89% match, 82% match, and it just keeps going. 89% match, 92% match. So let's see where these kind of go, you know. We'll click on that. Oh, let's go. The Gibby 50th read that perfect, right? It went from about, let's see here, 185, you know, and it's touching up here to 195 in that less than 30 days. And the Gibby 50th, it called it. It called it out. I'm telling you. Let's look at a 90 bar and see where that's going. Okay. That is just so awesome. Now, another thing that you can do inside with the forecaster is you can actually go to our explorations, okay? And you can come in here. This first screen here shows all of our systems that are available for you to scan the market. Well, there's a bunch of them in here that have forecaster, and these are looking for forecaster opportunities. So you can come in here and say, hey, I'm interested in the forecaster moving average 50 cross up. Let's get rid of that performance daily. Now inside our Explorer, you can actually select multiple explorations for them to look at, okay? Let's come in here and we'll select our, let's come in here and select, how about we'll look at the NASDAQ 100 and see if any of those have the forecaster moving average 50 cross up event that's just happened. So we're going to scan the market, the NASDAQ 100, and we're going to check real quick to see if something happened. Now, I'm a huge fan of what Price Headley said right before me. Look, I don't care if I get a hit or not on this. I'm looking for quality trades, not trading activity. I thought that was very well put by Price Headley. So on this, we found one, PECAR, and we can come in here and double click on that. And we can bring a chart up of this. Now, what's super cool inside of MetaStock, you can just right click and you can say forecaster, and it will automatically open up any stock you have in MetaStock, and it will show you exactly what's going on. It scanned it for Gibby 50th because that was the last thing that we had. But we could easily come in here and say, hey, look, we were looking at the moving average 50, and it would show us that event marker that just occurred. So again, you can scan for opportunities, you know, based on it. And that is, you know, just an amazing tool of technology that we have. Now, if you try out MetaStock, I mean, I just showed you something really small that's available inside of MetaStock, but is such a big tool. MetaStock, you can backtest, scan the markets, forecaster, option scope, quote center. You can create your own indicators. If you have trading ideas, we can help you put those inside of MetaStock, okay? So let's go back now here into the PowerPoint. Well, let's go down here. Okay. So how much does it cost, right? If you want to do real time, oh my goodness, there's my first error. It's MetaStock 19. That's how new MetaStock 19 is, right? MetaStock 19, I didn't even get these slides updated. It's $265 a month. That includes your Zenith real-time and your MetaStock software. Okay. If you're an end-of-day user, it's only $69 a month. That includes data link, end-of-day, market data, and MetaStock. Everything I have done today, either one of these, it will work in. One is just in real time, and one is on a daily chart. Okay. So we have an amazing offer right now, a 3-month trial. Come on, are you kidding me? You just spent an hour with me. There's thousands of you out there throughout the world looking at this. 3-month trial, buy 1 month, get 2 free. It will include MetaStock 19, the data region of your choice, and our support team will actually call you and let you know, hey, what can we do to help? Oh, you looked at the forecaster, you don't understand it that well? Well, we're going to help you do that. Then we give you a $100 book value of videos, Unleash the Power of MetaStock. How do I sign up? You call in at 1-800-882-3040. Call in at 1-800-882-3040. You can get on the sales chat right there. Super easy. Or you can go to the landing page that we have, right? Any one of those will help you get set up. Come on, buy 1 month, get 2 free. It does not get better than that. As you can tell, I'm super excited about this. I love MetaStock. I love our customers. I love presenting it because we provide great value. So with that, I want to say thank you for coming. I know you are jumping up and down in your living room right now, eating some breakfast or lunch, running around saying, yes. Anyway, that's all I have for you. Thanks for listening. Jeff, do we have any questions or anything you want to add?
We don't have any questions. If you have any questions for Scott, type them out real quick. I like the fact that I can know how many times you demoed the forecaster at a conference by counting my name in the pattern.
I love it.
All right.
Hey,
Great job, Scott.
The Gibby Palooza and the Gibby 50th. Come on. That's pretty ingenious, right?
Yeah. I was only hoping when you ran the rescan on it that it would come up 50 times instead of 30.
Oh, that would have been awesome. That would have been absolutely awesome.
Very cool. I am going to eject you.
Thank you, Jeff.
You bet. All right, let's do this. There we go. Okay. Oh, let me make some more other changes here as well. Oh, I was going to have Scott help me. Oh, too bad. Greg, if you're around, I'll have you help me as well. But let me kind of go in here and just kind of reiterate. I'll come back to it just a second. I do have the new box arts here. MetaStock, we have 2 different versions. We have the real-time version that is $265. Not only does that include everything that Scott was talking about in MetaStock, it includes an institutional quality data feed that's supported by 3,000 journalists and 300 different news bureaus. They spent over $1 billion designing it. And we're going to show that to you on Friday. So we have actually a little bit of a demo that'll walk you through that. But it's literally with this package, you get a news package that's a competitor to Bloomberg, which is $1,900 a month. So $265, that includes that news package, MetaStock, the data, the news that you need to use it. You might pay some exchange fees if you want to get real time, but the base price is going to be like $265. And those exchange fees aren't very much. Like New York Stock Exchange, I think the current rate is about $4 or whatever if you want real time instead of delayed data. Those are just fees that they charge. We also have an end-of-day version. It doesn't come with that $1 billion product, but it does come with everything we've showed you: the forecaster, the scanner, the tester, all of that kind of stuff's included. Is $69 per month. The special that we're going to do, if you're interested in just trying it, if you try any product, we'll just give you a trial. We want you to try out the software. So many of our customers have been with us for decades. I'm not kidding. So if you try it, if it's worthwhile for you, great. What we're going to do as an offer, if you just want to try MetaStock, is if you buy a month, we're going to give you the second and the third month for free. So for DC, a little bit of math off the top of my head, $23 a month, paid $69, just to be clear. And that'll get you running until August, late August. So as part of that, you'll get MetaStock 19, you'll get the data that you need, you'll get a white glove installation support call where they'll call you and help you and make sure, walk you through everything. You'll get unlimited access to our support. You'll get the Unleash Your Power MetaStock course. It's going to talk you about the forecaster, about the Armo, about how to scan, about like all of the tools. Because a tool is as good as your knowledge, right? If you don't know how to use a screwdriver, it's not going to work well for you. We want to make sure it's working for you because we want you to be our next subscriber that we're talking about, that's been with us for decades, that pays every month, that loves the software. So you can give us a call if you have any questions, if you want to sign up for that. 800-882-3040. You can go to metastock.com/saleschat, or you can visit us online at metastock.com/conf-promo. So in any case, yeah, that's a little bit about us. I'm going to talk a little bit about another one of our sponsors, Stocks and Commodities Magazine. Stocks and Commodities Magazine. I remember I called them up and I was like, hey, we're going to do this thing where we're going to get like 8 traders together. We're going to do like a full day event, and it's going to be cool. We'll do it for free. We'll bring everybody in. We'll talk about trading strategies. We want you to support it. It's all around technical analysis. And they agreed immediately. And that was 13 years ago. They've been supporting us at the event ever since. If you're interested in finding out about Stocks and Commodities Magazine, go to www.traders.com, and you can do that there. Okay. As part of your subscription, you can join their subscription ranks. They've been publishing magazines since 1982. 17,000 articles available on their website if you're a subscriber, and just a wealth of information. So big thanks to Stocks and Commodities Magazine. They've been a huge partner and a huge supporter of our summit for, I guess we're 13 or 14 years in now. So it's been a few minutes. So our next presenter, I talked in my talk Monday, I talked about how lucky I was to work with traders that know a lot more than me, that are very, very good at what they do. The presenter that we're going to bring on right now has taught me a lot of things that I've used in my trading, like I love the way that he likes to look at trend and the slope of the moving averages. I like how he likes to look at support and resistance. And to be completely frank about it, I'm a better trader because I know Vince Vora. So this is our next speaker. Let me go ahead and bring him on here. How are you doing today, Vince?
Hi, Jeff. Can you hear me?
I can hear you. I can hear you now.
Yeah.
Are you traveling this
Great.
week?
I need to warn you, just about 20 minutes ago. Yes, I'm actually in Lisbon.
Okay.
On vacation, and I'm staying at a very nice hotel, but about 20 minutes ago, we started having technical issues, connection issues. So as you were speaking here, bringing me on, it kept cutting in and out. So I don't know how clear the connection is, and if you can stay on standby,
I'll be right here
and just listen in, because it may freeze up at some point, but I'm going to try to. Okay, so I'm not going to open my camera because that's just going to put more strain on it. Let me try to share my screen. Let me know if you can see it.
And I can say for
okay, excellent.
I can say we can see my screen, and I can hear you great. So I'll let you know if that kind of degrades at all. But you're sounding fine right now. I've got my fingers crossed. I'll stay right here at my desk in case I'm needed.
Okay, perfect. Hopefully it stays stable. Thank you very much for having me on. I really appreciate it. It's great to always work with the team at MetaStock. They're awesome, and it's nice to be back. Good afternoon, everyone. I'd like to share with you our brand new, recently launched version 2 of our Victory system. That's the add-on that you're seeing right now on my screen. I will explain everything that is part of this system, along with what we do at Trading Wins for our members. And so hopefully by the end of this, you'll understand why we use our Victory version 2.0 and how hopefully it can help you with your trading. So a bit about myself. I've been in this industry for a very long time, coming up on 4 decades now. I traded professionally for many years, about 11 years, and then went out on my own. But now for the last 10 or 11 years, I've been teaching and working with MetaStock. We've created several add-ons, but this is by far, my favorite and the one that's been best for us. We've created version 1, I believe it was 2019, and using that ever since. And now, just a couple months ago, we introduced, or even less than that now, we introduced version 2. So what is Victory? Victory is based solely on technical analysis, but it is a system that will make sure that you're trading with trend and momentum on your side. With those two items, you're more than half the way there to profitability, and that's the goal here, is to be consistently profitable as a trader. What I will need from you in order to make this work for yourself is 2 things. One is patience and one is discipline. And the reason why I say that is those are the 2 attributes that successful traders have. Patience to wait for the right setup. When you are forcing a trade or trying to actively look for a trade, chances are you are not going to take a very high probability trade. But when you find a setup that works more often than not, and you patiently wait for that setup, and there's plenty of them. When I say patience, you may be waiting a day or 2, but there'll be plenty of setups. And then what you need is the discipline to manage that trade the way it should be managed. Now, we will teach you both what the setup is, the rules around setup, and we will teach you how to manage that trade once you're in it. And a lot of it has been already taken care of by the actual MetaStock add-on. The way this was designed by the team at MetaStock really helps. For example, when you get a long trade, you'll notice that all the bars are painted green, right? For the life of that trade. That's to help you remain disciplined. Normally you get in, see a couple of green bars go your way, you're all happy, all excited, everything's fine. But as soon as you get 1 or 2 red bars, you start to question whether or not you should remain in that trade, and a lot of times get scared out of it early. That problem is solved by the add-on itself. So there's a lot of little things like that MetaStock has done with this to really make it not only easy to use, but really effective. Effectively help you manage that trade. So let's get into Victory now. Since I'm traveling, I'm only dealing with 1 screen. So the questions box I don't have opened here unless I click the button and open it. So every once in a while, I'll try to do that. But Jeff, if you're listening and there are questions that you think need answered along the way, just jump in and interrupt me, please.
Will do.
Also, great, thank you. And also with symbols, if anyone wants to look at a particular chart, type in your symbol and Jeff can interrupt me and we'll look at that. Let me explain what exactly you're looking at. So on here, there are arrows, and there's actually 2 types of arrows: the smaller, lighter green and red arrows, and then the thicker, darker green and red arrows. There are these little TP symbols. There are dots, like this green circle here. And if you're over any of them, it will tell you what it is, okay? But I'll explain it to you to start. So the arrows, green obviously signifies a long trade, a red, a short trade. Now, the difference is a smaller, lighter color arrows are what we had in version 1, which is There's just two pieces of criteria in the algorithm here that tells us when those two items align, we have a very high probability chance of making money on that trade. But what we've done now in version 2 is we've added two other layers of criteria onto that. So when you see the thicker, greener areas and you hover over it and you see, for example, HPB, that's high probability buy. The smaller ones, if I hover over it, it'll just say long, and the shorts will say short. But if they are now matching those other two levels of criteria, you'll see HPB or HPS, high probability buy or high probability sell. That gives you an extra level of comfort that this is going to give you a much better chance to profit. Now, this is totally customizable. For example, if you'd rather only look at high probability ones and not the original ones, you can go into the settings and remove the ones you don't want, etc. TP here, you can see is long take profit. Now, doesn't mean you exit the trade here, but if you get in here, for example, what we're highlighting is just some profit targets along the way that you might want to consider scaling out at. So for example, say you bought 1,000 shares here, you might want to scale out of 300 here, maybe scale out of another 300 here. If you were to get another setup along the way while you're still in that trade, I personally would add back the third I took off here or here, right? And keep going until you get a change in color. Now, when you get a change in color, you may just go directly to a short or a high probability sell, or you might see the exit flag. Regardless, if the bars change color, you may also see a yellow bar. A yellow bar means you shouldn't be long, you shouldn't be short, you should just be on the sidelines for this particular stock or market. Any change in color means you exit the full position, okay? Take profit is just to scale a portion, and that's personal preference if you want to do that, or hold it. Changing color is mandatory. You need to exit that position completely. Now, what you may find many times is that, you know, a day or two later, they might just get you right back in, okay? And that's fine. If that happens, you know, you follow the rules, which I'm going to give you shortly, and you enter right back in. These days, commissions are very, you know, a very small part of your trading and have become very insignificant with most brokers. So not something you really have to worry about these days. But the reason why the system is as good as it is because whenever a position starts to go against you, it will get you out very quickly. So regardless of whatever strategy you use to trade with, the one main thing that separates successful traders from the unsuccessful traders are the ones that make sure that they keep their losses small. In other words, they get very quickly, the ones that start going against them, okay? That is a key, and that is one thing that victory will do for you. The second it starts to go against you, it will have you exit that position, ensuring that you have a very small loss, if any, okay? Now, the dots like this one, for example, if I hover over it here, and you can see it says long Armo. It's because we were already in a trade. So we get the trade set up. That means all the criteria or the indicators in the algorithm have all aligned, and it's telling us we have a pretty good chance of making money on this trade. So we get in. If that same algorithm comes together again, meaning the same formula that calculated a high probability buy setup here has come together again here. except we're already in the trade. So rather than put another arrow, we're just letting you know that, yeah, it's come together again. It's telling us it's fine to stay in that trade or add to it if we like, or, you know, if we missed the first one, we can get in now, okay? And then, of course, changing color, we're out of there, all right? So you have your longs, you have your shorts, you have your regular longs and shorts and your high probability ones. You have your take profits. And then we have two other pieces to this add-on. One is this blue line that if I hover over it, you'll see the 20-period simple moving average. Okay. The reason why we use this is it is a great tool to use to judge the amount of momentum behind a trade. And what is important about this moving average is that it is the direction in which it's sloping. So if you're looking at taking a long trade, you want to ensure that this 20-period moving average is sloping in an upward direction, in the direction of the trade, okay? And the more significant the slope, the better. You know, the higher it's sloping, the more momentum there is behind that trade, and the higher the probability you have of making money on that trade. The flip side is true when you're talking about a short. You want that 20 to be sloping lower in the direction of your trade. And again, the higher the slope degree, the better. Okay. And lastly, you have down here, you actually have two ribbons. As you'll notice, it says weekly and monthly. Okay. The reason why the top one is blank is we are on the weekly time frame. So it's not going to show you what you can already see on your chart. In this case, it'll show you the monthly. If I drop down to a daily, for example, you'll notice that the weekly and the monthly are now both populated. So what this is doing is trying to help you confirm that the two higher time frames compared to the time frame that you are trading with are in line with what you're seeing on that time frame that you're trading on. So I prefer to trade on the daily. And if I get a buy, I want to make sure that these two, the weekly and the monthly, are both green. If I get a short, I want to make sure that they're both red. Okay? The more time frames that are aligned, are pointing in the same direction, the higher the probability of you making money on that trade. So what we're doing with the system overall is just stacking the evidence in our favor. We're stacking the odds in our favor and repeating that over and over again, so that what we end up with is way more winning trades than losing trades. But more importantly, with our winning trades, our wins being much bigger than our losses. Remember, focus here, we keep losses extremely small, while if you have the discipline to follow the rules and follow the system, you allow your winners to run. That is something that is very easy to say, but not very easy to do. But with victory, it becomes a lot easier. Now I'm going to start flipping through charts. Markets again, if there's anything that you want to trade, that you're thinking of trading, that you're just curious about how this system would have worked on, by all means type it in the chat and we'll try to get to those. Okay. Now,
Vince, I have one for you.
Time frames themselves, for example, if I'm looking at something like the S&P 500, which I have here, or the NASDAQ, right, an index for a particular market. And by the way, you can use this on any market, meaning, you know, any exchange around the world, okay? India, Australia, the UK, Canada, US, it doesn't matter. Technical analysis will work on anything. But the time frame matters. I like to start at the highest time frame, at the monthly. That'll give me an idea of what the overall market is doing. So I look at the Dow Jones, the S&P, the NASDAQ, right? The Russell 2000. And I look, and if they're all, all green here, all have an obvious trend and have slope on that 20 pointing higher, then we know we're in a strong uptrend. So what do we do with that information? Well, number one, we can trade the index itself. But number two, when we go down and look at an individual stocks, during a strong bull market, you want to focus on taking long setups rather than short setups. It's always a good idea to have one or two in the opposite direction. And when I give you the rules, the criteria to follow, you're going to make sure that you can check off all those boxes before you actually enter a trade. But by far, you should be in line with the overall market. So kind of a top-down approach. Now, you can start with an index like this, and then you can go down to individual sectors. And these days, there are many ETFs that we can use and trade just like any stock, where we can cover a particular sector of the market. So for example, if we look at XLK, that is the technology sector. Okay, so you bring up a chart of the technology sector, and you have an idea of what that particular sector is doing. Okay, now, and I don't know if you can still hear me. I hope you can. My system is very slow here. That'll give you an idea of whether that sector is bullish or not. And so if it is like XLK is right now, just breaking out again to all fresh new all-time highs, you can then break that down and go look at a list of stocks that make up that sector, right? And start looking for setups from there. And what we've also done, or what MetaStock, the team at MetaStock did, was create a template. So if I right click and apply the template here, let me go find this template. So here we are. So they're in alphabetical order, so all of mine are at the bottom here. But if you look at Vora Market Overview MTF, and I hope this doesn't take too long, but I'm going to click on this. And what this is a one-page view of the main index charts, like the Dow, the S&P, the Nasdaq, and the Russell, along with the main sectors. So as you see here, you have the Dow, S&P, Nasdaq, Russell, and then you have communications, consumer staples, energy, etc. Okay, all the main sectors. Now, this is normally because it's bringing in the data from all of these symbols all at the same time, might take 20 or 30 seconds to load. Right now, I may have to abort this based on my internet connection here today, which is very weak. So I will give it a few more seconds and see if it can load. But what you should see here is these columns here. They will be color coded based on what the victory system is showing on that particular day or on that particular week for each of these symbols. So if you look at the far right here, when it does load here, if say these are all green, it means that every single US index and the sectors that make up those markets are all in a strong uptrend. So whether they're all green or all red, or at least the majority is green or red, you can tell in one glance where we are with the market, what type of market we're in. Okay, now unfortunately, I'm going to abort this. I wish I could have shown you that. But let me try to bring up another symbol here just so we can carry on. Okay, and I'll switch to a chart of market close today. So that has the potential to move the market tomorrow. Here now, Jeff, can you still hear me? Because my chart not.
I can.
I can't seem to bring anything up. Am I still live here?
Yeah, I can.
Okay.
I think probably.
I apologize. Yeah.
You're requesting a lot of data. That layout's still trying to load, and
I'll close this down.
Yeah, if you close out the container around layout 2, it might help. We might just need to help it work through. I'm loading that layout, so I'll show it when you're done.
Let me just close all and try opening again.
Okay.
Yeah.
I will show that layout
Let's try
because
that.
that's cool.
You're cutting out. I can't hear.
I will show that layout.
Sorry, try again.
Yeah.
No.
Okay. All right. Yeah, and video is actually one of the symbols we had a question about. Okay, I think we might have lost Vince, actually. Vince, I can't hear you at all anymore. And if that's the case, I'm actually getting exactly ready for this. So let me just kind of jump in here. We'll see if Vince comes back. I'll give him another couple seconds. But I can kind of show exactly kind of some of the mentality or some of the stuff that we designed around Vora 2. And kind of like what we were thinking and that kind of stuff. So we'll just see if Vince comes back. If not, hello? Yeah, I think it's time. Barbara wants to know how to type in the chat. You just did, Barbara. Exactly where you put that comment. Okay. Let me go ahead. I think I'm going to do this. Fortunately, I was actually a little bit afraid that when Vince actually loaded that template, it might just kind of sync his internet connection because it actually does quite a few things. And so what I'm going to do, I think, is actually kind of just take over the presentation here. I go ahead and make the presenter here. If Vince comes back, we can go ahead and bring him back. I want to explain though what this is doing. Yeah, I hear Vince. If you can hear me, all I hear is once in a while I hear you scattered a little bit. So if we get to a point where we can hear you again, I'm going to send the presentation to you. But since it's kind of breaking down a little bit, and it being a live event, let me just kind of go in. And what I'm going to do is actually show you what Vince was trying to show you. One of the things that Vince likes to look at is kind of how the broad market is doing. And obviously, there's that saying, a rising tide lifts up boat, that kind of stuff. And one of the analysis that Vince does particularly, and that he does very well in what he looks at, use to look at the stocks, is bullish for the Dow, which it is, the Spider, which it is, the Qs, which it is, the Russells, which it is, and you can kind of communications and like the major indexes. This is a view that Vince put together and something that he wanted to be able to do. He wanted to be able to see this dashboard view of the market and be able to see it. And so while we loaded this as a layout, it has the daily, the weekly, and the monthly. You can also apply this at any time frame. So for me, I like to look at daily because intraday, I just don't have the time to trade intraday. But if you trade intraday and you want to be able to see what's going on intraday, this will work on any time frame as long as you have. Well, actually, with some of the larger like quarterly and yearly, you just don't get enough data off of some of these ETFs to kind of give the ribbon. But it'll work on almost any intraday time frame. So if I, as a real-time trader, want to go in and see how the market is doing during the day, I'm just going to change this because this is where it's going to slow down a little bit for us because this is a lot of stuff that is pulling on the internet. But if I wanted to see, it's 11 o'clock, it's 10:30 here, it's noon Eastern, right? 12:30 Eastern. If I want to see kind of like what's moving today, I can put this on a 30 minutes. And it's going to load. It does take a minute to load because it has to go figure this out for the Dow, the S&P, the Qs, the Russell, and all of the industry groups as well. So that's kind of why as soon as he tried to open that chart, he was open up all of those time frames on a kind of a limited internet connection, and it just didn't work very well. But you can see here we tested it in the office with our internet connection, and I'd say that generally, like with the internet connection we have in the office, this takes about 45 seconds to actually load. But you're just pulling a lot of data because I just pulled it off for the 30. You saw how long it takes to load. It'll be a little bit faster if you have the same internet connection because I'm also broadcasting video. Half the office is probably watching the YouTube right now. So, that kind of stuff will work, but you can use this on any time frame and what it is designed to tell you. If I'm looking at it today, I'd say that the Dow right now is bearish, but the S&P is bullish and the Q is bullish. The Russell is bearish, and you get a good idea of what's going on. Conversely, like if I had it on that initial view, I love the way that it kind of puts that together. So I'm not really prepared to do a victory review, but I can talk about victory a lot. So let me go in here. Let's see, we've got 10:28. I'm just kind of taking an assessment. We're going to do an on-the-fly demo here. No practice, nothing. But I want to kind of, what I'll do is start it from a top-down approach and kind of show you how you can use these to identify trends. Okay. B wants to know how many days does it take to make it green? How many weeks does it take it to make it green, etc.? So that's a pretty good question. A lot of what it's looking at is the slope of the 20-period moving average. And I don't know that there's a set number of days for that. It just depends on how fast that market is moving, if that makes sense. It's a lot more tied to the slope of the trend than I'd say how many days it's going to take. Okay, so there you go. Good question, Bye. I do a similar overview of market sector stocks, but I color code a little finer based on the slopes of prices. So that's very similar to what we're doing, Michael, and I love it. So very cool. Let me go ahead and just show you kind of a little bit about how this works. We're going to do my best. I'm no replacement for Vince, but sometimes you just kind of play with it a little bit. With victory, I'm going to go ahead and come into the scanner right here, and I'm going to kind of show you the work we did around both Victory 1 and Victory 2 and kind of the improvements that we've used. I know a lot of you use Victory because it's been a very, very popular add-on. So I kind of want to show kind of the mentality of that, what we're using, kind of how you can use it and that kind of stuff. But I think the way that I'll do this right off the fly is from a top down. Let's run a scan. Let's see what's out there today. And then I'll try and kind of do my best to impersonate Vince, although I won't have the swagger, I'm sure. Okay, so I'm going to come here to the scanner. What I'm going to do is I'm going to go ahead and type in victory. Okay, because that'll pull up all of the victory stuff that we've got. Okay, and I'm going to go ahead and just make this a little bit bigger and just kind of talk to you about what the scans are looking for. So our original scan and our broadest scan is going to be called the Vora victory scan. Okay, this will look for anything that has a new long opportunity or a new short opportunity. Vince and I did a lot of work trying to figure out kind of how you measure the trend, and we came up with like an indicator that we called slope, and it just basically looks to kind of, it's a rise run calculation. It looks to kind of tell you how fast something is moving, because one of the things Vince teaches about in his class is he likes to find stocks that are very well in an established trend. Okay, so that's just Vince Vora. There's also a filtered one. This one's going to look for not only one of the things that Vince talks a lot about is finding the opportunities, but also having them have an appropriate trend, or what we call a slope when we talk about victory. And so with this one, it's going to look for those buy signals that we were looking at before. And what it's going to do is it's going to give us those that have a new long, a new short. It's also going to show us the slope calculation. And it's going to filter out any stocks that are between, on our slope calculation, -5 and +5. So if it's a long signal, it'll have to have a slope of greater than 5. And if it's a short signal, it'll have a slope of less than 5. Okay, so we want it to be moving. The more that it's moving, the better. Okay, some of the other scans that we added the high probability scan as part of this one. The high probability scan, we added Vince. I say we. Vince added some criteria that kind of just look for kind of more high probability entry signals. Okay, and then we have some re-enters. I'll kind of explain those as kind of what they look like on a chart. The re-enters are if you're in a position that's already triggered a long position. If it goes up a little bit and then comes back and fits a specific criteria for us to get back in, It's called a re-enter trade, and that's shown up on the chart. And Vince showed that, but I'll show it again. Okay, so let's run a scan. The scan that I want to do is going to be the Vora victory filtered. Okay, and just like any other scan in MetaStock, I can run it against any market I want. I can run it against India. I can run it against Europe. I can run it against North America, right? There's a list in here. There's all kinds of lists. Like if I come into the North American list, and let's say I'm an option trader, and I can scan all of the 5,600 optionable stocks just by putting a check mark here. Okay, very, very easy to do. Okay, if what I'm going to do though is instead of kind of doing 5,600, I'm going to do Dow Industrials. I've got that checked already. I've got the S&P 500 and the NASDAQ 100. Those are already checked. This scan is ready to run. I'm going to go ahead and run it. Let's run it. Hope you're having fun. This is what we do when there's a problem. We just wing it. Let's see. Wow, that runs. Okay, so now this is going through 519 stocks. Okay, it's eliminating anything that doesn't have an option, and it's focusing on the ones that have an opportunity to go long today or short today, and that have a slope. In other words, they're in the trend that we want within that +5, -5. So the idea here, and the reason I like this so much, is it allows me to focus on what's the opportunity. Because if in case Scott's listening or Kelly, work very hard at work, and I don't want to be able to just focus on those stocks that have an opportunity, and that's why I love scanning so much. I don't have time to look at 520 stocks. That's insane. I just want to focus on the two in this case that have an opportunity, right? If I kind of focus in on this, there's only two in that list. We have Enphase Energy that's giving us a signal right now. And not a recommendation to buy or sell. We're not recommending this. I just hope to help you understand it a little bit. But if I have a new long, and then the slope is going to be greater than 5. And generally, I'd say the slope values, there's not a theoretical maximum in terms of where they could go to. I think the most I've ever seen one is at 20, but 5 is the minimum. So to give you an idea, it's just barely sloping up enough for us to kind of trigger that trade. Okay. Our sell condition that we'd have, the short is AON, and it has a slope of -7. Okay, let's look at the Eon Phase Energy. I'll go ahead and open this up to the chart, and then I'll apply the template. So I'm going to go ahead and open up the chart. It's going to open up right here. I'll go ahead and make this full screen for you. And then I'm going to apply, this is Wendy Kirkland's template because I was showing Wendy Kirkland stuff yesterday. But what I'm going to do here is I'm going to go in and apply the Vora Victory template. Okay. Now, since we did a scan on a daily basis, I'm just going to do the Vora Victory scan. There's a couple templates in here, like if you're doing intraday, it's going to show there's a couple of options for intraday that you can use as well. And that's important to understand. So let's go down here to Vora Victory. I'm going to go ahead and click on Apply here, and I'll just load in the Vora Victory signals for this and do my best to channel my inner Vince. So here we come. Yes, sir.
I should point out, you keep on making it sound like you're not particularly prepared for this, but I would say next to Vince, you're probably the single most authoritative on Victory 2. And didn't you help program this software?
Oh, yes, for sure. Yeah. So I'm pretty comfortable. Vince would always be my preference for showing Vince's system.
We'll stop with the false modesty.
So, in any case.
and
what happened to my chart?
Oh,
there it is. Okay. So now, just to kind of talk a little bit about this and kind of the way we would read this chart. Something's off. Okay, there we go. All right. Now, if I'm looking at this chart, I can tell you that it's not one that would, even though it met the criteria, it's not one that would have Vince's blessing. One of the things Vince wants to look at is he wants to look at kind of this monthly trend ribbon. So what this is looking at, if we're kind of just looking at this, if you're looking at the monthly, this is telling us if we opened up Enphase on a monthly basis, it would be red. In other words, it would be in a short signal. That's a no-go for us, okay? So in addition to that, it's bearish weekly. So we might be triggering into a long position here on Enphase, but based on kind of the higher time frames, wanting weekly and monthly to match. we would kind of go ahead and skip this. Okay. In particular, in this chart, one of the lessons that I learned with Vince, and he talks about this in the boot camp that's included and all the time, is if there's all of these areas of resistance above us, this isn't a chart that we want to look at, right? What we want to be able to do, and this is probably why we're just barely qualifying with that slope average. But what we want to be able to do is we want to identify stocks that are actually in a good trend. If I look at this chart, it's not in a good trend. It barely qualified because it's maybe setting a little bit of a new, but it's still channel based. So for this particular stock, I wouldn't trade it. However, let's say that it was kind of maybe setting a new all-time high. Those are the types of stocks that Vince really likes to look at. In that particular case, we'd probably both be weekly bullish and monthly bullish as well. So with this particular one, it's not something that we're interested in, but there was a symbol that somebody had mentioned earlier, and we can look at this with NVIDIA, which has been a particular one. Barbara wanted me to look at this with DT. So let me go ahead and do that. And that's the whole point of scanning. If that's the best that the market has to offer, I'll go have some coffee and do some other work, right? And of course, you could scan more. I'm sure if I scanned a whole universe, I'd be able to find maybe some better opportunities. Let's go ahead and look at DT, though, because Barbara is asking about DT. I'm going to go ahead and pull this up. And if I'm kind of looking at this, if I'm looking at the slope of the moving average, if I'm looking at kind of the volume, if I'm looking at kind of the weekly and the monthly, this is, again, something that's a pretty easy one to reject. Now, when there is no coloring here, it's kind of in a neutral phase. So in this case, our monthly is a bit neutral. Our weekly has also gone to neutral the last couple of days. I've been waiting for this to kind of establish a trend a little bit more. Let's look at a stock that has been trending and something that Vince was showing a little bit earlier. So I'm going to go ahead and pop open NVIDIA. Let's go ahead and open that up. I do love this watermark here. So I'm going to go ahead and open. Oh, I did put in too many symbols or dots there, though. Okay. All right. So if we're looking at NVIDIA, there's a little bit of a different scenario here, right? So here's kind of a chart that maybe you'd be interested in as opposed to one that you're not interested in, right? If we're looking at this, this has been bullish weekly for quite some time. It's been bullish monthly for quite some time. We did have an entry signal that formed right here. And if I was kind of looking at that right there, I probably, just knowing myself and kind of some of the things that I've learned from Vince, I'd probably be waiting on this one until it kind of got up above this price point, okay? Because once we get into an area that we're starting to set all-time highs, the way Vince likes to talk about that is once we're in an area that has new all-time highs, there's no more resistance above us. There's not what he calls a mess. He talked a lot about it during the boot camp class that we recorded a couple weeks ago. We're not looking like when there's a lot of trading, there's a little bit of trading up here. It creates resistance. People have bought there, they've sold there. If people bought there and the price came back, they might be looking to exit as soon as they get back to break even. I hope you don't do that in your own trading. But in this particular case, if it's something that happens here, I'd probably wait until we get another signal to go in. Now, if I'm looking at it back here, though, let me go ahead and kind of come in here a little bit. And the thing that I've learned a lot of these lessons from Vince, the boot camps that he does, the market sessions that he does, all that kind of stuff, right? So if I'm looking at it right here, if I had ran this scan back, what day was this? In January 5th, we would have had that long signal. We would have been bullish weekly. We would have been bullish monthly. This is something that I'd really be looking to buy. And if I was making a decision on when to buy it, I'd be waiting for a trigger to come up above this recent high. Okay. Once it did that, I believe at that point that that's a new all-time high for NVIDIA. And those are the type of, yeah, and it is. Those are the type of opportunities that Vince really likes. So once it comes above that high level, that'd be a great time to buy it. Okay. And it's just one day later. You're not waiting a whole bunch of time. And let me show you kind of the commentary that we created for that. Okay. I'm going to go to view. I'm going to go to expert commentary here. And when I do that, it's going to tell me unavailable. Let me go ahead and hit refresh. Let me log this onto the chart. And let me let it load. Interesting. Well, I did just barely install this. Okay, cool. As I was, it came in for me. Let me go ahead and move this. So again, if I ran a scan, found NVIDIA, I really like kind of the advice. I talked about the commentary with price when we were kind of talking about prices system. And I kind of want to show how this works with it too. So right here, we had the buy setup. Here's kind of where we get the advice. At that point, our slope was 4.38. I wonder what it was the next day, 6.53. So here we went from non-qualifying to qualifying for the trade. I would have been waiting for that entry. Okay, but on the day of the entry, if it's getting us into a trade, it's going to give us a lot of advice that Vince put together. So let me kind of go in here. Here it's giving us a slope indicator value. That slope is a look back. Basically, it's a rise run calculation. The slope is calculated based on this 20 SMA. Okay. The Vora slope indicator is designed to measure the slope of the 20-period simple moving average. Positive numbers indicate a positive trend, and negative numbers indicate a negative. I'll do my best to stock negative trend. As a rule of thumb, +5 minus. I've already talked about that, right? But if you're interested in buying this, here's kind of what you could look at. You could look at buying the stock outright. If you're looking at options, you could look 2 to 3 months before expiration. These typically last from a few days to 4 to 6 weeks. Okay. If you're aggressive, you can look 2 to 3 strikes out of the money. Here's a delta you can look for. If you're conservative, you can look at 1 to 2. Here's a delta that you can look at. If you go long, here's where you should get out. Okay. Hold position until the indicator identifies an exit point, or exit the position at least 2 weeks before the expiration date so you don't get killed by theta. I don't think it said killed by theta. Or 3, actually there's only 2. Okay. 3 though, look to exit this position if it closes below your stop level of 484.95. Yes, that value will update every day. So if you kind of come in here in a few weeks, that'll be a different value, 490.59. Okay, and so that's how it kind of is designed to kind of help you. I love this particular methodology because of the simplicity. With the simplicity of how it's put together, it's very, very straightforward. And I think people have really liked it as well, particularly kind of the way that it's put together. So B has a question. Sorry if I've missed anything. Michael says, hey, Mr. Voracious, sorry. It's just me. For the next version of Vora, consider adding finer colors for when the slope is increasing in slope and positive. And then that's a good suggestion, Michael. I'm going to send that to the whole chat. I really do like that as a suggestion. So thank you. One of the things we were like is like, okay, I think people really like this because it's simple. How do we make it easier? How do we make it even easier? And so we kind of came up with the idea of adding kind of the ribbons for the daily and the weekly, the market indicators. The other things that we've added, if you've been using Victory for a while, like me, is what Vince was showing you. If you're up in an uptrend, you're going to have these take profit suggestions. Now, you don't have to get out of a trade there, but you did have to get out there the next day, right? The day after you'd be buying in because of this. And then just as you kind of get up there in trend, those are take profit notifications. You can exit partially, you can exit all the way, or you can just wait for the signal to come in, depending on kind of what you want. There's also another signal. You'll notice this signal right here is long. If I highlight over this signal, it says HPB. If you notice, if you look real closely, this signal is bigger and this signal is smaller. Okay, so the high probability buy signals we've added is number 2. It adds some additional criteria that the Vince wanted to put in there to just say, hey, we think this is one of the highest probability buys that you can have. So that's another thing that was added. B wants to know the green, red, and monthly bars are determined by price above the below the 20 moving average. Not exactly. The 20 moving, thank you for that question, B. I'm going to send it to chat so everybody can read it. That's not exactly what we're looking at. The 20 moving average does play into that quite a bit, but you'll notice that based on kind of the position or the bullishness or bearishness of Victory, it's either going to be green when it's bullish or red when it's bearish. What that is looking at is it's looking at the weekly and monthly version of those charts and telling us if Vora would be bullish or bearish or neutral on those timeframes. That's what it's looking at. That's the same with this broad market template. If I go, oh, did I close it? I might have closed the broad market template on accident, but it was just looking at the Dow and saying, is it bullish or bearish on the Dow, the S&P, the Russell, all of that kind of stuff. Good question. So, all right, I'm just making sure I'm caught up on the questions. All right, I want to kind of go through exactly what we changed a little bit. We do have some recent webinars that we've done with Vince, and if you are interested in kind of learning more about those, the system, I'd recommend you go through with them because I think he does a bit of a better job talking about it. Although it's been a lot of fun. I might be the second best person. I'll give Greg that. So just to kind of talk a little bit about where our head was when we were kind of designing this out. We released this in 2019. Towards the end of 2019. It was our best-selling add-on in the year of 2020. It's been a very, very popular one. And as a result, like we were kind of trying to think of, people really liked it. It has the detailed commentary breakdowns, the expert alerts. You can actually get an email alert if one of the buy signals goes off on a chart that's open, as long as you get it set up in MetaStock. It's got full market scanning. You can look for triggers. You can look at re-entries. And so what we wanted to do is we wanted to keep the simplicity of it. It's a very, very straightforward process that kind of does a lot of the analysis for you. So what we added just some things to help you with the high probability setups, the suggestions that maybe you should take some profit at different points during a big upward trend like we had on NVIDIA. The multiple time frame views. So like if you're looking at a daily, it's going to look at the weekly and the monthly. If you're looking at a 5-minute, it's going to look at the hourly and I think the 60-minute. If you're looking at a 30, it's going to look at the 60-minute and the daily. I believe that's right. But it's going to kind of go in and kind of do that multiple time frame analysis that Vince likes so much. The dashboard is kind of like what I showed you at the very front. It's what took Vince out of the call, but it does help you decide kind of like see what's going on. I would recommend that you open it up when you have great internet. And actually, no, it'll work most of the time. If it does, that broad market view, you're probably pulling 12 different instruments, all the history on them for 3 different time frames. So you're pulling 36 indicator data. So in fact, when we were launching it, we're like, should we do all of the time frames? And we'd sit there and I'd start my stopwatch. I'd be like, how long does it take? Okay. All right. How long does it take with 2 time frames? Go. and what we ended up finding, it was under a minute to get all 3 time frames. And we figured that was acceptable. So that's kind of why we did a 3 template version of it. So it's got the market explorations. It'll help you find the setups. The expert advisors, the system tests. Obviously, system testing is a huge part of MetaStock. It'll do that for you as well. And here's the view of the multiple markets. You can apply this to any time frame, like I showed you, with the hourly, the daily, all that kind of stuff. We already talked about what it looks like. We did a scan. The new things that we added: take profits, high probability bias, and then multiple time frame analysis. We tried to kind of streamline that. When we talked about it, when Victory 1 was around, we'd say, okay, start on a monthly. How does it look? Go to a weekly. Now you can kind of just eyeball it and you get that dashboard view that kind of helps you understand where it is, how long it's been bullish, how long the trend is established. Very, very cool upgrades. Might be repeating myself, but I showed this to in NDC. One of the gentlemen that bought it was like, I was so impressed by this. It's the whole reason I bought the entire add-on. I'm like, oh, well, you're making a good decision. This thing's awesome. And I think that. So in terms of the scan, I showed you the scanning that's included. In terms of the expert advisor, we walk through that. Here's the system tester. Works really, really well. One of the things that we decided to do is also really make you an offer you couldn't refuse. So when we were talking about it, we decided to kind of throw in a couple of Vince's other systems, the winning momentum strategy and the veracity. Those are going to be included as part of the add-on purchase. They're all downloadable. They're installed all at the same time. And those are very, very complete systems. Veracity is awesome. The math that we did for veracity and winning momentum, those are systems those are complete add-ons that we're just going to include for you. So they include experts, they include scans, and I think they include system tests, but I'm not 100% sure on that off the top of my head. The other thing that Vince does, and this is something literally that I subscribe a lot of the MetaStock employees to, because Trading Winds offers a service. If you go up to their website, you can subscribe to this, but it includes daily trading ideas, live weekly sessions, on-demand technical analysis training, option trade ideas, and it's about $97 a month on their site, an $1,164 value. We're going to throw that in as part of the purchase as well. I've been referring to the bootcamp we did a few weeks ago when we launched Victory 2. That's included. As soon as you place your order, it's going to be available. And I'm not exaggerating when I say that some of the best lessons I've learned from Vince, some of the strategies I've used, I've gotten from his boot camps. He does a great job in terms of teaching. I highly recommend it. So all of the stuff that we're going to give you as part of this package, we're going to give you Vora Victory 2. We're going to give you veracity. We're going to give you the winning momentum strategy. We're going to give you a year of that Trading Winds Pro membership. All of that, if I just added up the value of it, would be $56.57. The introductory price is $9.97. At the conference, I'm going to go a little bit better than that, $7.97. I'm still going to back it with a money-back guarantee. So you're going to get the bootcamp class, the Vora Victory, 12 months of that Trading Winds service where you have Skype calls. Actually, I'm not sure he does it on Skype or whatever, but 3 times a week is going to sit down and answer questions. And he's going to send you trade recommendations, and he's going to send you videos. And it's a great service. I actually made Greg a member of it so that he could learn it. You're going to get a 30-day money-back guarantee. If you don't have MetaStock, you're going to get an access to that. And so what we're offering you here is a very low-risk, high-reward type of a scenario. It's going to cost you a little bit of time. If you want to dive into this, I'd recommend you do it. If you do, and it doesn't work for you, and you don't like it, if it's not helping you with your trades, return it. You'll get a refund. But I don't think that's going to happen. So to do this, give us a call at 800-882-3040. Go to metastock.com/saleschat or go to metastock.com/conf promo. And I'm kind of smiling because that was exactly probably the time where I'd want to go. So, do try this out though. Metastock.com. Let me type it in the chat for you. Metastock.com/conf promo. Let me type the number right. 800-882-3040 or www.metastock.com/saleschat. Now, give it a go. We'll even include our award-winning MetaStock software as part of it. So anyway, sorry, Vince, didn't make it, but hopefully that was an adequate substitute. Before we move on, I want to say thank you to CMT Association. I think it's their turn. CMT Association has been a sponsor of MetaStock of our conferences for a few years now. Tyler Wood's great to work with over there. We really like him. He's going to come on later today. He's going to talk to you about how, if you're managing money or if you want to manage money or you want to work for a bank or something like that, how having the CMT initials after your name, my whole monitor shakes because I touched the desk, how having the CMT monitor designation after your name can be helpful for you in that profession. And it's pretty eye-opening. If you're interested, if that sounds like something that you want to pursue, or even if you just want to get cool 3 letters to put out through your name, go to cmtassociation.org. Give them a call at 646-652-3300. So thanks, Michael. All right. Yeah, I actually I do have some pretty good experience with it, and it is a great deal. Also, I forgot to mention, I know a lot of you in the chat room probably have Victory, and you've probably already got Victory too, because it's a pretty cool upgrade. If you haven't yet, and you do have Victory, give us a call, because we will give you 50% off that price. And we'll still include all of the other bonuses. So in any case, let me go one more screen. And I keep threatening this, but I keep kind of forgetting. So, Greg, are you available, and can you give me a hand? Okay. I can hear you. Yeah. It's a little bit soft because I don't want it bleeding into the mic, but I can hear you enough. So I'm going to give away this book, Around the Horn, A Trader's Guide to Consistently Scoring in the Markets. This was put together by Adrian Mance. We sat down with Adrian several years ago and took a lot of his very visual patterns and coded them into MetaStock. But this is a hardcover book. It's $95 and it's free. If
Awesome.
Greg guesses your number. Now, I'm going to talk about how you get on the list. If you're watching in GoToWebinar, you're already on the list. Okay. If you're watching this on YouTube, hi. Make sure you like and subscribe. It helps a great deal. We appreciate it. It helps us. It helps us a great deal. And we do a lot of like classes like this. So if you like and kind of if you're learning something, if you want to get more of it, subscribe to the channel and like. And if you comment, that helps too. So anyway, let's give away this book, Greg. What I need from you is just a number between 1 and 8,541.
8,541. Okay, for just the occasion, I downloaded this little app on my phone, and let me see what it comes up with. Between 0 and 8,541, we're coming up with 3,592.
3,592.
Yep. By the way, Jeff, I'm sorry for interrupting you on your last presentation. I just wanted to point out to folks that it may have not been apparent that you're quite qualified to talk about Vora's Victory too. But of course, I see how you might make, you're not Vince Vora, but you're no slacker. That's all I want to say. No.
Yeah. And I appreciate that. Certainly, I'm probably the second most. I'm no replacement for Vince. I've learned so much from Vince. I appreciate him so much.
I think you did a great job.
Thank you. The Bob Anderson in the USA and with a Gmail account. So Bob Anderson, what I'm going to do is I'm going to put your name on a list. And what I'm going to do is in about sometime next week after Memorial Day, after I kind of do all the post-conference stuff, I'm getting kind of to that, I'm going to drop you an email and I'm going to say, hey, what's a good address? And if you reply to me, I'll send you this book. So there you go. All right. Let me throw my mouse over here. Okay. Also, we are MetaStock. Helps you scan markets, test trading ideas. We just showed you kind of how helpful MetaStock can be. We went through 500 stocks. We found 2. We didn't like one of them. So 31 years in a row. Pricing on MetaStock starts at $69 per month if you're here in the US. That's for our DC version. It can do all that scanning I've shown you, all that expert advisor, all that kind of stuff that we've been talking about is part of the program. So the special that we're offering for you is if you buy a month, we'll give you a second month, we'll give you a third month. That means you'll be running this until August 22nd. You should do it because it's been rated number 1 31 years in a row. If you don't like it, if it doesn't helpful, if you don't like being able to scan the markets and find good trade ideas, you can cancel. There's no ongoing commitment. So, but I will tell you, most of our customers have been with us for, well, not most, lots of our customers have been with us for decades, and we really appreciate those. And we want you to be one of those customers that just won't give up your MetaStock subscription because it's helpful for you. So if you want to sign up, you can go to metastock.com/conf promo. You can give us a call at 800-882-3040, or you can also chat online with us at metastock.com/saleschat. Our next speaker is going to talk about gaps. Melissa Armo is probably as a guest, a contributor on CNBC. She's always in our conferences. We love having her. She has a very, very interesting take on how to trade gaps. And she's going to come up right now because I'm going to get out of the way. How you doing, Melissa?
Hear me?
I can hear you.
Wonderful.
Oh, you're a little soft for me.
Should I put the screen up?
Yeah, I'm going to make you the presenter. I'm going to also plug in my modern headphones because I don't know, your audio is a little weak for me. Sorry, what, Greg?
Can you hear me better now? Keep the mic.
Yeah, you're coming through super soft.
Can you hear me better now?
Yeah, that's a little bit better.
I just moved the mic closer to me.
Oh, yeah. Okay, cool.
That's not loud enough. I can barely hear what she's saying. What I'm hearing is what the rest of the group is hearing.
Is there any way you can get a little bit closer to you, Melissa?
Or is there a way to turn up her volume on the...
No, there isn't.
I am talking right into the microphone. Can you not hear me?
That's gotten better for me.
I'll turn it up as much as I can.
And closer unless I eat it.
That's it. That's it.
Ooh,
Now she's
yeah. Just eat the microphone.
I'll talk loud.
I can hear you when you do. So
Okay,
let me
good.
do this. I think I can see your screen. Yeah, I would just kind of talk, just project as much as you can because it is a little bit soft.
Can you see my screen?
Yeah, I can.
Okay, good.
Cool. All right. I'm going to go ahead and get out of your way, Melissa.
And then I have till what time? What time again?
I'd go 55 minutes. Go to you can go all the way up to right around noon. If you give me 5 minutes to transition to the next guest, that would be great.
Wonderful. It says start broadcast. Do you want me to press that?
No, you don't need to. We're already broadcasting. It was doing that for me yesterday too. So that's odd. But it shouldn't be. We are broadcasting and everybody can hear you.
Okay, welcome everyone. What a beautiful summer day it is. Really feels like it is the start of summer. Memorial Day weekend is coming up. So I am here to talk to you today about trading momentum in gaps. As Jeff said, I appear on TV. Actually, if you're around Memorial Day, if you happen to be lounging around, I will be on Fox News at 4 o'clock on Neil Cavuto's show with Charles Payne talking about the overall stock market, the economy, and where we're going. Today is an exciting day to talk about what I do based on gaps because we have a huge earnings report tonight, which is NVIDIA. I'm sure everyone has heard of NVIDIA. That will be out tonight after 4 o'clock. And again, I don't trade stocks usually into earnings because we don't know what's going to happen. NVIDIA could gap up, NVIDIA could gap down. I don't know what it's going to do, but I will tell you that NVIDIA's earnings will affect the overall market tomorrow, which is Thursday. So welcome everyone. Again, my name is Melissa Armo. I appear on TV. If you'd like more information, you can always email me at melissa@thestockswoosh.com. You can call me at 929-3200-GAP or follow me on Twitter, Facebook, YouTube, or Skype. And again, I try to post my TV hits after the fact on my YouTube page as well. So we're going to talk today about trading. We're going to talk about making money because, of course, that's what we go to work for every single day. And a lot of people right now in this economy are concerned about the future, whether they're already retired and they're feeling like they're getting pinched because of the economy and inflation, or if people are nearing retirement or even working full time, but feeling like things are costing so much. And again, even though interest rates are still very high and inflation is high, the market seems to be screaming higher. I mean, we've made brand new all-time highs in the last week, which is very interesting because you say, well, how could that be? Well, the Fed is expected to lower rates once before the end of the year. I don't know if that's going to happen or not, but I will tell you that I don't think it's going to make much of a difference really on inflation or overall interest rates, because even if interest rates drop by 0.25%, it's not really going to change that much. If you look at mortgage rates right now and many other things, things seem to be costing so much. And I don't think a 0.25% drop is going to do much, but the market thinks that. So again, perception is reality in the market. So all we really care about as active traders, I'm an active day trader. I day trade stocks on margin and I run a live trading room. And I also trade options, but I'm doing short-term options. I'm doing fast options, the weekly. So I'm trading gaps, but it's based on momentum, which I'm going to talk about in a little bit as well. But it's the American dream to become rich, successful, financially independent. The problem is that not everybody has a plan of action to make that happen in the market. You saw in the last 2 weeks, actually, I talked about this on TV last week, which happened with all the Reddit stocks. GME, for example, those stocks seemed like they were going to go up and then all of a sudden totally deflated. You can't just trade things willy-nilly in the market and expect to have a good outcome. It's the consistency that you really need in order to be successful trading. And in order to have that consistency, you have to have a trading strategy that you do and that you use on a regular basis that you can make money every single solitary day, Monday, Tuesday, Wednesday, Thursday, Friday. So again, I trade gaps. I wanted to put in here the stats for 2024 so far year to date. This is the day trade room. I call the trades live in the room. I call it the stop, the entry, and the exit. So far this year for the room, we're at 460,447. This is with an average risk per trade of $3,000 per trade. Most of these trades are shorts, which I'll talk about as well today. I prefer to short. I actually have a niche in shorting. And then I have the stats here for the options newsletter. Again, like I said, I do options. Now I do a mix of calls and puts for options, but I also risk more money for my options because I like to hold overnight. Also, like I said, NVIDIA is out tonight. I may do an option NVIDIA, and NVIDIA is very expensive. So I'm risking an average of $8,000 per trade on my options trades, but you could do one contract. The nice thing about doing options is what people love options is because you don't have to have a margin account to do options. You can open up a cash account and trade options and buy and sell them. We're just getting in, we're buying the calls and selling them. We're buying the puts and selling them. And again, it's all based on the gap. So we're up over 1.2 million for the year so far to date. It's been a good year to trade. Why? There's been a lot of activity. Again, the market has been up, it's been down, it's made new highs, but I try to focus on specific stocks, individual stocks, which again, we're going to talk about some of the trades here as well. Now, when I talk to people, and again, I've been teaching people for a very long time, I think the most important thing, if you're at a point in your trading where you really want to get serious about it, you kind of have to just get to that mental state where you let go of the past, and you just move forward, and then you move forward at all costs. I find after teaching people for as long as I have, like I said, traders tend to hang on to bad trades or stocks that they lost money in, or even negative trades that are down, or things that happen to them that they don't want to let go of and just move forward. You can be successful as a trader, but part of that is just changing what you're doing. Because if you're doing something and you're not making money at all, if you're losing, or if you're making a little bit but not enough, then, or even if you're not making anything, you're basically break even, you're not where you want to be, and you have to change what you're doing. And you obviously then don't have a good enough strategy to be able to do this, whether it's full-time, part-time, or anything at all. And again, that's what's really important. You want to be able to make money. That's the whole reason we do it. But it's really about changing your attitude first. Get yourself in a positive mindset. Then you can make it happen. And again, for as long as I've been teaching people now, which is over 10 years that I've had the company, the stock switch since I started trading, which was 16 years ago, let me tell you, you are stronger than you think. You might have had bad experiences trading. And again, some people did with those Reddit stocks. You might have had bad experiences, but you can get over it. You are stronger than you think. You might feel weak in the moment or when things aren't working out. And again, you may get into that negative mindset, but the sooner you turn it around, the better. And again, it doesn't have to take a million years, a million months, a million weeks to do it. You can change your mindset right away today. And then you can move forward and you can go forward and you can learn something new and do something new today, tomorrow. So what I do, I focus in the morning. Okay. I trade between 9:30 a.m. and 10 a.m. Eastern time. That's the time of the day you'd have to have available to trade with me. I also like to do the fast, quick trades, in and out fast. In fact, we shorted Target today. We got in and out very quick. Okay. So I might be in a trade 5 minutes, 10 minutes, 2 minutes. We were in and out of a trade on Monday in less than 2 minutes. If you're someone that has a passion or interest to learn and trade the stock market, if you want to work from home, and again, if you're someone that is looking for a new career, if you want to do this, this is something that you might want to think about, because again, the nice thing about trading is it has unlimited income potential. And again, you need to learn a set strategy to trade that's successful. And you can open up a trading account and you can be anywhere in the world and trade the US stock market. And like I was saying today, the weather is 85 degrees here in New York. It's absolutely gorgeous. In fact, I just got back from a walk in Central Park. Summer is a great time to trade gaps because you can trade quick and fast. You can get in and out quick by 10 a.m., 10:15 Eastern time, and you can have the rest of the day to yourself. And again, summer is that time where you don't want to be sitting behind a computer for 6.5 hours a day. I don't trade till 4 o'clock. I've never enjoyed doing that. And again, the longer that you're in trades, the more you're at the mercy of what's happening with the market, whether it's Fed announcements or something else that could happen, economic news. If you're in and out in 5 minutes, 10 minutes in trades, you don't have to worry about those things. And again, I'm just looking here. If anybody has any questions, you can plop it in the room as we go by. Is my mic okay? Can everybody hear me? Is this good?
You sound great to me. Oh, Jinx. You're coming through great, Melissa. Keep it.
Wonderful. Thank you. Okay, so let's talk about making money. Again, why is not everyone successful trading? Why isn't it just as simple as going out, doing it, taking one class, and moving forward? Because not everybody that trains does the same thing. People do different things, and that's what makes up the market. Again, I was talking earlier about NVIDIA. NVIDIA is going to gap on earnings. Again, I don't know where the price is tomorrow morning on the open, but I guarantee you that some people will go long it no matter what it does, and some people will short it no matter what it does. So how do you know what to do? My method on gaps is based on following institutional money. So I came up with a method where I learn and process all the information in the morning, okay, before the open. I know what I'm doing even before 9:30. Like I knew I liked Target this morning when I rolled out of bed, okay? I go through the process and look at the daily chart and I rate it to determine if institutional money is going to buy it or sell it. And that's how I know if I want to go long or go short, okay? And so for me, it's about finding the best pick and using a consistent system. And if you're doing something all the time, and again, staying with it, you're going to do a lot better off. First of all, it makes trading easy if you're only using one system. Second of all, if you're doing it for a long time, you can get really good at it. Many people jump around from thing to thing to thing, and they never really get good and become an expert in any one set strategy. Well, then how are you ever going to get anywhere? Do you know what I mean? So that's the other key takeaway as well. You really have to stick with something, okay? Because you want to get good. And then you add on the size, like I was showing you in my results. But I've been training for a long time. Most people lack a consistent winning system. And I would say for me personally, it's about the pick. It's about the pick. It's about the entry. It's about the exit. It's about all of it. But it's really about the pick, okay? So in order to become successful, you have to be serious. And really that means learning from someone and taking direction. And again, as I was saying earlier, actually, when you get in that point that you say, I actually think I can do this, you say to yourself, even though it hasn't worked out for me in the past, you say, I know I can do it. When I was teaching myself how to trade, again, this was a long time ago, 16 years ago, I knew I could do it from the jump, but I didn't know what I was doing. But I never stopped believing in myself that I could figure it out. It took me over 3 years to figure out the system that I have been doing for as long as I've been doing it. But I never stopped believing in myself. And I'll give myself all the credit in the world for that, because if I had given up, then I would have never become successful. I would have never figured out what I know right now. And I wouldn't even be where I am right now. So the fact is that if you're willing to put the time and effort into this, if this is really your dream and you want to make money and you really want to be successful in the stock market, you have to believe in yourself. And sometimes that does mean learning from someone else and taking direction. Again, while there's plenty of bad classes out there to learn and take, there's plenty of good classes out there to learn and take as well. And having a mentor really is extremely important. Like I said, I call the trades live in the room, and learning from someone may cost money up front, but it really saves you money in the end, because it's brutal if you're just trying to figure it out on your own in the market. And I know this because I'm talking from experience, because I did it myself in my own life. So let's just talk about here briefly, what is a gap? So we're looking here at Disney. Everybody knows Disney. This had earnings. We're talking about earnings. This was just 2 weeks ago. So the stock closed here at one price, 4 o'clock Eastern time. That's when the U.S. stock market closes. Opened the next day at a different price, and it happened to open down. So it opened at a lower price. So this is a gap. So the stock closed here, gap down, open, dropped. We shorted it. Okay, so this was May 7th. We shorted Disney. This is a day trade. It's a day trade on margin. We also bought puts. And again, you could do both. I like to do both for various reasons. I like to do options so I can hold overnight for a bigger move. And I also like to do day trades to get in and out quick. We shorted this here at 106.60. And again, this is an advanced trader risk. Okay, I added at 106. Average price was 106.30. Exit, this was a really good trade. Almost got $2 out of it. Huge profit. This is a day trade. This isn't even an option. So this is a really good risk to reward here for the amount that I risked on the trade. Again, what is a gap? A gap is the difference between the close and the open. In this case here, this was a gap down. There are gap ups. There are bullish gaps. I prefer to short though. I prefer to short. And the reason I prefer to short is because I find that shorting gives me a niche. And stocks fall way faster than they ever rally. Okay. So again, I like to be in and out of trades very, very fast. Here was another one we did. This was May 8th. This was the next day. We did Shop. Okay. Shop had earnings. Many day traders have no idea how to short, or they don't know what to short. They're shorting things that are actually the opposite of what they should be doing. And again, they're going against institutional money. I'm going with institutional money. Again, going back to Disney, actually, or even the Shop, you can see here that this went, I don't know what happened here. I can't go up. There we go. This fell and fell off a cliff. So again, this got sold off with institutional money. Okay. The stock here from the initial day that we did the short was in the 60s, dropped, fell, broke 16 all the way down. This also happened very quick, very fast within a week. So again, institutional money did what with the Shop? They dumped it. They dumped it and sold it off. So again, you'd want to be short, or you would have wanted to be short. I haven't looked at this in the last 2 days. Okay. And, you know, the other thing about active day trading is too, a lot of traders, they can wrap their head around this idea of going long, buying low and selling high. But shorting, for some reason, I don't know why, I've always loved to short. I've always shorted since I started trading. But for some reason, people prefer to go long. It's just something that they gravitate more towards. But as crazy as it sounds, as bullish as the market's been, again, the market made brand new all-time highs in the last week. We have been shorting. The results I showed you, options and day trades, are mostly shorts. And so again, if you have a strategy that works, you can do it under any market conditions. What if the market would turn? What if the market would fall? What if the market would sell off like a hotcake tomorrow? If NVIDIA tanks, which no one's expecting it to do, but what if it does? What if it does? If NVIDIA tanks, the market's going to tank. Again, I'm not in any market trades or NVIDIA trades because I don't know what it's going to do. But if that would occur and set up that way, again, it would be very unexpected. And again, it'd be one of these things where you really need to know how to short. It's extremely important. Again, panic comes in when stocks sell off, and that's how you make money. You're making money on the panic play. But success or failure is everything to do with the quality of your system. Again, it's one of these things where if you have a good system and you apply it every day, you set your risk, which your risk should be equal or close to equal in every trade you take. Obviously, there's no 100% win in anything. No system has 100% wins. If anyone tells you that, they're just full out, stop out, don't know what they're talking about. You are going to have some trades that lose. Even with me, you saw that in the stats, but your expectations should be that you have more winners than losers. And that's how you move forward. And if you're using a system all the time that you have 100% conviction and you believe in it, you know it, you're doing it, you understand what's going on, you will be okay with one loss here or there because you know the next trade is going to be a big one, or the next one's going to work, and the next one's going to work, and the next one's going to work. And that's how you're able to put together a week and a month and continue to trade. And then all of a sudden, poof, you know, you have a year. And again, it's about 10 steps forward and 2 steps back, and 5 steps forward and 1 step back. And that's how trading is. It's just like any other job. You don't got to work every single day. If you've had a regular job where you show up for work in an office, which people are going back to work now, where everything's great, everything's perfect, and you have a great day and no stress. That's not reality. Every single job, even jobs that offer, specifically jobs that offer a huge income potential, you will sometimes have stress. But the beauty about trading is, again, the freedom to do it from your own home, the unlimited income potential, which some trades that we do, again, are very, very big. And again, the fact that you basically are in control of your own destiny. Like, you know, if I want to take off, I'm taking off Friday. I'm taking a long weekend. Markets close Monday. I'm taking off. I close the room. We're not trading. Not a good idea to trade around the holiday, low volume. And again, you work for yourself. You don't have to ask permission from a boss. Can I take off? Can I use a vacation day? This or that. You are in charge of yourself, okay? So the number one key ingredient to becoming successful as a trader is having a specific system and strategy that can offer you reliable and consistent profits on a regular basis. Trading success and financial success in the market is really, it's by pure design. It's like I never take a trade by accident and make 10 grand. You know, it's just, that was never my fate, even when I started trading. I was forced kind of like to figure it out. And again, now when I make money, it's because I'm doing the right thing. I'm rating the gap. I'm taking the correct entry. I'm getting out where I'm supposed to be at the target. But anyways, it takes a niche. That's something that you really, really, really got to have, because so many people are trying to trade the market. So many people are trying to trade and make money. And everyone's really competing for the same thing. Okay. So if you want to be different, successful, do well as one individual trader, then you have to do something different. Okay. So for me, my method is based on reading institutional money that moves stocks and gaps. So I'm looking at everything, rating the gap on the large time frame or the daily chart. And then I'm taking my trades on a 1 minute chart, honing it down to the detail and specifications of doing it on the 1 minute. So I make the pick on the daily. And then because I'm an active day trader where I'm putting in a stop and getting in and out quick in several minutes, I'm taking the trade on the 1 minute chart. Okay. Any questions here before I continue on? How's everyone doing? Just taking a peek. If you have any questions, I can see them on the side. Anyways, like I was saying, everything I do is based on a checklist. It's a 26-point checklist that I get up in the morning and I go through and I rate it. And again, I will do that tomorrow with Nvidia and anything else that I get. And that it's just, I get up and I do it. And then you don't get in your head about it. Well, what do I think about this? What do I think about that? What are they saying on Bloomberg? No, it's, you take the guesswork out of it by actually following the checklist. Anyone that's a professional follows checklists. A pilot has a checklist before they take off. So if you're going in to get an operation, they have a checklist. Did you not eat anything? Did you do this? Did you do that? They ask you the list of things. You have to take it that seriously, literally. It's like you are performing surgery on the stock. So it's a surgical procedure where I'm in and out, and I make thousands of dollars in 5, 10, 15 minutes. That's literally how you can do it. And again, it's the focus and the detail. So again, my niche is the golden gap system, which follows large institutional money. Gaps are created with large institutional money, or what I call the golden gaps. That's what makes the gap in the first place. The ones I showed you earlier on the charts. The professional gaps that happen in play-on stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. So by having a formula to rate and qualify the gap, you get confirmation and conviction that the large institutional money is on your side, and then you play it, okay? And you enter the trade. Whether you do as a day trader or an option is up to you. Again, I like to do both. And again, you don't have to sit on top of the option and stare at it. You know, you could put the trade on and let it play out. You could put a sell order to fill you at 50% or 100% return on investment for an option. You could do options. You don't have to be in the room every day. But anyways, gaps are an event, and they create a sense of urgency. Hurry up, get me the hell out. That's what people are saying when the panic comes in and they want out of the stock. Thus, an action is being forced by participants of the stock, and this is why gap trading is incredibly powerful. Trading golden gaps is a powerful and profitable way to trade because you're trading on the side of power money. And again, then you're never going to move a stock. Even, again, the Reddit stocks, retail traders could come together and temporarily move a stock, but they won't have the pull on it or the hold on it. And you saw that in those Reddit stocks in the last week because institutional money wasn't buying them, or the stocks wouldn't have completely sold off right after the jump up. So the sustainability in a move, and I don't care if it's a bullish move or a bearish move, is in the power that comes with institutional money that buys or sells stocks. And so if you play with that, it makes it so much more easier to make money, because you're really not going to move a stock. And no amount of people in a trading room are going to move it either. And even if you think you get a temporary move in a group of people in a chat room, whatever, it's going to be short-lived at best. Do you know what I'm saying? So it's not something that you can rely on. Definitely not something you can rely on long-term. Any other questions here so far? Good volume, okay? Very good. So anyways, what I was saying was the purpose of my rating system is to help me determine who's in control. Who is charting the next course of the stock? Okay. Who's at the helm of the ship? Who is the captain? The bulls or the bears? Okay. Because if you can determine that, again, you're going to make money. Who's in control of Disney? The bears. The bears. Okay. So again, you wouldn't want to be long. You would want to be short Disney, or you got in and got out of it. Okay. How do I tell where the institutional money is or when it is moving? Well, I see the gap. I'm not predicting the gap. I wait till the gap occurs. So like I said, NVIDIA is going to have a gap tonight, and then it will have a gap tomorrow morning. And then I use my 26 points to determine the control of that gap. In other words, how I want to play it. Okay. So here was another one we did. EXPE. This was a day trade. This was back in April. Stock close here, gap down. Again, this is a gap. Stock closes at one price at 4 o'clock, opens at another price at 9:30. Boom. So we shorted this. Entry was 120.30, exited at 118.10. I could have held this. People always ask me with my results, so these are the best results you could get. No, I don't always get the low end of the low of the day exit in my puts or my day trades. I'm trying to get in and out quick for the day trades. And if I have a good trade where I make money as an option, I get in and get out. I don't think it's a good idea in this market particularly, and I don't care if you're going long or short, to hold stuff to a piggy target. It's once in a blue moon that you'd hold something to a piggy target. But anyways, I just want to show you, this was a really nice gap. It was a good golden gap. We did it. We made money. It was a good trade. But I want to show you here where this ended up going on that particular day that I did it and got out. It went all the way down to 115. And I could have made way more. But again, my job every day is to try to get the best pick, get in, get out, and done. Okay. But sometimes things keep going after I get out of them. That happens, often. But how do you know when you're doing well? You're chunking it out. I always tell people, if your goal is make $1,000 a day, once you have that goal in, you don't want to let it go against you. Okay. So you got to book it. So chunking it out is how you put together a week. You take it, get the move, book it. Take it, get the move, book it. And again, that's another critical mistake I think a lot of traders are at, where they've been doing something for a long time, where they've had big losses. And then when they find a good trade, they want to be a piggy in it. And then they have a good trade that goes against them, and then they lose in it, which is crazy. I mean, that's debilitating. Don't do that to yourself. Okay. So it's very important to make sure that you are also booking money when you are in a trade and it goes. We did Disney again. I mean, we've been all over this thing, actually. So Disney was here. This is the second Disney we did. This was on the 15th. Entry was 102.60, added at 102.40. Average price was 102.50. Exit was 101.55. Again, this kept going too. This was a really nice trade, 66.50. Again, we've been on top of this. So I had called puts in this that were lower strikes out on this particular day that went this day. Again, you can stack trades too if you want to. Now, again, we're usually doing the weeklies. You could do something 2 weeks out. You could do wider strikes out as well. Again, it depends what you want to pay for and how long you want to hold something. But again, we already had puts on, actually, the day that this fell. My expectation was this would go. And then again, you don't really know, but you know it's coming up and you know it's coming soon. And then it did it. And then we also did the day trade there. How do you rate the gap on target? We rated the gap on target good. We got in and out of target and we shorted it. And I know that it rallied up against it, but target actually is a good gap. So we shorted it. We got in, got out. And I also called a put in target, and I have it on, and we'll see where it goes. So again, part of trading is having the confidence and having the conviction to play things out. Again, this Disney, the puts that went on this day took a week. So if you killed the puts, well, I called some here that you could have got out of here, but the bigger money was in this, boom, when it fell. And again, the trade was up a little, down a little, sideways, and you had to wait for the profit. So again, if you understand what's going on, you will stay with something. Of course, you have to have your risk aligned. You know what I mean? You can't take too much risk in something. And on top of that as well, again, this is what also makes the market. So when you understand what's going on and you believe in it, you're not going to get worked up if the trade doesn't go the second that I call it. I'm talking about options here. Okay, so the day trades we get in, and we have to be flat before 4 o'clock in the day trades. But anyways, we made money in Target. I had a perfect entry in that and a great exit on that. In fact, I think I taped the room this morning. I'll put it on YouTube later today or this week. But anyways, as far as holding the trade that's an option, if I call a trade on Monday and it's down, I don't kill it. I don't kill it. I believed in it. I rated the gap. I loved it. I liked it. There was a reason I did it. Again, follow the system. If you don't follow the system, then what are you following? You're listening to somebody on TV. You know how many people on TV thought that they were going to lower interest rates 5 times in 2024? I never said that. Actually, if you go back and look at my hits in the fall of 2023, I said I didn't think that the Fed was going to do that. I was right. That was a year ago. And the reason I said that is because I'm a consumer, and I knew that inflation was still too high. At this point now, though, again, with where inflation is, the Fed is fat and happy, just letting things play out and ride out and not pushing rates down a lot. 1 interest rate drop, or even 2 in 2024, which people think is going to happen. I don't think that's going to happen. I'm going to say that Monday with Charles Payne on Fox. Even if 2 happen, big whoop. If mortgage rates are above 7% and then they get down to 6.5%, that's nowhere near where we were, 2-3 years ago when interest rates for mortgages were 3% or 4%. So again, I don't think that a 0.25% drop or a 0.5% drop in the next 6-7 months is going to change inflation that much. Part of the reason also, and I don't want to get too off point here, part of the reason also that costs of goods and services are up a lot is because oil prices are still too high, okay? And the administration is pulling into the oil, taking oil out of the oil reserves to try to keep prices down, but that's really like, a fake, phony way to do it. The oil prices are still too high. And of course, everything that we buy, everything that we get, all our Amazon deliveries, everything, how does it get to us via truck or car? And so the price of oil is high and up, gasoline. And obviously we're going into summer, people go on vacations. All these things are things that people have to think about. And food is up because of that as well. So anyways, think about the control factor. Think hard about it. You're like, okay, wait a minute. This makes perfect sense. This makes perfect sense. And again, I could name 100 charts out there where I could show that. So one of the reasons, well, then why is the market at brand new all-time highs? How could that possibly be? Well, one of the reasons the market's at brand new all-time highs is SPY, okay, which has in it the financials. I always said that you're never going to have the market at new highs without the financials, with the banks are roaring. You had a back again, this is a year ago, rewind a year ago when the smaller regional banks were going under and there was panic in the market and we sold off. A lot of those got the bigger banks scooped up the little banks, and now that could happen again. But they have a handle more on what's happening. So big banks are becoming bigger and small banks are going under. And again, banks have capitalized on getting all this cash from from people wanting to put money in large banks, even though they're paying squat in interest rates from money markets and savings accounts. People want to feel that their money is safe and these banks aren't going to go under. JP Morgan Chase has made brand new all-time highs. Goldman Sachs is running up like the dickens. So the financials are in a tear, okay? And so that's one of the reasons why you've had such a strong market. And you say, well, you scratch your head, we'll say, how does that make any sense when interest rates are high? Yeah, but banks are still making a lot of money, and banks are filled with cash. They've gotten so much cash from these smaller regional banks going under, some of which they took over, you know. Anyways, let's talk about institutional money and gaps. There's only one thing and one thing only that can move the direction of a stock, and it's money. Not a little bit of money, but a lot of money. And again, we're talking about banks, okay? Banks actually have trading desks, okay? Banks have trading desks and have professional traders and big traders, okay, that actually trade. And you have hedge funds as well in the market. Power money is in charge. Power money is in charge of the stock's direction. Trends are set and moved by the power money people, of which there's a lot of in the market, okay? So success requires a plan. It's the 26 points. So if you decide to come and take my class, this is what you'll learn. So my class is 14 hours long. I go through all the 26 points. I teach you how to make the pick in my class. It's an entire weekend. And then you learn the entries and then you learn the exits. But again, the benefit of being in the live room is you get the trades that I'm calling. So making money trading is really about the consistency, the proper trade selection. Trading successfully means focusing on taking trades with institutions, and being on the side of institutions increases your odds to make profits because institutions make stock trends and the market, okay? Institutions move stocks either up or down. If you want to get paid, the key is to be with the side of the large institutional moves, to be with that power money. You've got to make good choices when you trade because, again, in order to make money, you have to take the risk. You put the risk on. So you want to be thoughtful about the risk. So my system, if you want to come and learn it, will tell you how, when, and when. How to make money in the market. You trade a strategy and a system that's profitable. For me, it's golden gaps, which you can come and learn from me in the class. What should you trade? Stocks at gap and rate 20 points or more per the 26-point rating system. Again, that's what you learn in the class. And when do you trade them? Early in the morning in the open, when they set up and trigger, okay? Now, if this is something you want to do for a living, like I decided a long time ago, I started out small. My average risk was $150 a trade. I set my goals, and then I went from there, okay? Many people have these big goals, and that's great, but they're not even profitable. Start getting profitable consistently, week by week by week, and then you can increase your goals, all right? And I was saying earlier, take quality entries. Don't overtrade. Don't be piggish, okay? Following the checklist will help you. It helps your confidence. It helps your conviction. Now, we were talking about options. Again, I do options as well. This is a newsletter that gets sent out usually in the pre-market, sometimes during the day, but I sent this at 9:26. This was Starbucks. May 1st, we did the Starbucks puts. So the newsletter has a symbol to strike, the expiration, and the type, okay? So we did the Starbucks. Let's look at May 1st was here. Stock close here, gap down, and we bought the 75 puts. I just want to show you where it was, and it dropped. Boom, boom, boom. So this was a nice trade here. This was actually pretty cheap. It cost $1.60. You could have done one. You could have bought one put. And again, an advanced trader risk of $8,000. You could have made $7,000, 88%. If you wanted to do 1280, 8 contracts, again, you could risk an average of $1,000, $1,200 a position size. This almost was 100%. And again, this is a fast trade to me. And again, this is a cheaper way to do it. If you don't want to buy if you don't want to short the stock on a margin account, because again, to day trade and short 1,000 shares or 2,000 shares of Starbucks, you would have needed the buying power to do it. Whereas if you wanted to do the put, this is all the money you need to do the put. And again, you can open up a cash account at a broker with as little as $2,000 in trade options. Now, I wouldn't risk half your account in one trade, but I'm just showing you, you can start slow and do one contract, and you could have, risked $160, and you would have made money in this trade with a small account, okay? Any other questions? Brendan's saying something about a list or something. I teach the checklist in the class. I don't know if that's what you're referring to, Brendan. Any other questions? Anyways, knowing where something's going to go before it goes there is how you can make a lot of money. Again, I'm not predicting the gap. I'm not saying NVIDIA is going to open tomorrow morning at 1,200. Some people think that. I'm saying if it does, I will rate it, and then I'll know if I'm going to go long it or short it, okay? So the rating system is something that I use after I see the gap, okay? The rating system looks at 26 points on the daily chart of a stock. This is what you learn in the class. It's 14 hours long. The rating system is a checklist. The checklist tells you what to look for in the direction of the stock. Here's another one we did. This is BA. Again, this was another put. We did the BAs 424. Oh, this was a quick one here. We got the sell-off, boom, dropped out, done, boom. And again, this is another one I've been watching, BA. BA has earnings, July, I think, are the next BA earnings. This is another one to watch. Again, this is so cheap to be able to do a stock at $165 a share and pay $175 per contract is so cheap. And this actually, I sold it at 6 and went over 6. Huge trade here. Again, what happened in the BA? It sold off like a hot cake. Okay. So again, it sold off like a hot cake. So if you risk 87.50, you would have made 21,250. If you risk 1,050, you would have made 25.50. There are trades like this. This is in and out the next day, and you would have made over 200%. I call trades like this all the time. Microsoft, we did the 405 puts. This was the 29th. Oh, this was this week. It's closed here, gap down, sold off again like a hot cake. Again, it got dumped. It got dumped. It got dumped by institutional money. This was more expensive. Of course, this is over $400 a share. You could have done one. You could have risked one and spent $550. Great trade, over 100%. Same thing here. If you did 2 contracts, risked $1,100, you could have made $1,300 in that Microsoft. You could have got it in and out again in 24 to 48 hours. It's all about money management, though, in reference to once you get the consistency with the system, because you still have to put stops in. You still have to think about what you're trading. You know, you can't risk a different amount in every trade. You can't do one NVIDIA contract if it costs $25 for one or $2,500 for one contract if you're not risking $2,500 in every trade. Because then inevitably you would do the one NVIDIA, that will lose, and then you'll have to do 10 trades to break even or be up. So you got to be consistent. And again, most of the things we do are pretty reasonable price, with the exception of NVIDIA. That's probably the most expensive one that we do. How do I balance the effect of the market uptrend against shorting? I don't care, because I'm doing specific stocks. That's the beautiful thing about doing gaps, about using my system, okay? If you have to get the market direction correct every day to make money in trades, which a lot of people need that for what they're doing, because people want to buy dips and things like that, while that works in a trending bullish market, it doesn't work every day. Even in a trending bullish market, you'll be wrong more than you're ever right. I read the market very well. Even I don't get the market right every day. It'll be very difficult for you to have success if you have to read the market direction every day. You won't get it right. You won't. One of the reasons why people gravitate towards futures, which they want to look at the market, is because they think they can make a lot of money in futures because of the leverage. That's ridiculous. Trading stocks is actually a lot easier, and you don't have to worry about the market because you won't get the market right every day. So that lessens your odds right out of the gate. If you need the market for the trade, it lessens your odds right out of the gate. Okay? So it doesn't bother me. Anyways, you've got to make money in this business, and you got to make more than you lose. And you have to have some trades that are big. Okay? So you can't lose a lot if you want to do this for a career. You've got to focus on quality. I'm typically looking for 1-to-1. Sometimes I get more than that, as you saw. I think 50% is good in an option. All right? And again, it's a holiday week. If you're in a trade and you're up money by tomorrow, going into Friday, which is low volume, and you're up 65%, I say there's nothing wrong with getting out. But the points tell you where the money is flowing. That's what you need to do. That's what's the important part about it. So what do you need to make trading work? Number one, you need a strategy. For me, it's golden gaps. Can't trade without a strategy. Number two, you need a method and structure to enter the picks. Where am I getting in? Where am I getting out? This was the Disney trade that we did here on the 7th. Stock closed here, gap down. This is the one. Got in, got out, done, boom. Okay? You need a method and structure to enter and exit the picks. Number three, you have to have monetary goals. It should be based on a risk unit, which should be based on your account size, okay? And again, that has to be something that you are consistent with in order to make money. But it's all about the reliability in the system, which means sticking with one thing. That's how you're going to get good. That's how I've gotten good over the years. And again, you know, I could probably be risking more in both my options and my day trades, but I'm in a comfort level now. And I also have a lot going on in the morning because I'm talking at the same time I'm trading, which isn't always easy, but I'm a big talker, but also I'm trying to do everything very fast. So I'm in a good groove running the room, but I could risk more in my trades. People always want to push it and push it, push it, push it. Prove to yourself you can make $1,000 a week. Prove to yourself you can make $500 a day. If you can do that for a month, then you can up it. I'm very deliberate with what I do. Target today was a good example. As I'm like, wait. And then we struck, we shorted it, we got out, and we were done. We were done. That was it. It was just like that. But proper education, again, relying on a mentor helps you, and learning a system that works over and over again in any market conditions, bullish or bearish. What if the market would turn and fall? What if they raise rates this year? What if the Fed raises rates? God forbid, what if that would happen? Don't think it can. It could. It could happen next year in 2025. The market will sell off. Now, whether that turns the market, I don't know, but it absolutely could create a sell-off. The market's not expecting that, and don't think that can't happen. Or another bank going under. That could happen too. So the Golden Gap course teaches a 26-point rating system to find the best stock to trade each day. The course teaches what direction to play the stock, also teaches you how to exit it and enter it, and it teaches you how to read institutional money in stocks. It teaches you how to day trade gaps, and you're going to learn this so you can use it. And again, it's something that I will help you with in the room, and the purpose is really to do it for yourself. You learn everything in the class that you don't need me, and you can do it for yourself. But for the day trade room, you've got to have that first half an hour of the day available. But when we're done quick. If we're done by 9:45, we're done. And the options, you can put the trade on and put a sell owner. You don't have to babysit it. I do have targets in the newsletter if you want to watch it, but you're going to learn, again, the rating system, which tells you where the institutional money is going, okay? And if you can learn this, you can do it, and you can do it in options. You can do it in day trades. You could even do it in swing trades, and you decide your risk, which, of course, you could ask me as well. But every day, that's what I'm doing. It's the point rating system to find the best gap. This is what I focus on. So if you want to empower yourself today to learn this, you can. Again, the Golden Gap course is a complete system to use to trade. And this is how I'm able to make the money that I'm making. And again, I've been doing this for a very long time. So the class is called the Golden Gap course. It's a full 2-day course on how to strategically find, pick, and play stocks that are professional bearish gaps. Class is online. You can be anywhere in the world and take it. So the next class is in June. The June class is June 8th and 9th. It's coming up, 9 a.m. to 5 p.m. Eastern time. Class tuition is $69.99. It's online. You can be anywhere in the world and take it. The combo, which includes the trends course, which saves you $500, is $79.99. The trends course is June 11th. It teaches you long-term trends in stocks, which is actually important for options trading or swing trading. And then I am doing a Memorial Day package, which is huge. It's Fleet Week here in New York City. Actually, today, I'm going to have to walk down by the river. Today, all the Navy ships came in today to port. They had a parade along the Hudson River. It was really beautiful. I saw some of it on the news this morning. But anyways, I'm doing a Memorial Day package that's going on through Memorial Day. If you sign up for the Golden Gap course combo, which is $79.99, if you sign up by Memorial Day, you will receive the options newsletter free for 1 year, the Stock Swiss Show live trading room free for 1 year. Again, that's where I call the day trades. The market report subscription free for 1 year, and the Gap options course, which is another class, which is June 13th, 11 to 3. Again, the combo class tuition gets you the Golden Gap course, which is June 8th and 9th, and the trends course. And this special ends Memorial Day. If you want to sign up, you must email me for the forms to sign up. And let me see if there's any questions here. Let me see. I answered Fernando's. Somebody's asking, you wait until the spread has narrowed to buy the options. The first 50 minutes are running away. So about as far as options go, if I call a trade like at 7 a.m., you can't do that trade till after the open. Okay. That means I like it. I know I like it. I know I want to do it, whatever. Anyways, you don't have to do it right on the open, no, because options can open spready. Some are spreadier, more spreadier than others. You cannot trade options in the pre-market unless it is the market indices, the QQQs and the SPY. You actually can enter 10 minutes before the open. I don't do that, but I'm letting you know you could. But everything else like Starbucks or Disney, yes, you have to wait till after the open. Yes, sometimes things open spready, not everything, but like, I mean, NVIDIA is always spready. But you can wait 5 minutes or 10 minutes. If I call a trade at 7 a.m., I wouldn't wait till 11 a.m. to do it, if that's what you mean. So anything that's typically spready, once it opens, will wiggle and jiggle and work itself out in several minutes if it has volume. And all the ones that we're doing are 99.99% of the things we're doing. I'm really trying to stick with things that have volume. I really don't want to do anything that doesn't have volume as far as a day trade or an option. So no, you don't have to enter it right away at 9:30. But no, it could move and could move pretty quick. But again, I'm not exiting my options in 2 minutes like my day trades. So it's okay. You pay what you pay for it. We're not trading options for 20 cents or pennies. We're trading options and even day trades. I'm trying to get a move, a momentum, $1, $2 more. I want it to move. You know what I'm saying? Like, it's got to move. So you could wait a few minutes. But you don't have to wait, or you shouldn't wait too long. Any other questions from anyone? So it's an exciting night, really exciting night to see what happens. Again, everyone and their brother thinks NVIDIA is going to be up at brand new all-time highs and is going to go crazy over 1,000. So if it doesn't, I won't be surprised. I'm not in it. The options, I guessed on Monday, the options for at the money were $4,000. I was close. They were $4,500 for a NVIDIA call. It expires Friday, 3 days ago at the money. Insanity. You don't do that into the earnings. And it could tank. It could tank $200, and that will really rock this market. So it's going to be an exciting night to watch what happens. It's going to be an exciting day tomorrow to trade. What am I going to do? I don't know till I get up in the morning, but I will be watching the video tonight as well after 4. So if you're interested in learning my method, if you have questions, if you have any questions at all, email me at melissa@thestockswoosh.com. Anybody have any more questions before I let Jeff jump on? You did have some good questions here.
All right. Cool.
Thank you.
You're welcome. We put both the email in both of the YouTube chats, as well as the other one. We certainly had a chat, but it was a question, but it was very, very similar to the other question that was asked about institutionals. So great job today, Melissa. Appreciate it. And I would say I was a little bit nervous about your audio. Great. It was fine the whole time.
Well, I could probably be like 3 feet away and just talk really loud, but did
Cool.
both today. How to close to talk loud. Have a great Memorial Day, Jeff.
Thank you. All right, cool. Let me go ahead and do this. There's a couple buttons I need to press to kind of move everything along. Let me do this. Show my screen. And let me go ahead and do this as well. I think that clicks all the buttons that I need to actually push. So good to see everybody here. Thanks for coming. We're going to do a little bit of a Robert Anderson says good stuff. I love these events. Somebody told me the other day, we were just having a conversation about webinars, and it's like, if you just pick up something, just one thing, it's worth it. And I was like, yeah, that's actually pretty good. I hope you're learning more than just one thing, but I've learned some stuff already today. So I do want to say thank you to the sponsors that we have, Stocks and Commodities Magazine. Our next presenter is actually from CMT Association. I've been promising you that he will come in and talk about the CMT Association, how it works, all that kind of stuff. I do show his audio is not connected, so but I do show that he is logging in. So I'm going to just shoot a couple messages to him real quick. I can't talk and talk to this. Okay, send him a little bit of advice in terms of how to get his audio connected. It's not very hard. But in any case, he can't hear me, so I had to type it. I do want to say thank you to the CMT Association. I've been promising all week that they're going to talk a little bit about it and blow your mind away about how much having a CMT designation can help in terms of getting you up and running if you're looking to work for a bank and all that kind of stuff. So we're going to, looks like his audio's kind of getting sorted out before before we kind of turn the time over to him, I am going to give away a prize real quick. So what I'm going to do, Tyler, I can hear you. How you doing?
Hey, buddy. So sorry about that. Little
You're okay.
little challenge on the technology side today, but I'm here.
Did you do the unplug and plug it back in trick?
That is the full extent of my IT knowledge, Jeff. Turn it off, turn it back on.
Yeah. That's the advice that we have. Unplug it, plug it back in. It'll work.
Every time.
Wave Surfing says, thank you a lot, Melissa. I'm going to go away this book real quick. And then we'll kind of get you going. I've promised everybody all week long that they're going to be blown away. So I have set the bar high for you, but I'm sure you'll be able to deliver. Before we do that, I want to talk about how important talking is, or chatting with us, and all that kind of stuff, because especially if you're on YouTube, it helps us with the algorithms. If you ask questions, all that kind of stuff helps a great deal. If if you subscribe, that helps a great deal. So one of the things I've been doing lately, and this is going to happen a little bit more, is rewarding this sort of participation. So I have a book here that's called High Profit Candlestick Patterns. It was written by a good friend of mine, the late Steve Bigelow. I've talked a lot about people that have had huge impacts on the trading. And I'd say Steve was just such a nice guy, such a funny guy, somebody that I absolutely loved. And his books are awesome. The work that he's done is awesome. So what I'm going to do now is I'm going to make sure I have all of the questions on. I'm just going to scroll through them for a minute. I'm going to pick somebody that said anything, just anything. So I'm going to start at the top here. We'll scroll down a little bit. And I'm going to give this book to Brad G, who was asking about the Big Trend Toolkit upgrade back when Price Headley was talking. So Brad, you want a book? All you had to do is ask us about a question. So I'd encourage you to. We're going to do a couple prizes like that. So if you have questions, ask. If you want to tell us where you're from, do it. All that kind of good stuff. It helps a lot. Tyler is great. He's going to do a good lesson. I've been kind of building him up for a while now. Let me go ahead and make you the presenter here, and we'll get you on your way. What I've been telling him, just so you know, is like a lot of times at the end of your presentation, you go through the numbers about how having a CMT can help. I've told everybody that when you showed those numbers the first time, it really blew me away. Yeah. So that's the expectations I've laid.
That's fantastic. You know, holding people to high expectations, Jeff, you should probably give prizes away to somebody who could give you the formula for the McClellan summation index, or, you know, you gotta ask more difficult questions of the audience here. This is the MetaStock conference. These people know what they're doing.
Hey, we just love the participation. We're happy for any question. No question is a bad question.
Very true. Very you can see my screen, my slides?
I can. I can. I'm going to go ahead and get out of the way. It's your turn. Go.
Fantastic. Hi, everybody. Thanks so much for being here with us today. And Jeff and the entire team at MetaStock, thank you for continuing to organize these traders conferences. I do organize a lot of conferences for the CMT Association, and that is a passion project. It's a labor of love. It's also exhausting. So kudos to you for not only compiling really great speakers. I'm humbled to be a part of this, but also just for taking the extra effort to create a space for people to learn. That is what the CMT Association is all about. So my name is Tyler Wood. I am a CMT charter holder and the managing director of this global not-for-profit organization. So I'm speaking to you today on behalf of our global membership, on our board of directors, and the 50 years of Wall Street professionals that have come through and left an impact on this organization. Up on screen is just a picture from our 50th anniversary celebrations at the New York Stock Exchange last April. I'm pretty excited about what the next 50 years have in store. If you've never heard of the Chartered Market Technicians Association, or if you hear the acronym CMT and immediately think country music television, then hopefully a lot of this presentation will be brand new to you. And I won't spend the full hour talking about the history of the organization, but there are a couple of pretty important milestones along the way. So late 1960s, a group of professionals in lower Manhattan in the Wall Street area got together and realized that in the late stages of the go-go years, the bull market that was happening in U.S. equities, that there was a lot of froth. There were predatory actions being taken, get-rich-quick schemes that were masquerading under the banner of technical analysis. And these folks who represented, the well-heeled institutions of the financial services industry said, well, that's not what we do. It's much more sophisticated than that and much more rational in our approach. We have a process and a discipline, and we look at lots of different data sets, not just one or two squiggly lines on a chart. If any of this sounds familiar, late 2021, everybody had a SPAC and an NFT, and get-rich-quick schemes were everywhere. And I think that history does tend to at least rhyme, if not directly repeat itself. So we find ourselves in that position again today, where the distribution of access is fantastic. Everybody can look at 5,000 charts in the palm of their hand, but also the barrier to entry for somebody who takes technical analysis seriously, the barrier to entry to calling yourself a technical analyst can be quite low. And when my Aunt Pam or my family get financial advice from somebody on TikTok, it really worries me. So the mission of the CMT Association has been to advance the discipline, as markets are always changing, but also to represent professionalism, ethics, and competency within the discipline. They worked very hard as a member organization for the first 20 years, and then created this series of exams and the designation, the mark, Chartered Market Technician. When you see the CMT after somebody's name, that means they have dedicated years of their life to studying and preparing for these very high stakes exams, and they actually take the discipline very seriously. The board of directors and the organization had done so much great work that in 2005, FINRA recognized the CMT credential with the same weight that it does the CFA, which might be familiar to you if you've heard of chartered financial analysts, people who look at the fundamental side. We'll talk a little bit about that later on in today's presentation. And then, of course, it is a global organization now, no longer just a small club of members in the New York area, but all across the world. And we were able to organization. Here's what it looks like by the numbers now. 55,000 participants in all of our educational content. We host webinars almost every Wednesday. We publish a double-blind peer-reviewed academic journal a couple times a year. We host monthly podcasts. We do lots of live events. We publish daily market research. If you, after this presentation, if you just go to cmtassociation.org, you can throw an email in there. You can subscribe to our daily Chart Advisor newsletter. You can subscribe to CMT Smart Brief as a weekly update, our monthly Technically Speaking publication, or join as an affiliate member. There's no prerequisites. You don't have to be a CMT charter holder. I invite you to be a part of this global community, not just for the professional network that it offers, but also for all of that educational activity. We work with universities all around the world. We're helping educate the next generation of financial professionals. And then, of course, members and charter holders, as well as candidates in the program, continue to grow. A little plug. If you like technical analysis and you're interested in how institutional money managers, how portfolio managers think about markets, the tools and the process that they go through for security selection, for risk management, I encourage you to check out this podcast, Fill the Gap. We've been doing this for several years now, and the in-depth interviews with some of the best men and women portfolio managers from around the world is really educational. It is for me every month when we get to do these interviews, and it's streaming wherever you get your podcasts, Spotify, Apple, you name it. But you can also go to this site, content.cmtassociation.org. That unlocks all of the podcasts, as well as lots of journal articles, regular up-to-date market commentary, our market insights, and many, many, many more pieces of content. So check that out. We did just host our global summit in Dubai. That is an amazing city and quickly becoming the world's new financial center. So for those of you who are tuning into this Traders Conference from around the world, go find some CMTs in your local city. Ask some questions. They are a very open and a very generous group of people that are happy to educate, teach, speak at your events, or come talk to your groups. So hopefully we will see you all at a future live CMT conference as well. All right, enough introduction. Let's talk about what this session is all about. I'm a pretty simple guy, so I can only remember 3 things at a time, which means our agenda is only going to cover 3 things. And the first is that we should have a shared common vocabulary about how we define technical analysis. What does it mean for us at the CMT Association? And hopefully for those of you that are trying to explain to your loved ones or colleagues how it is that you do what you do in the markets every day and every week, this might be helpful to you. And then we'll move on from our definition of technical analysis, how it is a complement to fundamental disciplines, not a contrarian belief system. We'll dive into just a couple of tools, things that are well represented within the CMT curriculum. And I did put the textbooks on my desk just to show you what it is that you'd be studying from. And that will bring us to our last section, which is just to talk a little bit about the CMT program and help you get enrolled for this December cycle of exams. All right, let's dive right in. What is technical analysis? Got an abacus there because yes, it's a lot of math, but we don't use an abacus anymore. Technical analysis starts with a chart. It is a form of data visualization, and that goes back hundreds of years to the rice pits of Osaka, Japan, when Monahisa Homa first came up with the idea of painting the activity of traders in the rice pits to get a sense of their emotions at play on price action for the commodities trade. So he was observing the fact that human behavior would drive price up or price down, and that by having a visual tool, he could profit off of that behavior in the markets. Well, that is the foundation of technical analysis. We are using data visualization to get a picture, to get a lot of information from the markets and put it into a format that our brains can process quickly and efficiently. So Edwards and McGee, this is the Bible, if you will, of technical analysis, at least here in the West. They defined it as the study of the action of the market itself. And there's nothing more poetic than that. And we are studying all corners of market activity. There are new data sets coming out all the time. I'll give you an example. If you've ever heard of the anchored VWAP approach, our good friend Brian Shannon wrote a book on that recently, and that the volume weighted average price was a tool issued by regulators to make sure that that buy side firms were getting good execution from their brokerage houses, and making sure that wherever their price action was, where they were getting filled, matched or at least beat the volume weighted average price. Well, that created a data set, and it created a tool which technical analysts can use to understand if most of the holders of a security are underwater or if they're profitable. That's the kind of thing that I'm talking about. The options industry, the derivatives markets are churning out new data sets all of the time. So Edwards and McGee are still right almost 100 years after they wrote their book. And we also know that technical analysis is the study of supply and demand for shares or contracts. And that gets back to Monahisa Homa. Understanding that at a fixed rate of supply, it's the behavior, it's the demand, the fear and greed of market participants that's going to push price in one direction or the other. And then the third definition that I want to give you actually comes from a widely cited author, Perry Kaufman, in the CMT curriculum. And Perry talks about a systematic evaluation of price and volume and all these other market statistics. And I want to mention the word systematic. We're going to talk about developing your process and your toolkit to assessing market activity, because that is the only way that you're going to maintain profitability over time. You have to have a set of rules that you're going to use consistently in a repeatable process. Now, Perry goes on to say that it's for the purpose of price forecasting, and I'm going to quibble a little bit with that definition. I would argue that technical analysts have an extreme advantage over everybody else in the marketplace because they have a set of tools that tell them what is actually happening right now. And believe it or not, a lot of market participants don't pay attention to what is actually happening. They don't think about that in terms of context of where we've come from. They're not pausing to think about what is being reflected in price activity. And the idea of forecasting, I think, is perhaps a little misleading. We, of course, want to react responsibly to what the market is telling us. We're putting probabilities on our side, But if anybody tells you they can see where the S&P is going to end 2024, if they're making big calls about long-term horizon forecasts about the economy, about the markets, they're probably guessing at some things. So this is how we define technical analysis at CMT Association. We believe it provides the tools to successfully navigate the gap between intrinsic value and market price across all asset classes through a disciplined, systematic approach to market behavior and the law of supply and demand. That's kind of a mouthful, but what we're getting at, and you can see this nice little infographic that our marketers put together. On one side of the bridge, you've got intrinsic value, right? These are the fundamental tools that we could use to assess what a company is worth, right? We're talking equities here. The other side of the bridge is market price. Now, accounting estimates, valuation, we could look at growth factors, return on equity, all of that to understand the valuation or the growth of a company. But market price is not driven by those financial statements. Market price is driven by sentiment, the interpretation of everything that's happening on the left side of the chart here, and by the supply and demand relationship for those shares. So that gap, right, when the market is wrong, so to speak, technical analysis can help you understand where it's headed. Now, Ralph Akampora is a CMT charter holder, and he was one of the co-founders of this organization. And he taught for over 40 years at the New York Institute of Finance. That's where Wall Street went to learn how to trade on the New York Stock Exchange. And Ralph encouraged me early on. He said, Tyler, if you are ever talking to people about technical analysis, feel free to use any of my material, but particularly this chart. And he would refer to IBM. That was the mega cap security of his day when he was at Prudential. We're going to talk about Apple for a second. And I want you to understand this, this concept of technical analysis being a complementary tool to a fundamental discipline or a macro view or anything else. So with Apple, we could do all sorts of work on the company, right? We might look at valuation estimates, price to earnings, price to book, price to sales. There's a million different ratios you could use to get a sense of the intrinsic value of the company, Apple. You could look at their management team and look at the quality of the company. Are they very efficient or inefficient at allocating capital throughout the firm? What's on their balance sheet? Do they have a lot of expensive debt to service? Do they have new initiatives, strategic goals that make sense for their industry group? We could look at some growth factors, right? If we say, yeah, it might be a little overvalued, but we see forward returns looking really positive. So things like return on equity. We could look at expanding margins. We could look at free cash flow and all sorts of other metrics on the growth side. Then, of course, we have to understand their products. We want to know how they're going to do in the future. We're going to use those products to develop our DCF statements, our discounted cash flows, which are always estimated, but there are some very smart people in this industry who do really good fundamental work, and they're pretty good at estimating and predicting where companies are headed. And then there's that complex world of the competitors, right? Samsung selling better phones than Apple. Is there a new regulatory concern on the horizon? Is there something that's going to affect their supply chain of chips or parts for their hardware? Is there something that's going to impact their streaming services? All of that competitive landscape could be factored into your model in understanding the company. But if you are an investor, not a gigantic private equity firm, you're not buying the whole company. You're buying shares of that company. So your analysis isn't complete until you look at the stock, right? And for that, you have a totally different set of data. You're going to look at the price at which it's trading and where it has been trading. You're going to look at volume, right? Is the market enthusiastic? Are they participating in this trend? Are there more and more buyers at higher and higher price levels? We could look at we could look to the futures market. Look at things like open interest. We could look at the commitment of traders reports. We could look at a lot of different data sets to get a sense of the market internals. And of course, we want to understand supply and demand relationships, not just for shares of Apple, but for shares of the technology sector, shares of large cap, shares of. You can look at supply and demand relationships across a number of different lenses. US equities versus the rest of the world, equities versus other asset classes like fixed income, commodities, currencies, cryptocurrencies. So we have to understand that landscape. And then there's this psychology of the market itself. And that's the perhaps hardest piece to quantify for fundamental analysts. But I think this next slide is going to help explain how we do that as technical analysts. All right. If there's anything you take away from today's presentation, I want you to understand that technical analysis and fundamental analysis are inextricably linked. One cannot exist without the other. And I don't think there are a lot of technical analysts that you'd find online that really talk about this. And I get to work very closely with David Lundgren. He's a veteran portfolio manager. He's been with big Boston firms for most of his career and now a hedge fund manager. But while he was at Wellington and Fidelity, he would talk with the portfolio managers about this equation, this elegant formula. And so if you were to look at portfolio managers and categorize them broadly along their various styles, you could have value managers, right? People who are looking for something that has been beaten down, that is very cheap relative to their estimate of intrinsic value. You could have growth managers who are looking for companies with innovative new technologies or product offerings that justify a higher valuation, growth managers. And then there are the price folks, the trend followers, the folks who care about technical analysis. Now, this formula is so elegant because we can see that price only exists alongside the growth factors and the valuation metrics, right? That price is simply the earnings per share estimate multiplied by the PE estimate, and that's what drives price. If you ask any CMT charter holder, they will tell you that long-term price trends are driven by the fundamentals, right? It's not just behavior that makes Apple a great outperformer for more than 3 decades, right? It's because they have expanding return on equity. It's because they have things that add to the value of the company. Now, the other thing that you should take away from this formula, from this equation, is that we are all in this together. So if you are a fundamental manager, if you're a growth investor, you need price to cooperate. And if you're a trend follower, you need the fundamentals to justify price trends. Otherwise, you're trading meme stocks, right? Those aren't going to be long lasting. Now, the difference comes in here, where we can see this B, the behavior or sentiment factor of the markets. And now what is happening on the right side of the equation is all subject to the behavior and the psychology of the crowd, of investors writ large. Now, we know that B changes depending on the mood of the market. And so in bear markets, it's going to be a fraction below 1, above 0. But when we've had a raucous bear market downtrend for a long time, people are pessimistic. And so no matter how good the growth story is or how cheap the valuations get, price doesn't move because the bears are in charge and nobody wants to be purchasing equities. Now, in a rampant bull market, that can inflate to whole integers well above 1, right? And we've seen at the end of big bubbles, things like the PE ratio. We saw fundamental analysts in the late 1990s and the tech boom say, no, you're reading it wrong. The equation is price to eyeballs, because there is a reason to invest in these .com companies, and it's not because they're profitable, right? Price to eyeballs. So we know that in bull markets, the greed of investors can inflate prices on this side, even when the fundamentals don't support it. Now, the differences, and there are 2 key differences between the technical and the fundamental side of this equation. The first one is the perspective. So every morning, if you're a fundamental analyst and you are coming into your office to manage your portfolio, you are looking for areas where the market is wrong, where price is not reflecting your estimate of intrinsic value. And I'm not taking a dig at the fundamental side of the house, but that is the perspective, that there are inefficiencies in the market that you can take advantage of. For many that are really good at this job, that works that works really well for them. They focus on the right side of this equation. Now, the other side of the equation, all of us trend followers, we believe that the market is always right, because the market not only understands everything under this F and this V, but it also is capturing these things that we can't quantify, the things we couldn't possibly know, right? And it's all showing up in price. The market knows everything that we know and what we acknowledge that we're missing, things that are missing from our models, but it also knows these things that we couldn't possibly understand. The market knew that there was a global health pandemic long before most investors understood what a coronavirus even was, myself included. Now, the other key difference is in complexity. So let's just imagine that the growth story of any company, if this was a hyperlink and we could just click on the F and open up Pandora's box of free cash flow, margin expansion, return on equity, what growth factors do we want to look at? And the same thing for the valuation. How do you calculate your intrinsic value? And for each manager, it's slightly different, right? There are lots of debates and lots of different pieces of data that they could build into their models. On the left side, if we were to click this P, open the hyperlink to price, it's just price. Price is this beautifully elegant, very fact-based. It's not an estimate. It's not restated. The price is the price. And so when we close out the day or we close out the week for an index or for an individual security or any commodity, that price is the fact of what investors were willing to pay at that moment. And so there's an elegant simplicity on the left side of the equation. And if we come to our desk every morning believing that the market is right, believing that price is the true assessment of how everybody is feeling and being aware of all these fundamental factors, and it's a very powerful consolidator. We can just look at price and get a take on everything that's happening on the right side of the market. Dave is commonly telling folks that the market is the best fundamental analyst on the planet. The market is doing the most research because it has access to all information that's publicly available and the stuff that's not. Now, all CMT charter holders agree on the importance of fundamentals, but we hire the market to be our fundamental analysts and do all that research for us. And the last point on this slide is that at the end of the day, everyone in the marketplace is a trend follower. So if you buy something because it's really beaten down, you think it's a great value play, you need, as quickly as possible, for the market to agree with you for that to start going up. Same thing for growth investors. They found an exciting, new, disruptive company with great technologies. They need everybody in the world to recognize that same thing that they're seeing as quickly as possible. Now, I'm going to cruise through a few of these next slides just to keep us on track. But Dave talks about his portfolio construction and that there are only a few things that are non-negotiable, right? The quality of the fundamentals, that's great. The valuation, that's great. But the only things that are going to make it into his portfolio are the things that are trending and outperforming, right? And the best portfolio is going to be constructed of all securities that fit right in the middle of this Venn diagram. They've got a low valuation, they've got great quality of their fundamental growth factors, and they are trending and outperforming. Everything up here that has a fundamental factor present but not trending and outperforming, that's on the watch list. Eventually, the market will come to realize what those fundamental analysts are seeing, and it will begin to price that in, and that's where we see trends. The herding principle is just one of the many terms that the behavioral psychologists have given us as a lens into why technical analysis works so well. And it was in 2002 that Daniel Kahneman won the Nobel Prize in economics, which I found fascinating because he's not an economist. He's a behavioral psychologist, but many others have talked about the cycle of emotions, both at an individual security level and at the index. And it's that behavior that's so difficult to quantify. But luckily for us, it shows up in price, and we can use some tools to stay on the right side of those trends. I've been talking for a while, but I got to bring in a couple of quotes in today's presentation because Some folks have said this better than I ever could. Mark Abraham is a celebrated trend-following hedge fund manager, and he says that ultimately it is the dollar-weighted collective opinion of all market participants that determines whether a stock goes up or down, and that consensus is revealed by analyzing price. I want that to sink in. It's the collective wisdom of market participants that's going to determine what's going up or down. What he's talking about is supply and demand. And if you took an Econ 101 class in college, you probably saw this chart. At a fixed rate of supply, an increase in the demand curve is going to move us up the price equilibrium. More demand, higher prices. Less demand, lower prices, right? And it's those behavioral psychologists that gave us lots of terminology to explain what's going on. They talk about the anchoring bias. Technicians talk about areas of support and resistance, right? At areas of resistance, you're going to see some sellers step in. It's reaching a price at which they are willing to part with the shares that they own. That's going to decrease demand and create some headwinds for price to move higher. Now, we've got some great examples of behavior affecting markets. And Roaring Kitty came back out a couple of weeks ago. I'm sure everybody got excited about a stock moving another 100% a day for a couple of days. But this isn't based on any kind of intrinsic value. And the market never ceases to amaze me in doing the most outrageous things possible, right? Nobody could have predicted that a group of retail traders on a Reddit subthread could actually create such a short squeeze that Melvin Capital went out of business. And this recent move is perhaps a little shorter, perhaps a little more violent than last time. How about something like cryptocurrencies? The entire basis of your analysis for any coin or any crypto has to be based on price. There are some advances happening on-chain analytics, but trying to create a fundamental valuation for the coin itself doesn't make a lot of sense to me. I'm hoping my daughter, who's 10 right now, can explain it to me in a few years. I understand the intrinsic value of distributed ledger technology, but what is a Bitcoin worth? And how do you do fundamental analysis on that? To me, the price is the thing that we need to be paying attention to. All right. As chartered market technicians, what is our objective? Why are we using technical analysis? And the idea is to participate in trends, right? The meat of the move. You want to position yourself on the right side and trade with the markets. We also want to remove doubt, confusion, uncertainty, all of those behavioral biases that Daniel Kahneman and the psychologists had come up with. We all suffer from them as money managers, as traders, right? Have you ever had a position that was just a short-term trade, but it started working against you and your little internal monologue started calling, well, no, that's an investment. I believe in this company. I'm gonna hold on to that, even though it's down 50, 60, 80%, right? That's not a rules-based approach. Using hope as your investment strategy is not going to work out long-term. So we want to be objective and stick to rules. John W. Henry is another great trend follower. And I think this statement really encapsulates why technical analysis is so powerful. Because if you can take emotion out of your investing practice, out of your trading, and if you can just look at what is actually happening, be able to quantify that, put some rules around what you see, create actions on your part that reflect what is happening in the market, you've got this huge advantage, right? You're not going to stubbornly hold something that's not working. You're not going to stubbornly sell something because it seems expensive based on your estimate of intrinsic value. The market might push it higher, might know something that you don't. All right, we're halfway through. It's time for the audience interactive portion of today's presentation. And I know it's an online webinar. We can't see you or hear you. You can shout it out at home or type some answers into the chat. But I want to ask you a few questions that hopefully will illuminate this challenge that we all have in front of us, which is trading the markets. So the first question I have is coming from a set of data compiled by Terence Odian, who is a Berkeley Haas School of Business professor. And he and his fellow researchers looked at 360,000 individual day trading accounts, and he looked at their returns over a 15-year period. My first question is, What percentage of all of those traders lost money over that long haul? So you've got 5 choices. About a third, a little more than a half, 68%, 3/4 of them, or 87% of the traders in this study. And I'll give you just a second. Let me know, how many do you think lost money over that 15-year period? All right. Here's the very depressing answer. 87% of the trading accounts in their study, and this is very statistically significant data sets that they're looking at, 87% of the accounts lost money or negative over the long haul. That means that less than a third of 1%, only 1 in every 360 traders, were actually consistently profitable year over year. Now I've got a follow-up question for you. And here's the bright side. Question 2. Same group of researchers, they looked at individual trades this time. Rather than looking at the whole account, they looked at, they went to an FX broker and got a bunch of data on 15 different currency crosses, and they looked at 43 million individual trades. Now the question is, what percentage of their trades were profitable? 13% of the trades, 18% of the trades, 27% of the trades, 39%, or over 50%? What was their win rate? And if you've seen this presentation before, you'll be happy to hear that over 50% of the trades were profitable. They had their directional bet correct. Here's some of that data from Terence Odian. The average retail trader has a win-loss ratio greater than 50%. They have an edge in the market. They are directionally betting correctly. So why do so many lose money? Well, they are right more often than they are wrong, but they are not managing risk. And what I'm getting at is the position size of their trades. The average loss per trade far outweighs the average profit. So now let's get to these technical tools, the disciplined approach that we're talking about to manage risk in your portfolio. And now we got to talk about the expectancy formula. And this is why behavior can limit our gains. It's the prospect theory that Kahneman and Tversky wrote about in the 1970s, which told us that we experience far more pain from a loss than we experience joy from a gain. And this doesn't just apply to the stock market. This is how human beings are wired. We are very afraid of acknowledging that we're wrong. So what does that look like in your portfolio? Well, if you don't close the position, then you haven't admitted that you're wrong, right? You keep holding that stock, you can dollar cost average and buy more on the way down. All of those really awful behaviors that can destroy a portfolio. So the expectancy formula, all we're looking at is the percentage of winning trades multiplied by the profit ratio. And that gives us this efficient frontier. This is where our system is going to break even. And I'm guessing everybody on this call has a system of some sort, right? And if you don't, then I'm really glad that you're here on this conference. Let's just pick on this dot for a second, right here. 50% win rate. Okay, so your analytical process for choosing what goes into your portfolio, what do you buy, might be no more complicated than a coin toss. 50-50, heads or tails. If it's heads, we buy it. If it's tails, we don't buy it. Imagine, right? You don't look at any charts. You just flip a coin as you go ticker by ticker. You can still break even with that 50% win rate if you are managing risk and your profitable trades, you hold those winners and you cut those losses. So a 2-to-1 ratio on profitability. Now, there are some incredible hedge fund managers who live somewhere up in this region. People like David Harding of Winton Capital in the UK. He's a systematic trend follower. He holds a very diversified portfolio, thousands of securities, very small position size on each one. And what he's doing is managing the risk in the portfolio in order to stay profitable. And he's looking for those long tail events where when something is trending, he can lean into it. He can add to that position size. He can hold it through the full length of its trend. And that's where you get these very heavily outsized profit ratios. So 5-to-1, 10-to-1, right? Paul Tudor Jones is very happy to take a big bet on something that's working. And they might pyramid into their position. They might add to it as it continues to trend. And so there is a bright light. You don't have to be right 100% of the time. In fact, you need to get comfortable not being right all the time. You're going to buy something and it's just going to immediately start working against you. You got to close that position, take the loss, and move on in order to be profitable over the long run. And that is a lot of what we talk about in the CMT program, is devising your system, your set of rules and tools that you're going to use to stay on the right side of trends. So it's not just about your edge in analyzing markets and picking the right security, but it's also your trading discipline. How do you manage those positions once you hold them? So let's dive into just a couple of very basic concepts in technical analysis that will help you in your trading process. This is where you might want to sharpen your pencils, write some things down. We're going to talk about three things: multiple time frame analysis, relative strength, and market breadth. Let's dive into this idea of looking at multiple time frames. And if you've ever heard this phrase that markets are fractal, hopefully you're not scared away by big words. It just means that multiple time frames, you can use these technical tools in the same way, whether you're looking at weekly charts or daily charts or your intraday, minute by minute tick data, you name it. But the idea of multiple time frame analysis actually goes all the way back to Charles H. Dow over 130 years ago. This is kind of the OG technical analyst here in the United States. Charles Dow was a reporter for the Wall Street Journal, or he basically founded the Wall Street Journal. And the Dow theory was compiled from a lot of his writings as he was observing markets. Now, no computers, no big data analytics. He was simply looking at price, right? Looking at the ticker tape. And what he realized, and being an accomplished nautical sailor himself, he characterized the market according to multiple time frames and used this analogy of the seas, of the oceans. And he said, in all of our markets, there is a primary trend, and it is like the tides of the ocean. This is the trend that is based on the fundamentals. The long-term trend is not flapping back and forth based on the whims or the fear and greed of market participants. It is based on expanding gross domestic product, right? Rising GDP and a healthy economy. It's the individual companies that are doing great things to build great products and increase their profitability. That's what's driving the primary trend of the market or of individual securities. But he recognized that just like the oceans, there's a secondary period, which he compared to the waves of the ocean. So you can have high tide and low tide, but you also have waves coming in, crashing on the shore. And at high tide, those waves are even higher, right? At low tide, those waves are even lower. So if we think about price action, moving along that secondary time period, we can see things elevate above and get depressed below what we might define as the primary trend. And this is a personal thing for you. Your multiple time frames, if your execution time period is on an hourly chart, you might look for an entry on a 5-minute chart, but you might need the context of a daily time frame or a weekly chart to see what that primary trend can tell you. You want to trade with the direction of that underlying primary trend. Now, he also noted this tertiary period, or the minor trend, as Charles H. Dow called it, and that is the ripples on the surface of the water. And that's the intraday speculative activity of market participants. That's where you can see price reacting to the story of the fundamentals. And so this third period is almost entirely behaviorally driven. And this primary period is almost entirely driven by those expanding fundamentals. What's great for all of us on this call is that we can use them to our advantage. So let's take a look at the S&P 500, right? We're at all-time highs. It's a bull market, but how do we define that, right? Well, on a weekly time frame, we're seeing price action above its 200-day and above its 50-day moving average, right? Everybody's familiar with moving averages. I won't take the time to explain now. But when we had this, this period here of seasonal weakness, and we came in and hit those October lows, right? price never went below its 200 period moving average, but we saw a pretty fair and orderly downtrend in the markets. And we broke through the 50 period moving average. That's 50 weeks. This is 200 weeks. And each of these bars are telling us that we have been above the 50 period moving average since the end of last year, right? Here was that little seasonally weak period, October, November. We hit the low at the end of October and just took off. And what we saw recently was a few down weeks, but we didn't even come close to the 50 period moving average. So on a weekly chart, we're not even worried about this contraction within the uptrend. The uptrend was still healthy. Well, maybe your time frame is not on the weekly chart. It's helpful to understand that the primary trend is to the upside, and we could extend this out. We could look at monthly or quarterly candles as well. But let's dive in. So this was our weekly chart. What does it look like on the daily? Well, on the daily, we actually broke through the 50 period moving average. That was a sharper correction if we're looking at tighter time frames. And in fact, in this period, we actually crossed below the 200-day moving average, right? Pretty scary for investors. Nothing good has ever happened to bull markets below a 200-day moving average. So your risk tolerance and maybe your rules, if the daily time period is your executing time frame, you may have sold out when we broke below the 50-day or broke below the 200-day, right? That's pretty destructive activity, and bought back in when we crossed above. Same thing for this recent pullback. We did cross below a 50-day moving average, and that may have been a signal to many to get out. Maybe you like classical technical analysis, and you would annotate a trend line right along here that we tested over and over and over and over and over again. Let's say the more tests, the more significant that trend line was. And when we broke it, that might have been one of your signals to get out. But we could go down time frames endlessly. Right now I'm looking at a 39-minute bar, so 10 bars per day. And this little contraction, well, we were well below the 200 period moving average, and we were certainly below the 50. But here we saw price gap higher through both, and we saw the 50 period cross above the 200 period. We've come back to almost retest it and almost retest it again. But that trend looks pretty healthy on the 39-minute. So as a multiple time frame investor, let's say you're executing on a 39-minute time period, you might look to this primary trend, right? Here is where the daily broke back above its 50-day moving average. You might look for a sensible entry on your 39-minute, right? Getting in maybe somewhere around here, maybe at a slightly lower price, right? That's what I want to encourage all of you to do, is whatever security you're looking at, think about your executing time frame, think about your analytical time frame, and then maybe think about paying attention to that primary trend. Where are we in the context of the longer history? Next tool, relative strength. Now, we were talking about absolute trends, absolute price action on the S&P 500. How about the S&P 500 relative to other equity indices or relative to other asset classes? Relative strength, as defined by Martin Pring, right in the CMT curriculum, all we're doing is taking a ratio. We're looking at two different securities, dividing one by the other. So we could look at an index, we could look at a sector group, we could look at two individual securities, or a security against its industry group or sector or index. So let's use an example. Growth over value. And I'm sure you've heard a financial advisor or a talking head on financial news media talk about growth versus value as styles of investing. So we can build an index of growth equities, and we can look at value shares. And just as a case study, let's consider the pandemic collapse. So here's growth and here's value. And if we were just eyeballing these charts side by side, they look really much quite the same, right? They both collapsed in the COVID pandemic. They both took off to the upside after February of 2020. Well, we can use a relative strength line to divide one by the other and tell us which one is outperforming, right? We can look at the trend of that relative strength line to see whether we should be tilting towards value or growth. So what's fascinating to me is that growth was outperforming value, rising faster than value ahead of the pandemic collapse, weeks ahead almost a month ahead of the market really tanking, we could see that growth equities had really taken off compared to their value counterparts. And that continued, not just through the collapse, meaning growth went down less than value. Value was accelerating to the downside at a faster pace. You were losing more if you were holding value shares like oil exploration companies and consumer staples, or excuse me. But what we also saw was that when we had rising rates, when we saw rates starting to spike to the upside, value outperformed growth. Isn't that interesting, right? And as we came into the end of 2021, we saw that bear market in our tech darlings really take hold. All right, that's the concept of relative strength. Remember how I was talking about fundamental and technical analysts really needing to work together? Well, here's how a fundamental analyst might use something like relative strength. You could simply rank all of the industry groups, right? This is what a generalist portfolio manager could do. They could rank everything based on its trend of outperformance, and then they could throw into their table all of those growth metrics, the profitability, the valuation, right? So growth, quality, and valuations. And it's going to give them some context about what's happening in the market. What is the market like? Well, right now, that what we're seeing on this table is that the market is choosing companies which are profitable. So they have some quality and they have great growth factors, but they're relatively expensive. The market didn't care about valuation at this point in time. So we want to be overweight the things that are trending and outperforming, and that might mean that we have to hold our nose and buy some overpriced tech stocks. All right. Now let's take a look at a more specific example. That generalist portfolio manager wants to allocate into chips manufacturers, right? Semiconductors. That's one of the leading industry groups. So we could look at the entire index of semiconductors that tanked during the pandemic and then took off. But we could look at the relative strength line of semiconductors versus the S&P 500 and look at how well it held up, right? It was going down slower, going down less during that pandemic collapse and took off even faster. So that's a good bet. It's trending and outperforming. Okay, well, that's the generalist PM. And you might just look at all chips manufacturers, everything in the semiconductors index. But a research analyst on their team would give them those companies that should be overweight and those that should be underweight or even shorting. And so we can see that all semiconductors are outperforming, but how are the individual companies doing relative to the semiconductors index, right? Chips company number 15, and I deliberately took all the names off this. Chips company number 15 is clearly off, right? It's not performing the way the rest of them are. So let's compare and contrast. We can look at chip company number 1 and chip company number 15. Obviously, the charts don't look the same. This is one we want to own or have been owning, and this one recovering a bit, but not even breaking above prior highs. Now we can look at the relative strength of that individual company to the S&P and that individual company to the sector group, to the industry group of chips manufacturers. Well, chip company number 1 is outperforming the index and outperforming its industry group. Chip company number 2 is relatively flat with the S&P 500, so semiconductors are still a good bet. But look at how it's performing relative to its industry group. That's a company that doesn't have good F and V in that P equals F and V formula. So we want to short it or at least be underweight. All right. I know I'm moving really fast, but let's talk about market breadth. I was a huge fan of the Chicago Bulls in the 1990s. And of course, everybody looked at Michael Jordan, the star player of the Chicago Bulls, the greatest of all time. But if you look at how that team was put together, I mean, they had Scottie Pippen, they had Dennis Rodman, they had an entire team where everybody on the team knew how to do their job. They were the best at rebounds in the league. They were the best at free throws in the league. They were the best at almost everything. They played great defense. They played great offense. And it wasn't just the Michael Jordan story. Well, same thing for markets. if we are seeing a trend at the index level, but we don't see expanding market breadth, meaning the average company is not participating in that uptrend, that's really worrying, right? Because they're going to get to the championship and they only have one player that can score points for the team, and they don't play defense well. It's not going to end well for them. So we look at market breadth to get a sense of how deep the bench strength is in a trending market. And the analyst might ask, is it just a stock market? Do we only just talk about the S&P 500, or do we talk about a market of stocks and take a look at that whole basket? So, textbook example, we could use something like the advanced decline line. And this is current, so the number of advancers versus decliners on the New York Stock Exchange. And we have seen tremendous breadth improvement over year to date through 2024. And it really began off that November low. So expanding market breadth at a time when the market is reaching new highs, that's the lifeblood of bull markets, right? You want to see breadth expansion. And when breadth really craters, that could be a sign of bottoming. Let's take a look at that in real time. This is the Russell 3000, and we've got the advanced decline line here on the bottom. Fascinating to see. The average stock in the Russell was collapsing well ahead of the index rolling over. That's the weekly bars going into the pandemic free fall in spring of 2020. Now, the other fascinating thing is that the index recovered, but we didn't really see breadth expansion for a while. And here in the late spring of 2021 and over the summer, we saw the index reach into this channel, and it was really range bound. It wasn't really going anywhere. And yet, look at what was happening, breadth expansion. So the average stock, and we're talking about a lot of different small cap companies, were catching up to the trend. They were participating all of a sudden. And so the good news for everybody on this call, and for me included, is that we don't have to rely on just the index for returns. We're not passive indexing financial advisors. We're trading the markets, which means with an active approach, that's a raging bull market. It's just silent when you're looking at the index level, right? In a cap-weighted index, a lot of those small cap companies can be going for great runs, and it's our job to do the work under the hood to get at those companies that are trending and outperforming and construct a portfolio that will work for us. Divergence analysis is very, very simple. And the only point that I want to make for you all is that any number of indicators might be in your lower panel. Your most important indicator of all, the thing that you are going to buy and sell based upon, is price. Price is your most important technical tool. But you can look for divergences to tell you when a trend might be exhausted. And so here we're looking at an RSI in the lower panel. We're looking at price in the top panel. And this is the divergence. Now, it didn't take shape the first 3 times that we saw this bearish divergence, but eventually it showed us that that trend was exhausted. And here's what I mean. This bearish divergence, this momentum indicator in our lower panel, it was surging and cooling, surging and cooling, surging and cooling. But when it surged, at each new higher price point, we saw a lower high in our momentum oscillator. What that's telling us is that fewer and fewer, less enthusiasm is coming in from the markets as this security reaches higher and higher price points, which means, yes, it's still trending, it's making higher highs, but there is less enthusiasm about that, and that trend might be showing signs of exhaustion. Same thing down here, we have a bullish divergence, prices in a downtrend, the momentum oscillator made a higher low, and then we see price action take off to the upside. We've got a few other examples, but I really want to, in our last 5 minutes together, just talk to you about the last section of today's talk, which is with the CMT Association, what enrollment in the CMT program might do for you, how you can anchor your trading in some of the best knowledge from some of the best practitioners in the world. So first things first, what do you learn in the CMT program? A whole lot more than just breadth, relative strength, and divergence analysis. We cover a very wide range of topics under the technical umbrella. We're looking at intermarket relationships, correlated data sets between asset classes. We're looking at cycles and history. We're looking at trend and momentum and mechanical indicators. And we're also looking at everything in a portfolio management context. So not just single security trading, but how could you think about constructing a portfolio and trading all of the positions inside there? We're going to use a lot of quantitative systems to understand the tools that we want to use, develop our own approach. So signal testing, understanding what the win rate is of any particular situation or scenario or combination of indicators. But also, if you have that system, what do portfolio returns look like? Let's back test that, and let's understand whether our trading strategy is robust through multiple different market cycles, or whether we've perhaps overcomplicated and overfit things. And of course, we're going to talk about applying these concepts of behavioral finance into not only our own trading psychology, but also how to use them to our advantage when we see these extremes happening in markets. It is a very practical course of study. Every page that I turned in these textbooks, every new lesson that I learned was another indicator I could put on my charts, and was another concept or tool that I could use to my advantage. So what is the CMT program? Well, the credential is globally recognized by employers, by regulators, by industry elite as a standard of competence, meaning doesn't matter how you were born, where you come from, what undergraduate program you graduated from, whether or not your daddy worked for Morgan Stanley, it equalizes the playing field. And it tells everybody who is a hiring manager or allocator to a trading strategy, a fund, that you have taken the time and the rigor to develop this process, this rules-based approach. So it's a globally recognized credential, and it consists of 3 levels of examination, as you'll see in the 3 textbooks. We offer those exams twice each year, in June and in December. I'm sure there are some folks on here who are sitting for the June exams coming up in just 10 days. I wish all of you absolute success on whatever level you are taking, but don't get too disheartened if you need to retake a level. That's all part of the process, and certainly not something to take personally. For those of you who are interested in enrollment, we did open for the December cycle of the exams, and I'll point that out here in just a second. You take the tests in sequence, so you got to finish level 1 before you move on to level 2. The knowledge is scaffolded, which means we build upon things that we cover in level 1, at level 2, and then at level 3. And then you can only sit for 1 exam per cycle. So June, December, and June. If you were to pass all 3 levels on your first try, you can finish the program in 12 months. But they are quite rigorous. There's a lot of reading and a lot of study time involved. So just take them one at a time. We've talked a lot about the knowledge domains and what's covered. The curriculum itself is published formerly Wiley, now UWorld, and that's the link right to their site if you want to pick up a copy of the textbook. It's an amazing consolidation of a lot of different topics in technical analysis from the best authors out there. And if you were interested, the good folks at UWorld asked me to share a discount code with you. If you want to pick up a copy of the 2024 official curriculum, you can use that code CMTTW30, and that takes 30% off the textbooks. All right, but more importantly, not just what are the exams and how do you get the curriculum, why would anybody give up all of their nights and weekends and their free time to study technical analysis in this way? Why not just watch a few YouTube videos, or maybe go to a conference once in a while? Going through the CMT program and earning that designation has a big impact on people's careers. And so we do a lot of survey work and reporting by our candidates and charter holders 1 year after earning their designation, massive career changes. And the one I want to point out is this one. Over 60% reported more responsibility 1 year after earning their CMT charter. And what they were talking about is assets under management. They had greater allocations to their fund, to their portfolios after earning the CMT, because clients or their firms trust their approach, trust that they have a rules-based methodology, trust that they have a responsible approach to risk management. And if that's you, if trading for yourself might turn into a prop fund or a hedge fund that you would want to bring to institutional allocators, a CMT after your name is the thing they're going to be looking for to make sure that your approach is robust. I'm just going to pop through the rest of these. We do have an academic partner program, and for those of you who are university students, feel free to shoot me an email. But the last piece is just for those of you who are interested in getting started in the CMT program. I am happy to be a resource for you. You've got ample time between now and the December cycle. If this is something new for you in pursuing, you can go to cmtassociation.org/enroll, and it's right up on our website. We'll link you to the right spots to get you set up for the December exams. It's an online conference. Happy to connect online if people still use X or LinkedIn. Those are my handles. Feel free to shoot me questions or just send me an email, tyler@cmtassociation.org. And if the program and the exams aren't in your future, perhaps that's not a career path you're interested in, but you're just looking to learn more and to have some access to the world's best money managers and research analysts, I encourage you to join the CMT Association as an affiliate member. Like I mentioned before, there are no special requirements or prerequisites. It is open to everyone, and it is a really warm and inviting community that I'd love to introduce you to. So, Jeff, I know I went 60 seconds over. Nope, more than that. 3 minutes. Okay.
Oh my gosh. Well, I'll send you an invoice. Just kidding. The only question we had, you just answered. There's no prerequisites. Robert wanted to know if there's prerequisites for joining. My ability to speak is going to be worse tomorrow. So, all right. Thank you very much, Tyler.
Thank you very much. See you soon.
All right. Okay, let me do this. Okay. Yep. Okay. Want to say thank you again for them sponsoring the event, all that kind of stuff. So I'm going to go ahead and share my screen. I had mentioned a little bit just before we started, Tyler, the user interaction really does help quite a bit. And I was going to be picking out another prize based on somebody that had actually said something. Robert says, great information. Thank you. Learned a lot. Good. I'm wondering how we're doing. So like what I would like to do, and I'm going to pick a winner from a respondent, but if you've learned something in particular from the event, I want you to type it in the chat. For me, these events are great. They're helpful. But the real big goal that I have for them is to help people learn about technical analysis and that kind of stuff. So hopefully we're fitting with that goal. If you've learned something, if you've learned a lot, just let me know something specific in the chat. We'll give you a prize, maybe. Okay, so type that up in the chat. I'm going to give you a few minutes. While you're doing that, I want to say thank you to Stocks and Commodities Magazine. You can find out more about Stocks and Commodities Magazine at www.traders.com. And they've been publishing articles since 1982. They've got 1.3 million subscribers. And if you're a member of Stocks and Commodities Magazine, you'll get access to their 17,000 article archive. So there you go. Cool. All right. Also, CMT, he just talked, great organization, and TechnoTrader. Thank you, all of those, for sponsoring. Of course, we are MetaStock. We've been rated #1 in our price category 31 years in a row. If you're interested in getting MetaStock, we're doing an extended trial where if you buy a month, you'll get the second and third month for free. If you haven't gotten 19 yet, I'm sure you've seen all the fancy new charts that we're putting in. If you haven't gotten 19 yet, I'd recommend you pick it up. I love it. It's changed the way that I work with charts. It works really well with the way that I work with charts. So it'll allow you to scan the market, test trading ideas. Scott did a great job of showing the forecaster today. It'll give you real-time alerts and commentary and signals. For any of the offers today, you can go to metastock.com/conf promo. You can give us a call at 800-882-3040, or you can go to metastock.com/sales chat. Not a lot of people saying that they learned anything. Raju, let's see. Robert says, enlightening information, learned a lot. Thank you. Rod, it's a very good, somebody's going to get a book right now. But Raju says, great presentation by Tyler. Richard said that was comprehensive. It's helped fill the voids that I didn't know I had. All right. Let's go with you, Richard. I'm going to give you a little bit of today's prize. I appreciate that. The prize I'm going to give you is a book from Steve Bigelow. So Candlestick Profits, Eliminating Emotions. I'll get you a copy of that. I'll mail it to you next week. I will be sending you a message. I have your email address, so I'll be sending you an email next week about it. So Greg says my decision making has improved greatly. That's awesome. All right, very cool. Our next guest will definitely teach us something. I love Jeff Tompkins. He's got a great name. To just kind of give you some history of Jeff, Jeff started with a company, a website called Udemy.com. And he had a lot of people that on Udemy.com that were basically subscribed and learning to him about how to trade using technical analysis. Lots of people that had learned how to trade in the time that I've known him, for only just a couple years, which I actually think it's 2018 or somewhere in there. So for about 6 years now, and during that time, he's gone on to really create some really great products. He manages a hedge fund. He just does a pretty awesome job. I like Jeff because he's very, very educational when he talks. It's very easy to learn things and pick things up from him. So, Jeff, let's go ahead and bring you on. I'll get you started.
Great, I'm here. Thanks, Jeff.
All right, good. How's everything up in Idaho today?
Oh, windy,
Okay.
thunderstorms, downpours. Yeah, a little bit
I
of
hope
everything.
I hope it doesn't blow down. Till you
Yeah,
talk.
I don't know which direction it's coming from, but it's pretty erratic.
You can keep it. We
Yeah.
got some sun today, so that's nice.
Oh,
All
that's
right, I can hear you, and I can see your screen.
perfect.
I'll get out of the way. It's your turn.
All right. Well, thanks, Jeff. Yeah, it's always a pleasure to be here. Great to have all of you guys on today. We're going to be looking at my Slingshot strategy, which will help us buy low and sell high in volatile markets. And I'm going to also reveal how you can forecast markets up to 3 days in advance of an anticipated directional move. So a lot of good stuff to cover. Get your pen and paper ready. I'll read you a disclaimer before we do that. Trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options, and of course need a broker to trade securities and options and must meet suitability requirements. We're going to be going over some various results on our session today. Most of the results that I share are going to be real money, real world results. I prefer to use those when possible just to reinforce what I'm teaching you and show you that it actually has worked in real markets with real money. But just know that anything that I do share, whether it's hypothetical or real money results, we don't guarantee that anyone will mirror that performance due to, of course, things like the time critical nature of trading, brokerage fees, activity of other traders, etc. All right, so let's start out by looking at a few probably familiar faces to most of you: Warren Buffett, George Soros, Carl Icahn, Mark Cuban, right? These are all very famous traders and investors. The one thing they probably have a lot of things in common that led to their success, but the one thing that I think really sets them apart from other traders and investors is that, number one, they've mastered the psychological component of investing. And they tend to take a contrarian approach. So they kind of do look at markets in a different way than the bulk of retail traders do. And we all know, unfortunately, the bulk of retail traders aren't successful in the long run. So there's a lot to be gleaned from this. There's a lot to be learned. And a lot of that really ties into psychology. So when we look at why the markets are so difficult to trade, there can be a host of different reasons why trading and investing is difficult. A lot of it boils down to psychology. So this is a kind of a typical psychological curve as it relates to markets. And the way that it kind of progresses is when we enter a trade or investment, we typically will do that with some degree of optimism, enthusiasm, even exuberance and euphoria, as we're getting into this trade. Now, typically, most retail traders will do that when there's a high level of financial risk. So this, for instance, might be when markets are trading around all-time highs, okay? And that tends to be where there's a greater vulnerability of a correction or market sell-off. When that occurs, that can quickly transition to anxiety, denial, fear, despair as you watch this trade or investment that you entered with optimism move against you. Okay. Interestingly, this actually creates opportunity. Okay. So when there's a lot of fear and panic selling going on in the market, that is the contrarian psychological approach for the best time to trade and invest. And then this cycle can repeat itself over and over. And unfortunately, a lot of traders get trapped in this vicious cycle. Okay. So when we look at the psychology of failure, anytime we enter a directional trade, our goal is, of course, to buy low and sell high. That actually goes against our human instinct, believe it or not. And instead, when the security is going down, we sell it. And when it's already gone up, we buy it. We panic when the price is falling because we're afraid of losing money. And then we buy when it's rising because we're afraid of missing out. It's the FOMO mentality, fear of missing out. Okay, and this is, again, tends to happen at near market tops. To compound this problem, we're wired to repeatedly make the same mistake. So we'll buy high and sell low because that's what our emotions tell us to do. Without a solid trading plan, we're very vulnerable to our emotions. And even with a solid trading plan, we can fall victim to this trap. So if you're lacking a strategy that can identify momentum shifts, which means you don't know when to get out, or get in, or buy low and get out and sell high, this can pose a major problem for inexperienced traders and investors. So what we're going to do today is turn the tables. And I'm going to share a strategy and some indicators that can help us achieve that. Okay, so instead of being greedy when there's a high level of financial risk and fearful when it might actually be the best time to trade and invest, we're going to flip this around, take a contrarian approach, and use the old adage from Warren Buffett: be fearful when others are greedy. Okay, and this is a core component of his long-term success in markets. Okay, but the question is, how do we do that? So what I'm going to give you guys today to make it easier is reveal my Slingshot trade setup that's worked 100% of the time on the major indices. So if you apply this setup to like the S&Ps, the NASDAQ, the Russell, going all the way back to the dawn of the stock market, this plays out in the way that the methodology and strategy dictates every single time. Okay, it's that reliable. I'll show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top, how to apply the setup to any market in any time frame, how to eliminate the majority of your losing trades. I'm going to share a really simple order entry trick that can help keep you out of what would otherwise be a bad trade. And that's a key factor to successful trading and why we trade. If we just bought, if we're willing to be vulnerable to market sell-offs and adverse market moves, then we buy and hold, right? Then you don't have to worry about all the transactions. The reason we trade is because we're looking for an edge to be in the market when conditions are favorable as it relates to our strategy, and be out when it's not. Okay, that's really the core edge that trading gives us, is exposure, right? So we can limit exposure when conditions aren't favorable. So I'll show you how to do that. We're going to look at some trade examples together, and then stick with me to the end, and I'll show you guys how you can copy my success and get my trade signals that I use to make a living in the markets. So first, let's start out imagining if you could buy low and sell high without any guesswork. All too often, we use some degree of intuition or guesswork in our trading decisions. Well, there's actually one volatility study that's made this possible since the beginning of the markets. And it's a unique setup that I call the Slingshot, and it's allowed traders to buy low and sell high with 100% accuracy when you apply this to the major indices. Okay, so once you know the rules, and you will know those by the end of our session, you'll see how you can know ahead of time when there's a high probability of a market sell-off as well as a market rebound. It also, as I mentioned, warns of potential sell-off. So this can be used, for bearish positions. It can be used for bullish positions. The Slingshot setup encompasses all aspects of, trader bias. So whether you're bearish or bullish, and it can, if you have like a retirement account, a 401k, an RIA, and you're holding long positions, it can help you protect those at the right time. It can help you get out of positions and take well-deserved profits without seeing them evaporate. All of these things. And we're going to do this with very specific volatility bands. And these bands can't be stretched. Once they can't be stretched any further, they have to bounce back. So in order for market, price action to play out in the way that it does, there has to be volatility, right? And volatility, we'll get into this a little bit more, basically oscillates between contraction and expansion. So market volatility is either in a contraction or expansion cycle, and it alternates between the two. So you need to be able to understand like which cycle are we in, and what is the price doing as it relates to that cycle. Okay, and so this is how markets really work, and of course that all ties into supply and demand. But the rubber band effect makes it possible to accurately identify tops and bottoms in markets. Now I'm not speaking of like an exact to the penny top or bottom, right? I'm just speaking of general zones where we can have a high degree of reliability that markets are going to rotate lower or move higher. All right. So let's kind of take a look at what that looks like on an actual chart. This is a chart of the S&P 500 index. It's a daily chart back from early 2020 during the Corona crash. Okay. Now, if you were in markets or you recall, they were hitting new all-time highs back in early mid-February. Okay, and we have this major pandemic ensuing, all this uncertainty, all this fear, and in the infancy of the pandemic, there was a major market sell-off. Right? Now, remember, going back to that psychology curve, this is where most traders are going to be buying because markets have been in a strong uptrend and they have FOMO, or fear of missing out. But it's also where traders get trapped. So this is actually where we want to look at selling. Okay, if we have any long positions or we just want to put on a speculative short position. Okay, and of course, markets tanked dramatically. So we had a very significant sell-off of, I think, over 30% on the S&Ps in just a few weeks. But look what happens. So we're still in around the third week of March here. Okay, there's still a lot of unknowns as it relates to the pandemic. We don't have any viable treatment options. We don't have any vaccines. We don't, global economies are shutting down. All these major things are happening. So really, there's no resolution at this point. However, the S&Ps shot right back up to the initial volatility expansion level, okay, in just a couple months. So there was a buying opportunity here. Markets sold off to a degree that it attracted buyers, so it created demand, drove price back up, okay? And this is where we might want to look at selling, okay? So again, this is all related to the psychological curve in the contrarian approach. So when most traders are buying, we want to be selling. When most traders are selling, we want to be buying. And that's what the slingshot will allow us to do. So we're going to come back to this chart and apply the rules of the slingshot. I just want you to kind of visualize the psychological component of this and the contrarian approach. All right, so we're about to get into that. Before we do, I'll give you a quick background on myself. Again, I'm Jeff Tompkins. Great to have you guys here today. I have over 2 decades of experience trading the stock options and futures markets. Received my professional training as an intern at the trade desk back in the early 2000s at Morgan Stanley. I'm also the founder and chief investment strategist of Altos Trading. We currently have over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, as Jeff mentioned. I manage capital for my clients at Altos Capital. And the strategies and tools that I'll be sharing with you guys today are ones that I do use in my hedge fund and have allowed us to have positive years every year since we've launched the hedge fund. We've never had a losing year. So this is a unique opportunity to kind of get an inside look in the hedge fund world and how a hedge fund manager operates. I'm also the founder and creator of the Trade Turn Signal software, which I'll be talking to you guys about today as well. So by the end of our session, you're going to discover one trade setup that's never failed going back to the beginning of the market. In fact, it's so reliable, it's worked 100% of the time on the major indices. Hasn't failed even once. So once you learn this, you can go back and apply it to the S&Ps, the NASDAQ, the Russell, and you'll see that this plays out every single time, even in the Corona crash, as we just looked at. So it has astounding predictability once you understand the rules. Whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets. So you'll discover why volatility is one of the only leading indicators of market direction. So when we talk about implied volatility, right? Implied meaning that it's forward-looking. This is how the options market generates expected moves and whatnot. So it's kind of like the handicapping of volatility and there's no lagging component to it. So most indicators and strategies and tools that people use rely heavily on lagging components, right? So we're going to throw that out the window. How to identify when markets may be vulnerable to a sell-off. This alone can completely turn your trading around because it ties into the psychological fear component, right? So if you're fearful, like if you have a trade on, a bullish trade, let's say, or you have a buy and hold portfolio, right? Like maybe a 401k or an IRA, anytime markets get vulnerable or experience a sell-off, right, you become fearful and you might make decisions you might otherwise, not make. So it's important to remove fear from the trading equation, and this can help you do that. It's also going to help us identify when the markets are likely to go up. Okay, it can also help us to determine how far the market is likely to go up. So this can help us with trade management and where to place profit target levels. I'm also going to show you how to get your hands on a tool that will change your trading forever. I know that's a bold promise and can't make any individual promises, but that's my goal for all of you today. I'm here to change your trading forever for the better. And I make the statement because it's changed my trading forever. So I'm excited to share that with you. So let's start by imagining a slingshot. Okay, so as we pull a slingshot back, the muscle energy is transferred to elastic energy in the bands of the slingshot. After the slingshot is released, the elastic energy is transferred to the stone as energy of motion. And this is what's known in physics as kinetic energy. Okay, so kinetic energy, or the principle of kinetic energy, plays out in markets in the form of supply and demand. It's like when there's demand in a market, we have buying pressure, right? People want to buy the asset, they'll do so, and it'll drive the price up. Okay, so that's just the basic understanding you need to have. Now, as it relates to volatility, once the band becomes overstretched, it gives us a buy signal, and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, so again, this is that volatility, contraction, and expansion cycle that markets go through. Okay, so to do this, we're going to apply a volatility study known as the Bollinger Bands. So again, implied volatility is a forward-looking predictive indicator. Okay, and the bands can tell us when prices move too far from the mean or the average and is likely to reverse direction. Now, the Bollinger Bands will help us do that. So these are available on any retail trading or charting platform. They're available on the MetaStock platform, and they can help us pinpoint turning points in a security with quite astounding accuracy if you know how to use them in a particular way. And that's what I'm going to share with you today. Like any other indicator, there's an abundance of ways that you can use these and apply them to trading strategies. Okay, and unfortunately, most of them aren't, they might work short term and fail in the long term, right? Most of them, these approaches don't work long term, but this is different. All right, so now I've got the Bollinger Bands plotted here, and this is what the slingshot looks like. Again, we're going to come back to this and get into it in more detail, but just to visualize. Okay, so we have Bollinger Bands here, and I'll walk through those and give you the settings and all that momentarily. But what I want you to notice right now is price is exceeding the lower band, right? So there's 3 bands, there's a middle band and 2 outer bands. And in this scenario, price is exceeding the lower band. Okay, we get a sell-off. Okay, price sells off, which then ultimately creates demand, brings in buyers who drive price back up to the initial volatility expansion. Okay, so this is the basics of the slingshot. Now let's look at the Bollinger Bands here quickly. I won't go through all the details. Probably a lot of you are familiar with them, but if you're not, I want to make sure you have the background knowledge. All right, so the Bollinger Bands, in terms of calculation, right? So we take a simple moving average of the securities price. That's going to be the center band that you see on your chart. Next, we take the standard deviation of the securities price. Okay, the standard deviation is simply a mathematical measurement of average variance. This is where volatility comes in, because standard deviation measures how spread out numbers are from an average value. Okay, we won't get into the calculations, but that's what you need to understand to then go into the slingshot and understand how it works. Okay, so because standard deviation is a measure of volatility, when the market becomes volatile, the bands widen. When the market is less volatile, the bands contract. Okay, so just understand that for now. It's an important part of the slingshot. Okay, the settings that I use are typically the default settings on most broker and charting platforms. Okay, if not, you can change them. But I just use the standard default settings of a 20-period SMA or simple moving average, and a 2 standard deviation setting for the outer bands. Okay, so 22 setting. All right, now let's look at different, some common ways, different ways that the Bollinger Bands are used. Okay, and then we'll get into the Slingshot. So a common way that they're used is to buy at the bottom band and sell at the top band. Now the problem is price can hug the upper or lower band for extended periods of time. Okay, this is when we see strong directional trends. So this can work in sideways markets sometimes, but it can fail when markets go into strong trends. So for that reason, don't prefer that approach. Another common way is to use band contraction and expansion. So this actually is very valuable, and it is a component of the Slingshot. It can indicate an impending big move in a security, but the problem is it doesn't give us directional information. So we don't necessarily know in which direction the move will occur just by using band contraction and expansion. And again, I'll elaborate on what I mean by that visually on a chart. But for that reason, we don't use this approach by itself. Another common way is to buy or sell at the middle band. So this is kind of a mean reversion strategy. And this particular tactic can work in strong trending markets, but it can fail in sideways ranging markets. So hopefully you kind of see the theme here. Any one of these individual things can work in very specific market conditions and fail miserably when markets change. All right. What we're going to do is we're going to wait for the lower band to break. And again, I'll explain what that means. But this is basically where price hugs the lower band and ultimately rebounds to where the breach initially occurred. And this is the essence of the Slingshot. Okay, so this is a unique approach to using the Bollinger Bands. We're going to use these to help us buy low and sell high for more of a contrarian approach, right? So again, the Bollinger Bands, they've been around for decades, developed by John Bollinger. And he basically design these to identify when an asset is oversold or overbought. The reason that can be okay in certain circumstances, but the reason I don't really prefer using them that way is most of us know that an asset can remain oversold or overbought for as long as it wants to. Okay, so while it might tell us that it's overbought or oversold, it doesn't necessarily give us valuable information to make trading decisions is the key there. All right. Now the Slingshot approach is different. So as I mentioned, this is where price can exceed or hug a band envelope for prolonged periods during strong trends. So that could be an uptrend, it could be a downtrend. But what we want to do is wait for the lower band to break and then wait for a buy signal. And then we exit when price returns to the breaking point. Okay, this is where it ties into volatility, contraction, and expansion. Okay, so those are the key points. And then we'll look at some charts here in just a moment to visualize what that is and how the rules work. Okay, but it occurs with astounding predictability. Okay, so if you look at like the major market indices, they've all returned to the initial volatility breakout with 100% accuracy, going all the way back to the dawn of the stock market. So that includes the bear market of 2022, the flash crash of 2015, flash crash of 2010, crash following the 2008 mortgage crisis, the 2000 dot-com bubble, even the recent Corona crash, every black swan event, market correction, major crash, bear market, you name it, this Slingshot plays out. Okay, it can help warn us when that sell-off is potentially ensuing. It can help us protect long positions. It can help us speculate on bearish positions and help us identify buying opportunities when other traders are panic selling. Okay, so now we're back to this Corona crash chart that I said we'd come back to. Daily chart of the S&P 500. Now I've got the Bollinger Bands plotted. Okay, so I'm going to walk you through. This is a picture perfect Slingshot. Why I like to use this as one of my examples. And I'll walk you through how we do this. What first you need to notice on the left edge of the chart in February. Okay, markets are, number one, they're hitting new all-time highs. They're losing momentum, so you can see like the candles are, still they're kind of grinding higher, still got a bit of an uptrend there. But when you look at the high-low range, right, they're pretty narrow. That's pretty typical to see near market tops. Now, as it relates to the Bollinger Bands, what I want you to notice is they're relatively narrow. So if you look at the outer bands, they're pretty close together and they're horizontal. This tells us that markets are in volatility contraction. And when we're in volatility contraction, the only thing that can follow, unless markets just don't move at all, which we know is not the case, is volatility expansion. That occurred in the context of the Corona crash around the third week of February. Now, how do we know this? Well, this is the beginning of the slingshot. So around the third week of February, the S&Ps begin to rotate lower. And notice that they start to breach the lower band. Okay. We're also getting volatility expansion. This is a critical thing to understand and look for at the beginning of the slingshot. Notice how the bands went from relatively narrow and horizontal to diverging, while simultaneously the price of the S&Ps breached the lower 2 standard deviation band. Okay, so see that candle that breached that lower band? On that candle, what are the outer bands doing? They're widening or diverging. This is the clue and warning that, number one, there's a volatility expansion, and number two, because it's related to the lower band, it's likely going to result in a sell-off. Okay, this is where the band gets pulled back. Sure enough, that happened, right? We had S&Ps down over 30% in just a few weeks. That created buying opportunity, right? Eventually, markets can only trail a 2 standard deviation, move from the mean for so long before they rebound. So then around the third week of March, it created a buying opportunity. Okay. Notice what happens here. Price comes all the way back up to the initial volatility expansion level. Okay. This is the slingshot. So we would look at selling or protecting long positions at the beginning of the slingshot. We would look for buying opportunities when other traders are panic selling, and then we're getting out when price comes back up to the initial price level of where this all began. Okay, that's the slingshot. It's kind of like an upside down triangle. Let's look at some other examples. This is one of Apple, daily chart of Apple. Okay, what do we see on the left side of the chart? Okay, Apple's in a strong uptrend. Okay, this is what we call a reverse slingshot, but we won't get into that. We're just sticking with the basics for now. Okay, so market's trailing the upper 2 standard deviation band. It's in a strong uptrend. Notice right here what happens. Okay, while Apple was in that strong uptrend, the outer bands are relatively parallel, right? So they're moving in parallel. Now Apple starts to rotate lower. Interestingly, remember that approach I mentioned where a lot of Bollinger Band traders will buy at the bottom band and sell at the top band? Well, that would have been a bad idea during that uptrend if you were selling at the top band, unless you hit it perfectly, just right in the middle of the chart there before Apple turned over to the downside. Now we're at the bottom band. And interesting, we have like two, very obvious bullish candlestick reversals here, okay, right at that bottom band. I would venture to guess a lot of traders got trapped here. They thought, okay, intraday buyers are coming in off that lower 2 standard deviation band, driving price back up. We got closes back up within the range. But that's not what happened, right? If you bought here, you would have gotten trapped. Okay, this was a slingshot. How do I know? Well, look at that second red candle. It breached the lower band. What happened simultaneously? The outer bands diverged. Volatility expansion. And again, in this case, to the downside, the breach was to the lower 2 standard deviation band. We get a sell-off. Apple sells off into a strong support level around 168, creates buying opportunity, attracts buyers who come in and drive the price right back up to the initial volatility expansion level. And in this case, Apple went on to make a pretty significant move to the upside beyond this, which is an extension of the slingshot. So if we scale out of a position, we would take profits at this initial volatility expansion level. In this case, that'd be right around 196. And then we can, manage our risk by adjusting our stop to the entry price and doing what we call a runner and leaving the second half of the position open for additional move. Here's an example on the Qs. Okay, again, on the left edge of the chart, what do we notice? Well, markets, this is from back in 2018, markets were trading around all-time highs, but we're in volatility contraction because we have narrow outer bands trading horizontal until October 5th. We get a breach of the lower band and simultaneous volatility expansion. We get divergence of the outer bands. There's the sell-off, dip right down into a support level, creates a buying opportunity, price comes right back up to the initial volatility expansion level. There are actually three or four mini slingshots built into this. Again, that's more of an advanced component of basic slingshot strategy. So in the interest of time, we won't get into that. But there are little mini slingshots as well that can be played in here. But this is the big slingshot. Here's one on an intraday chart. So this can be applied to intraday timeframes as well. Really any time frame, it doesn't matter because it's all built around implied volatility and volatility contraction and expansion. So AMD, Advanced Micro Devices 5-minute chart. Okay, what's happening on the left edge of the chart? We're getting sideways price action. Prices oscillating between the upper and lower band. That was an approach we looked at too, and that would have worked out a few times, right? If you just bought at the lower band, sold at the top band, until it did not, right? We get the breach, we get the volatility expansion, and we get the sell-off. But as we've looked at all the other examples, it created demand eventually, and price came right back up to the initial volatility expansion level. Okay, again, that would be our profit target level. Okay. Now, we've talked about how to identify when the market's vulnerable to a sell-off, right? And that's the start of the slingshot when the bands are getting pulled back, prices breaching the lower band, we're getting volatility expansion, or the outer bands are diverging, and then we get the sell-off, right? But you're probably wondering, how do we identify the buy zone? Like, we want to play this to the upside and we want to come in and buy. And that's really the challenging part of the slingshot. And there's a number of approaches, right? So, but the trick is to identify when the band's overextended and ready to snap back. So this can be done using candlestick patterns, support levels, right? So if markets sell off into a strong level of support, that support level holds and there's confirmation of buying behavior and prices are starting to move back up. Those are some approaches that you can use and that I have used. They involve more discretion, right? So there's more discretion involved in terms of deciding when you would buy. Okay, so that's really the trick here. Once you get into the long position, we know exactly where our profit target level is. Okay, and again, that's the level of where the slingshot started. Okay, so my goal was to develop a tool or an algorithm that can give me accurate buy signals within the context of the slingshot. Okay, because I don't like to use intuition in my trading. So my goal is to do this more objectively and have reliable forecasts for market, trend reversals. So I spent over a decade. I spent thousands of hours trying to determine when momentum's shifting, when a new trend is starting, and eventually got a formula dialed in, an algorithm. The big challenge is I had to configure it to work on all time frames, duplicate the success across all markets, and something that was adaptable, right? So that it actually adjusted to market conditions, to volatility, and not only that, could give me an advanced notice of a forecasted trend direction or trend reversal. Okay, and this is a tool that we've developed in partnership with MetaStock called Trade Trend, and it gives us back accurate buy and sell signals near the outer channels of the Bollinger Bands, up to 3 candles in advance of the forecasted move. All right. It was, again, a big project. We had to formulate the right combination of momentum indicators, volatility studies, price action setups, and then do this so in a way that gives us a forecasted trend direction. So when we get a buy or sell signal, we're not just jumping in right then and there. We need some degree of notice. So if we're trading off a daily chart, that would be a 3-day notice. We're trading off a 5-minute chart, we have up to 15 minutes of advanced notice. And this is what's built into Trade Trend. Okay, so it gives us accurate buy and sell signals up to 3 candles in advance of the trend. And by the way, this indicator can be used outside of the slingshot. It can be used as a standalone. It can be used with other indicators and strategies like I'm sharing with you with the slingshot. But the key is it gives us accurate buy and sell signals up to 3 candles in advance of the move. And it does so with a proprietary momentum algorithm that reads the market in real time. It includes trailing stop levels to lock in profits on successful trades, to limit risk on losing trades, and it helps us manage the position based on what the asset that you're trading is actually doing. It helps us forecast short-term and long-term trends with quite astounding accuracy. It can be used with any asset class, whether it's equities, ETFs, futures, Forex, It works on any time frame. I love using this indicator for my option strategies. The bulk of my trading I do in the derivatives markets and specifically options, which is, any of you know who trade those, are heavily time critical. Options contracts have expirations, and you really have to be right on your direction, your delta, gamma, theta, vega, and if you're not, it makes it very difficult to be successful. The indicator doesn't repaint, so that means that when you get a confirmed signal on your chart, it's there for good. So you can go back and look at all the signals. They don't adjust just because something changed with the stock or the futures contract, right? Once you get a confirmed signal, it's there, it's set in stone. You know the exact entry price. It has built-in protection to avoid whipsaw market conditions, captures most of the trend before it reverses. It's designed to limit losses and let profits run. It can be used with any other indicator system for added confirmation. I love, as I mentioned, love using this with the Slingshot system, as I've shared with you today. It can help you trade without guesswork, right? So it gives you the exact entry price, the exact trailing stop levels, and the exact exit. One critical thing that's built into this algorithm that I mentioned at the start of our session can help eliminate losing trades is just a very simple type of order, okay? And this is programmed into the algorithm. So when it gives you a buy or sell signal, it's going to tell you buy at this price or sell at this price ahead of time before the asset ever even hits that price, okay? And to do that, we use what's called a buy stop or sell stop order. So the bulk, like if you look at the retail broker data and order types, the bulk of orders that retail brokers execute for clients are either market or limit orders. Now, for trade entry, I think an underutilized type of order that I use pretty much exclusively for directional trades. So I think an asset's going up or it's going down. If it's going up, I'd use a buy stop. If it's going down, I'd use a sell stop. And what that means is that if you get a buy signal, let's just say a stock, it's going to tell you a slightly higher price than where the current mark price of the asset is trading to enter. And to enter there, you'd use what's called a buy stop order. And conversely, if you're trading a short, putting on a short position, okay, the sell signal will give you a suggested entry price level below the current market price. And you would enter with a sell stop order only if there's follow through into that price level. Okay, and this can help keep us out of trades that never follow through to begin with. The beauty of it is it also pretty much gets us into a trade that's moving in the forecasted direction right off the bat. Because if it doesn't move, then if it doesn't hit the price, entry level, then we don't get into the trade at all. Okay. Now, as I mentioned, I use the Slingshot. I've used it in my hedge fund. I use it in my personal trading account. I use the trade trend indicator, and I do it with real money. So this is to reinforce that what I'm teaching you guys on the session today, I do actually do with real money. It's not just something I dreamed up and want to throw it out there and see if it works for somebody else. This is back from the Corona crash. This is my February statement. Now, in February, I noticed that the beginning of the Slingshot was, setting up. So I also knew the context of this, right? This major pandemic with all these unknowns. So I was very, very conservative for the purpose of, volatility, and who knows, there could be a sell-off, but it could quickly reverse. So I was conservative with my position sizing. I was putting on a small number of contracts and not, pretty like a handful of positions, all right? But using the trade trend sell signal that I got during the sell-off and the Slingshot setup, booked over $13,000 in the second part of February. But I also traded it on the way up because I got a buy signal after the Corona crash sell-off, right? Here, I'm still being conservative. I was putting on small position size, just 1, 2, 3 contracts, but I started putting on more positions because I was getting a lot of buy signals, and I knew that that there was a high probability of a market rebound to the upside. So by the end of March, I booked over $27,000 in profits, just using trade trend and the Slingshot strategy. So between February and March, when Traders were getting killed. People were panic selling. Hedge funds were going under. It was like an unprecedented time for hedge fund failures at this period of time. I booked over $40,500 in profit just using simple indicator that gives me a forecasted directional signal and the Slingshot strategy. Okay. This can be applied to any market. It can be applied to any time frame. It can be used with any size account. Okay. So these are things that, that I'm revealing to you today that you guys can put into practice. Okay. And the indicator will give us predictive buy and sell signals before the move actually occurs. Okay. Up to 3 candles in advance. So it's going to give us a buy or sell signal up to 3 candles in advance. Sometimes it might be 1, sometimes it might be 3, but we max it out at 3. If we don't get the follow through after 3 candles, cancel the order, wait for the next signal. So again, if you're trading off a daily chart, you have up to 3 days of advance notice of a forecasted trend direction or trend, shift in trend. If you're trading off a 15-minute chart, you have up to 45 minutes of advance notice when you get the buy or sell signal. It's forecasted or predicted every market crash and rebound in the history of the market with 100% accuracy. So if you apply the Slingshot or the trade trend indicator by itself and go back to every black swan event, every market crash, every bear market, you'll find the forecasted sell signal, okay, on the chart. Here's some examples. This is a flash crash of August 2015 on the S&P 500s. Okay, they were just moving sideways. Trade trend flashed the sell signal here August 19th, right before the flash crash. Okay, it also gave us a nice buy signal early October on that double bottom. This is the 2008 mortgage crisis. Markets are just kind of like wobbling sideways there. Trade trend flashes the sell signal around the 3rd week of May, right before markets lose more than half their value in the second half of the year. Also gave us a nice buy signal towards the end of November there. Going back over 2 decades to the 2000 .com bubble. Okay, again, we had this big bubble. Markets were hitting new all-time highs, which again, going back to the psychology curve we started with, means what? There's a high level of financial risk. There are probably a bulk of retail traders with FOMO or fear of missing out and buying into markets. And this is where they get trapped. Trade trend gave us a nice forewarning here in September before the bubble really burst and markets tanked. Also gave us a nice buy signal towards the end of September before markets rebounded. So guys, virtually every system will produce winning trades, right? The problem is they don't keep you out of the market when conditions are not favorable, and you end up giving back your profits on the losing trades. Okay, and that's what we've designed Trade Trend to help avoid. Okay, yeah, there's always going to be losing trades, but I'll share with you some actual screenshots from my real money TD Ameritrade Thinkorswim account. I'd also trade futures, just using Trade Trend. Okay. So yeah, they're losing trades. Okay. You can see I have losing trades in here. What I'll point out is that the losers are relatively small and contained when you look at them compared to my winning trades. Okay. And this is all just done with the Trade Trend indicator by itself. Okay. Over $8,000 in a day, over $6,500 in a day, over $6,000 in a day, over $5,400 in a day. And I'm just trading 1 or 2 contracts here, max. Okay, most of these are just 1 contract trades. Here's some more recent Trade Trend real money results. This was a Slingshot with Trade Trend. I did this just in 3 futures markets. Booked over, had over 26,600 in a day with over 115,800 in open profits on 3 positions. So just again, I'm showing this to reinforce that what I'm teaching you, I have done with real money. And this is a Slingshot and Trade Trend example. So now I want to make you guys a promise. Number 1, I want to help you guys have days like these. And I'm going to give you access to my tool that gives you accurate buy and sell signals up to 3 days in advance when you're trading off of a daily chart. Okay. Again, you can also use this on intraday timeframes as well. So this is a one-time opportunity to join me to discover how I make consistent income in the markets day after day, week after week. I reveal every one of my special techniques and indicators that make profits like this possible. I don't hold anything back. So you get all of the tools and information that I use. All right. So you get number 1, the Trade Trend indicator on the MetaStock platform. So you can apply this to equities, ETFs, futures, Forex, any time frame, right? So you get the indicator. You get exact entry and exit signals. So you're going to get a forecasted price, entry price, exit price, right, with trailing stop. You're also going to get live interactive trade sessions. So every Tuesday evening at 7 Eastern, I personally host a live session with all of our members. So you get direct access with me. And kind of like we did today, where we went through the Slingshot strategy, we go through different strategies on each session. We look at signals from Trade Trend. We hold a ticker roundtable, and you're going to get those. If you're not able to attend on any given week, that's okay. We do record all these. We post them in our members area, which you'll also get access to for the replays and recordings. But you get full support and personal coaching from me on these sessions. So I'm there hosting them myself. You can ask me questions. We do a lot of fun stuff on these weekly sessions. We also teach trade adjustments. If you trade options, I'm going to let you know here in just a second how you can get a full course of how to adjust losing trades. Okay, and a lot of these we can, mitigate a loss, or even in some cases transform a losing trade into a net profitable outcome. So I'll tell you here in just a second how you can get access to that training, which you'll love if you're an options trader. I also give you guys, go through any tickers that I'm looking at or currently trading on our live sessions. So you get a lot, but there's more. So I'll tell you what else you get. This package is all designed to help you guys cut the learning curve, right? Trading has a very, very steep learning curve. For me personally, it took well over a decade to actually achieve consistent results to where I could, do this full time on my own without having a day job. So it's steep, right? And unfortunately, most people don't even ever get there. They fail before they get there. Okay, so that's what we've put this package together to help you guys with. So that again, it includes 12-month subscription to Trade Trend on MetaStock. Okay, normally that retails for $14.99. It also includes our live weekly trade sessions, which normally retail for $5.50. It includes personal coaching for me on those live sessions. My personal coaching usually starts at $19.97 and goes up from there. But you're going to get access to me directly each week on these sessions as well. You'll get exclusive invitation-only Facebook group access to our private group of over 800 members, which we normally retail for $199. You're going to get the online training that teaches you adjustments for bad options trades. We normally retail that for $900, but you're going to get that as part of the package as well, because a lot of our members trade options and they use the Trade Trend indicator to do that. So it's I think a really valuable component or addition to the package. And ultimately learn to trade whatever you guys are interested in trading, whether that's equities, futures, Forex, ETFs, options. On top of that, every Monday evening, I send out my top 2 trade trend signal picks. So I do the research every Monday. I go through and I pick out my top 2 opportunities and I send them out to all of our Trade Trend members by email. So you're going to get access to my top 2 weekly picks. Normally we retail that service for $5.95, but it's an extra bonus in the package. You're going to get my latest ebook, How to Create Risk-Free Trades, valued at $97. This is a money management ebook that goes through different tactics to mitigate risk and even in some cases eliminate risk from a trade. So a very robust package we put together exclusively for the MetaStock Summit, valued at over $5,100. We're taking 90% off today. You can get everything here for only $497. I mean, it's a screaming deal, 90% off. We are going to limit this to 25 seats for the purpose of giving you good white glove treatment and customer support. As much as we'd love to have the hundreds of people seeing this join us, we wouldn't be able to manage it and wouldn't be fair to you guys. So we do limit this to 25. You can still get any of these individual items. It will go back to the retail price though after the 25 are taken. So if you want to claim one of the 25, all you have to do is go to altostrading.com/slingshot. That is the link. Again, you're going to get bonus number 1, my top 2 weekly picks. I send these out every Monday. So these are the Trade Trend buy and sell signals. We've had an incredible track record. Here's just a little snippet of it from last year. We had one loser in there, but we hit very, very long strings of winning trades using these Trade Trend signals. So these are, again, my top 2 weekly picks. I send these out every Monday. You'll get access to those as your bonus number 1. You get my latest ebook as your bonus number 2. In the interest of time, because I want to at least be able to answer a few questions here, I'm going to skip all of the hundreds of or even thousands of positive testimonials we get from our members. We get lots and lots of success stories from our members who use Trade Trend. The idea here is we want you guys to be successful. So we price the package at a point where we think that you can be successful with us and actually make money off of it, right? That's what we're here to try to help you do. We can't make any guarantees, but we're here to help you along the way. So again, altostrading.com/slingshot. I'm going to throw in a guarantee because we are so adamant about you guys achieving the level of success that you want to get to. If you don't feel like you've done that, so like if you haven't earned at least the cost of your membership back in the first 90 days, just shoot us an email, and I'm going to give you our email here momentarily. We'll give you an extra year of Trade Trend on the house. That's a $1,499 value. We want you guys to have the ample time that you need to use this successfully. Okay, so no questions asked. Just shoot us an email. Maybe you haven't even had a chance to use it yet after 90 days. That's fine. Let us know. We'll add on an extra year for you. There's our email, support@altostrading.com. You can also call us toll free, 800-895-9348. Or you can call MetaStock, and they can also set you up with this. So whichever you prefer. You have a few different ways to join, or you can go to the website link, altostrading.com/slingshot. With that, I'm going to go ahead and pass it back to Jeff and see if there are any questions that I can answer. And just want to thank all of you for being here. I hope you got a lot out of the session today, and that you see the value in the Slingshot setup, and that is valuable to you guys moving forward in your trading and investing. So it's a pleasure to have you here. I hope you learned a lot. And as always, thanks to MetaStock for putting this on and having me here. Jeff, back to you.
For sure. We do have a couple of questions, if you don't mind.
Great. I'd be happy.
All right. Let's see. I have a customer that wants to know if this will work on other things than stocks. Like, does it work on futures, currencies, commodities?
Certainly, yeah. So I'm not sure if you're referring to the Trade Trend indicator or the Slingshot, but it doesn't really matter because yes to both. So yeah, you can use it on any asset class, whether it's equities, ETFs, futures, currencies. The indicator, the Trade Trend indicator actually works fantastically on volatile instruments like Forex and futures, but it can be applied to anything. So yeah, whatever, and again, any time frame.
We had a question in terms of what platforms are that you support with the Trade Trend indicator. Now, I can't imagine personally wanted to use anything but MetaStock, but what platforms do you actually support with this?
Yeah. So actually, we originally developed this with MetaStock. So that MetaStock was our very first platform. So with this package, you get it on MetaStock. We do have it available for other platforms. So if you guys join today and claim one of the 25 seats, we'll throw in a second platform of your choice. So you'll get it on MetaStock, but we also offer it on on broker platforms. So Thinkorswim, NinjaTrader, TradeStation. We offer it on TradingView, on Wealth Charts. So there's other platforms if you guys want. We'll comp you a second platform of your choosing, in addition to the MetaStock platform.
Steve wants to know, and I think this will probably be the last question that we have, but Steve wants to know if this will work on 50 minutes or delayed data or real-time data. So
yeah, so I wouldn't suggest using delayed data if you're day trading intraday. Delayed data is not, it works just fine on a daily chart because you're not going to get the confirmed signal till the end of the day after the market close. And so you would place your order, after market close for the next trading day. And, so that would be either a buy stop order for a buy signal or sell stop order for a sell signal. So delayed data is fine for daily timeframes or higher. Intraday, I would suggest, you want to have real-time data, especially if you're getting down to like the small timeframes, like a 1 or 2 minute chart.
Brad asked Jeff, but that doesn't narrow it down very much. Can you demo this on the MetaStock platform? Brad, I think we're out of time, but we have demoed it before, and we've talked about it a lot in the past. So if you want to get in touch with us real quick, we'll send you a recorded demo where I actually go through and I spend, there's a couple of them. You can get like a full hour-long demo where where Jeff and I are just doing them together, or I have kind of a bit of a shorter demo that we can email as well. So just get in touch with us, and we can send that video over to you. We're just out of time. So
Yeah, and actually we have the MetaStock demo on our YouTube channel. So if you go to YouTube and type in Altos Trading and go to our channel, it'll be back probably down at towards the bottom of our videos. It was one of our early videos from like, I don't know, probably like 6 years ago or so, 5 or 6 years ago.
Has it been that long? Wow.
Maybe it's not. I don't know. I'm just throwing something out. It seems like.
Yeah.
But yeah,
it's funny because you have so much fun, and it just.
I know, time flies, right? Yep. So anyway, yeah, there is a demo of it on MetaStock in our YouTube channel as well.
I want to reiterate, this is a great deal. Like it isn't until just this that $1,200 per year it used to be what it is. So $497, get it set up while you have that as an opportunity. All the stuff that's included, it's amazing. So I think we'll end it there, Jeff.
Thanks so much for having me. It's a pleasure always.
All right, very cool. Let me go ahead and do this. I'm going to dismiss you real quick, and we'll do this. And I'll go ahead and make me the presenter. Okay, and we'll do this. And you can, whichever you prefer, you can either do this at metastock.com/conf promo. You can call us. You can do it through the Altos Trading, whatever works best for you. So let me go ahead and kind of turn this on. We're going to kind of migrate in. I think we just talked, I think it's TechnoTrader's turn. I want to talk about one of our sponsors. I want to say thank you to all of them, Stocks and Commodities Magazine, CMT. I want to say thank you to TechnoTrader for helping sponsor the event, helping put it together. They've always been such a good sponsor or a good partner of ours. And I really appreciate Martha. If you go to this website address real quick right here, you can sign up for several mini courses that they offer for free. And there you go. So there's that in there. I find it's better if I copy and paste, because as we all know by now, I can't type and talk at the same time. So there you go. In any case, Greg, before we kind of get on with the next presenter, we are going to give away a prize. I'm going to ask Greg to help me with that prize. And so Greg, hopefully you're available. I usually ask to make sure, but
I'm here.
All right, very cool.
But I don't know if I still have my app up that I had before.
Okay. Well, you might just have to.
It doesn't
pick a
matter. I can
number
just come
then
up with. In fact, I've already come up with a number.
Okay, cool. Is it 1?
No, but it's low because I feel like we're skewing away from the people that entered the race early.
Okay. Well, for this one, what I'm going to do is I'm going to give away another one of Adrian Mance's trader clocks. And I should have put a picture in this because it's kind of hard to actually describe. But it's really good for real-time trading. And what it does is it shows you the really volatile, the safe areas, and kind of the best times of the day to trade if you're real-time trading. And he says it's going to work really well with the presentation that he's doing a little bit later in the week. It's an $80 value. And Greg, what I need from you for this trader clock is I need to get a number between 1, what's the last number? And 8541.
12.
12. Okay. You did go low this time.
Well, and actually when I had the little app up that was supposed to pull a random number, it pulled like a low number as well. So I thought, we're due for a low number.
Cool. We've got, so this is kind of interesting. I doubt this person is watching right now because we have another winner from India.
Oh,
which we had one the other day. But if you're in India watching, it's well after 2:30 a.m.
Well, so, we have, as well as I do, Jeff, a large portion of our customers are from
for sure,
Southeast Asia.
Definitely, yeah. We have a lot of people in India that trade.
Yeah.
So it's a person by the name of Kanhelia S for the last name. And I think it's a Gmail address. They're almost always Gmail addresses. Yes, it's a Gmail address. So I'm going to go ahead and write down your information. Next week, I'll take care of all of the prizes and get that over to you in terms of kind of the information I need to get that sent over. And as long as you respond, we'll send you a free clock. Congratulations. Thanks for registering. Now, if you're watching us on YouTube right now and you haven't registered, it's the pinned comment at the top of the chat, probably about in the direction that I'm pointing. But it says register for the conference. If you click on that and register, you'll be part of the prize list. And so when we do the random prize drawings between speakers, you'll be there. If you want to get a copy of the award-winning MetaStock software program, we're going to do an extended trial. If you buy a month, we'll give you a second and third month for free. MetaStock.com/conf promo. MetaStock.com/sales chat. 800-882-3040. Our next guest is going to show you his red-green knockout system. Let me go ahead and make him the presenter. Dan's a good friend of MetaStock. I've known him for a long time too. I remember seeing him at the trade shows back when they were really popular, and that's what everybody was doing. He's written a couple books. The method that he's going to talk about today is a method about finding stocks that are in a momentum resumption mode. Is that you probably have a better way to phrase that, Dan, but that's the way I say it. Anyway, I can see your screen.
All right. Yeah.
All right, and I can hear you now. Okay, that's cool.
It's all good.
All right. In that case, everything sounds good. I can see the screen. I'll get out of the way. It's all your turn.
All right. Hi, folks. Are you feeling good? I'm Dan Passarelli. And before I get started, actually, I guess Jeff said he can hear me, so that's great. I'm honored to share this key way that I've simplified my trading, and this is the easiest, most straightforward system that we've created here at Market Taker. So I'm excited to share with you today. Before we get started, options are not for everyone. Read characteristics and risks of standardized options. Get a copy by emailing investorservices@theocc.com. Now, momentum trades are a totally classic trade. Like, thousands of traders have collectively made billions of dollars trading momentum trades over the years. And like, the beauty of it is the concept is really easy. All you have to do is identify the setup, see when the trade triggers, get a confirmation, set a target. Boom. By at the end of this presentation, you will be able to easily identify this specific momentum system. I was listening to a podcast recently, and they were talking about the difference between mindset and skill set, and both are important. Henry Ford once said, whether you think you can or you think you can't, you're right. And there's something to that, isn't there? So I thought, how can I make one of those things, mindset or skill set, really simple? How can I do a lot of the work for our traders so that you don't have to focus on both of these things at the same time? So I put my time into the only one of those that I can pretty much do entirely for you, the skill set. I put this into a system that if you follow along, you don't really need much skill at all. The skill part is built right in. So now all you have to do to move forward in reaching your trading goals is to think you can. This is my promise to you. I'm going to share with you how to spot high profit momentum trade opportunities using stocks, ETFs, options, futures, or Forex, so that your trading is completely simplified using this tested, evolved trading system we've created for our traders that hundreds of our students have used to go from that demoralized feeling we've all felt at some time to that feeling of satisfaction and self-assurance that we all know is possible. And at the end of this presentation, I will share how you can take the next step so that you can start getting immediate results. What do you say? Is that a fair deal? Go ahead and hit that questions box for me and let me know. Are you liking what you're hearing here? And don't be afraid to participate. I want to know. Tommy says yes. Mark says yes. Ashley says yes. Brian says yes. Omar says yes. Laura says yes. Adam says yes. Kevin says yes. Excellent. Now, in order for you to get the most out of this, I ask that through this training and afterwards, make this about you. Turn off your cell phone and Facebook and shut the door to the room you're in. Let yourself get immersed in what I'm about to share. Let it become part of you. Let it in. And be sure to stay until the end of this training. The most important things I'll share come later. And to keep the focus, I'm going to hold all questions until the end. If you have a question, write it down. I will get to them all. So let's keep it positive and let's have some fun. This gives you an idea of who I am, what I do, some of the organizations I've worked with. I wrote 2 of the most popular books on option trading. Worked with every major options broker in the US and abroad, as well as pretty much all the options exchanges in the world as well. And I get to be on TV a lot. I got my start trading down on the floor of the Chicago Board Options Exchange. I traded there for years. These pictures literally span 30 years of being involved with the trading floor. I traded some huge stocks like the Ford Motor Company, AT&T, Carnival Cruise Lines, and I traded some little ones no one's ever heard of. And a little secret here, the little stocks no one's ever heard of is where you can make the big money. When you know about opportunities no one else does. Now I want to jump into a new discovery I made. Does anyone know what this formula is? No? Good, because we're not going to talk about it again during this presentation. We don't need to, and here's why. I have an extensive background in trading, but the fact is I'm no mathematical genius. Would it be okay if I share a story with you about when I was in high school? Hit that questions box for me. Give me a big old yes, will you? This is a story I've only shared a couple of times, and I think you're going to like it. All right, we got some yeses here. I like yeses. Yes is my favorite word. When I was a kid, I was kind of a troublemaker sometimes. Seriously, I got good grades. I didn't really have to study usually, but this is a story about a time that maybe I should have. In my senior year of high school, in my advanced math class, instead of paying attention to the lecture, I and a few other kids we'd play poker. And that's all we did all hour long, the whole class. And man, I made a lot of money in that class. But the problem is, with math, it builds. If you miss something this week, you're lost next week and you're hopeless the week after. So needless to say, I didn't learn a lot of advanced algebra concepts that year. I crammed, I passed, but I didn't learn much. Now, fast forward, freshman year of college, and I had to take an algebra refresher. That's totally embarrassing. Oh, man. I mean, I always prided myself on being smart. Algebra is not that tough, but I had to take a refresher. Now, one thing you may not know about me is that I was the first Passarelli to graduate college. And I almost wasn't. Here's where the story gets interesting. Now, I'm a competitive kind of guy, mind you. So sophomore year of college, my cousin, Michael Passarelli, who was 1 year younger than me, he was in my calculus class. Calculus! I was very intimidated by calculus. I was afraid that I would struggle. But more importantly, I knew that if I failed the class and had to retake it, my cousin Michael would be a credit ahead of me, and maybe, just maybe, he would end up graduating before me. There was absolutely no chance I was going to let this happen. So I put on my A game. I was ready to work as hard as I could to win, and I'm going to guess there are some of you here who can relate to that, right? Will you do what you need to do to win, to put in the effort to succeed? Yeah, because me too. But there's one other factor that came into play that was a saving grace. I had a good teacher, one that I could relate to. He made it easy for me to learn, and I did. I ended up acing calculus and had the honor of being the first in my extended family to graduate college. Thank you very much. Like I said, I'm no mathematical genius by nature, but I've spent a lot of time in option trading, 30 years, and I do whatever it takes to create great trading systems for myself and for you. So I studied the math of things like the relative strength index to see how they tick. And I realized there are some hidden keys within these equations that can predict when momentum is likely to continue. Now I'm going to share the hack with you. Discovering this specific pattern, it wasn't a fast process, and it wasn't easy. It took years until I evolved the system, and my results proved that I had a winning strategy. And we continue to improve upon it. I put in the investment for myself and for you because now it's finally time for me to share it with you. This is the red knockout trading system. It's a momentum trading strategy that can lead to outsized profits, a simple 4-part chart pattern that's easy to identify, and the profit targets are easily set. We use this with options, stocks, ETFs, indexes, futures, or even Forex. Let me start by listing the steps in the red knockout system, and then we'll zoom in and go through some examples. This is important. Write this down. Step 1 is the setup candles. That's 3 or more green candles that make up the green run. Step 2 is the red knockout candle, or the RKO. That is a red candle with a smaller body than any of the preceding 3 green candles. The trigger candle is a green candle that takes out the high of the red candles, ideally on higher volume. And then there's the confirmation candle, which is a candle that opens above the high of the RKO candle and signals trade entry. Now, let's break this strategy down step by step and go through how it works. Step 1, you remember what step 1 is? It's the setup candles, right? Also known as the green run. So that is 3 or more consecutive green up day candles. And we can see that here, right? Step 2 is the red knockout candle, or the RKO itself. That is a red candle immediately following the green run with a smaller body than each of the 3 previous green candles. Then step 3, if it materializes, is the trigger candle. That is a green candle that takes out the high of the RKO candle. That means it trades higher than the high of the RKO at some point during the day. And then finally, if this pattern plays out in entirety, step 4 is the confirmation candle. That's a candle that opens above the high of the RKO, and that signals trade entry. Let's go through some examples. This is Bloom Energy Corp, BE. If we have a red knockout setup, what is the first step we look for? The setup candles. The setup candles are 3 or more green update candles in a row. Do you see that on the chart anywhere? Anywhere? Look right here. We got one right here, and then we've got one that's higher, and then one that's still higher right here. We might also call this the green run. Now, this establishes that the trade is setting up. Are you getting this? Good. Now, what is step 2? Do you remember that? That's right. It's the green, or it's the red knockout candle, or the RKO. If a red knockout candle shows up on the chart, it's very easy to identify. And it means the setup might be materializing. The RKO is a small-bodied candle, a smaller body than each of the 3 green setup candles that could open higher or lower, but the key is that it's down from the open, thus it's red. So let's back up for a second. I said these are 3 green up day candles. There's a difference. An up day is when today's close is higher than yesterday's close. But a green candle is today's close is higher than today's open. We need both. Now the red knockout, it's red. It can be higher or lower. So it can be an up day or a down day, but it's down from the open, and that is the key. Now, step 3, that is the trigger candle shown by that yellow arrow that just popped up. That triggers a trade is indeed setting up, and you're getting ready to time your entry. We call this the trigger candle, and it's sort of like when a marksman is all set to fire upon the target, gets his finger on the trigger, ready to take the shot. Then finally, step 4 is the confirmation candle. That means that the trade setup is confirmed. It's got a green arrow. Green means go, fire away. Now let's slow it down a bit. Let's go over the roles of each of the 4 components in this setup. So first, there are the setup candles that make up the green run. And what's important about this is what sets up a mini trend. A green candle means the closing price is higher than it was when it opened. And an up day, the close is higher than yesterday's close. So it's momentum, right? We're getting this mini trend established. But with all trends, and this is why RSI plays into this, with all trends, we need a little bit of a mini pullback at some point. Otherwise, the trend just burns itself out. The RSI will get too high, traders will sell it, and it fizzles away. So that's why we're looking for just a mini trend. It could even be an update, but it's down from the open. And what it does is it enables traders who missed the first part of this mini trend to get in and still participate. Then we get the trigger candle because we want to see the trend follow through after the RKO candle, and that's what this means. It trades higher than the RKO's high. And then if we get the confirmation candle opening above the high of the red candle, that's enough confirmation to embolden us to say, okay, this trend, it started here, we had a little pullback, and now it's continuing on. 1, 2, 3, go. So now let's run through several examples to see how this might play out in real life. This is Thomson Reuters. Now, first of all, is there an RKO set up here on this chart anywhere? Do you see one? There's the first candle, and there is the second candle. Nice work. Do you see an RKO? Of course, it follows right afterwards, and it's got a smaller body, right? Then we see the trigger candle, and then, of course, we see the confirmation candle. This played out really nicely. Now, if we follow our profit target rules, which I want to go over in a second, we take it off here. Actually, at this level, probably that would have triggered about here, so we wouldn't have had to hold it all that time. In fact, it might even triggered right about here. Now, how about here in Humira? Is there an RKO set up here anywhere? Look closely, look closely. Good job. This one has 6 setup candles. Again, we can have 3 or more setup candles. We start the green run here and end it here. Next comes our red knockout. Why is it called the red knockout? Because in any trend, there's a pullback. In this case, this mini pullback is just enough to enable traders who miss the green run move to get in and actually provide that follow through. So the red candle just gets knocked out of the pattern and we look for continuation. And that's just what we get. Here's the trigger candle. We wait one more day to confirmation, and then we try to get in around the open. We always prefer to time the entry close to the open because more often than not, we're going to get a green candle that day if we get the confirmation candle. It doesn't always happen, but from my observation, more often than not. And then, of course, we set up our profit target, which ends up being right here. And we've got plenty of room to watch this continue on. Now let's check it out on the sleek dark screen. Cool, huh? Yeah. This is APEI stock. If we look here, we have a 3 candle green run. It's followed by the classic RKO. Why is it classic? It's got the smaller range than each of the 3 green candles, just a mini pullback. It's engulfed by the previous green candle, which means it's a smaller range. And it didn't trade lower, which is good because it's not a reversal. It's just a pullback. Then we get the trigger candle with the yellow arrow underneath it. And then we always wait for confirmation. And then it's just 1, 2, 3, go. What I like about this one is that this is only an $11 stock. Folks who don't trade options, you can just buy the shares. Though the options, if they're liquid enough too, then you might want to use the leverage of options. The RKO indicator works on all time frames. It's highly versatile for day traders, swing traders, short-term traders, and even long-term investors. When I worked on improving what the criteria for the setup candles, red knockout candles, trigger candles, and confirmation candles were, I spent a lot of time on it. And it was a really great and humbling experience, and it reminded me of my old boss, Steve Fawcett. You see two people here. The one, of course, is Sir Richard Branson, and the other is Steve Fawcett. For those of you who don't know Steve Fawcett, the late Steve Fawcett, he was not only a famous adventurer, but also a famous trader. He held many world records. He attempted to set one flying around the world in a hot air balloon with Richard Branson. I remember one day Steve took all his traders out to dinner, and there were about 45 of us. And after dinner, he asked us, "Why do you trade?" And it's not about the money or whatever, really. The real reason, why do you trade? Now, as floor traders, standing all day long, like your feet hurt, your back hurt, there are people yelling in your ear, getting their spit on you when they yell. Why do you stand there? Why do you trade? What's your real reason? Is it to have more freedom to go play frisbee golf? Or is it to secure your retirement? Or to put your kids through college? And that stuck with me. So I ask you, and I would like to get some answers. I think this will be kind of a fun little survey. So I ask you, hit that questions box for me and type this in there. What is your reason for trading? Just give me a short one, like a few words or one sentence. What is your reason for being here right now to get a better trading system so that you can take it and move this part of your life forward? What is your reason for being a trader? Let's see here. Ashley says, put my kids through college. Okay, great. Kevin says, donate to church. Awesome. That's great. Jonathan said, hold on, let me paraphrase this here, Jonathan. Jonathan says early retirement. Paul says, so I don't run out of money in retirement. Yeah. Kathleen says to leave a legacy. Yeah, that's an awesome goal, isn't it? So Steve was a great mentor. Without having him in my life coaching me, I could not have become the trader I am today. But there's one thing Steve was known for saying: I'm still learning. When I met Steve, he was a gazillionaire, super successful trader, but he was always tweaking his process, always learning, always moving forward, always making his trading better for himself and his traders. And I'm thankful for that, because I was one of his traders. He kept improving. So I also started improving the process of the exit point. And here's how that works. Setting these price targets is really easy. Here's how the price target's calculated. We take the low of the first green run setup candle, and we subtract that from the high of the last green setup candle. So that gives us the mini range, right? The mini trends range. And what we do is we expect that to play out after the RKO candle again. Like the RKO candle is sort of this fulcrum in the teeter-totter. So we want to capture that same move playing out again, but some of us are more conservative traders. Some of us are more aggressive traders. So what we're going to do is multiply that sum, that range of the green run. We're going to multiply it by a haircut, which is a percentage. So more conservative traders who are willing to take their profits earlier, you might use a 70% haircut and just get out once 70% of that move plays out. Traders who are more aggressive might use 110% haircut. Let that move play out and try and squeeze out a little bit more. So we're going to add that haircut amount to the high of the RKO candle. This is simple risk management. Immediately after buying the stock, we're going to set a profit-taking order, good till cancel, with a stop loss order, also good to cancel, OCO. That means one cancels the other. So you can fill in your profit-taking order, cancels the stop loss, and vice versa. If we use options, we're going to set a profit-taking order, but to manage our loss, we're going to set an alert. We're not actually going to put in a stop, good till cancel. So this is a really compact system. Like basically, I think everyone here, you can recognize this on a chart, right? Did I make it really easy for you? And I think you can calculate the exits too. Work the system works. And also, by the way, if you're not familiar with some of these terms or exactly how to do some of these things, later I'll share how you can learn to easily do all this and make your exits super simple as well. I want you to leave here today with all the tools you need to be massively successful with this. And I bet you do too, right? Would you like me to share with you what we've discovered makes RKO trades even better? Yeah, would you? If you want to show me, hit that questions box, give me a big old yes. In the meantime, I'm going to share. Here's a couple of tips. These are some bonus things that I'm sharing with you that are not in this training. If any part of the RKO, of the 4-part RKO pattern, if it crosses through one of the 3 main moving averages, 200-day, 50-day, 21-day, that makes this an even stronger signal. If the RSO is rising, but it's not above the 70 level, that also, meaning not overbought, that also makes this a stronger candidate as well. So I hope you wrote those things down. In summary, there are a few important takeaways. Momentum trades can yield outsized profits, and this is a time-tested, evolved system. So we have the setup candles, we have the red knockout candle, the trigger candle, the confirmation candle. I even showed you exactly how to calculate the profit target. You can recognize this. You can do this. But there's a problem. There are 6,366 stocks to trade. If it takes you, say, 45 seconds to spot an RKO setup on a chart, it would take you roughly 80 hours a day to go through all the opportunities out there. And that's only looking on one time frame. You can trade this on multiple time frames. You don't like missing opportunities, do you? There's got to be a better way, right? And I bet you know that. You wouldn't be here right now if there wasn't a better way. Are you ready for it? The RKO complete system is officially here. Over the past 3 years, we've created both a scanner that would easily identify RKO trades, as well as an indicator that displays the pattern right on the chart along with the price target. We wanted to make it so simple, it's impossible to mess up. You now have a new opportunity to easily scan for top momentum trades you wouldn't be able to find without this screener. With over 6,000 stocks out there, it's impossible to just happen to come across one of these great setups. But with this easy to use 3-step scanner, it makes it possible because I've made that investment for you. You see, I know what it's like to struggle as a trader in the market. I've had the pleasure of training thousands of traders, and I wanted to develop a scanner that made it very easy to find profitable trades with great potential. And even for myself, before creating the RKO system, I'd come across one of these setups maybe once every 6 months. I would miss so many opportunities because there's just not enough time in a day to find them. But finally, I've invested both time and money to develop this simple, easy-to-use scanner that you can harness in just 3 easy steps. Imagine what your trading account would look like if you could sit in front of your charting software and have a powerful trading tool that identified both the trade entry and exit points in just seconds. Imagine if you could block out all the noise in the market and only focus on trades that have been identified for you. What would that mean to your trading business? Well, that's exactly what the RKO scanner does for you. These are some examples of the trades, both entries and exits, identified by the RKO scanner and displayed by the RKO indicator. On the left are stock trades. On the right are option trades. On February 15th in Lemonade, a stock trader could have bought the stock at $15.43 and 12 days later sold it at up to $21.09. That's a 36.7% profit in just 12 days. On March 25th in BFF, a stock trader could have bought the stock at $1.04 and sold it at up to $1.54, locking in a 48.1% profit in just 8 days. In the options in XLE, a trader could have bought the April 91 calls at $1.82 and sold them 12 days later at $3.45, locking in an 89.6% profit. To make that more tangible, if a trader bought, say, 5 of those calls, he or she would have made $815 in profit on just that one trade. And that's just hitting the haircut profit target that was set. If the trader held on to this longer or even took half the profits at the initial profit target and left the rest to run until April 2nd, the profit could have been over 164.8%, or up to $1,500 on that same 5 lot. Look, even if you make, say, 3 of these trades a week and your results are half as good, how much impact could this have on you and your family's financial future? Start getting the results that you deserve. This is Nick, our head coach. This is Nick. Our head coach, John, who is a brilliant guy, an ex-Goldman guy. John and I shared with Nick what we were thinking about this. Nick was actually the first human ever to see the RKO. And in fact, he was actually extremely instrumental in helping us. Nick said, using scanners, in particular the RKO daily, helps me find trades when I'm busy or might not be fully locked in the market. I run the scanner and do the checks and decide to take the trade or move on. It takes only a few minutes and helps me find the best trades consistently. I want to invite you to join us and start using the RKO system right away. So first, you're going to get the Red Knockout scanner. So every day, you'll be able to have a list of all the RKO trades available in the market. This simple scanner searches the universe of over 6,000 stocks for the setup and makes it possible to find trades you would never have access to without it. For you to profit with the RKO system, I need you to know how it works. So I created a video training course that shows you step by step exactly how to install this on your platform, how and why the RKO system works, how to set up the trades, the filters and cross scans to optimize the strategy, and of course, the targets and trade management. So what that means is, first, you're going to get the RKO system, the scanner, so that you can click a button and have all the RKO trades of the day. Then you're also going to get up and running fast with this with the RKO Accelerator video course. Now, I can put the tools in your hands. I can tell you how to use them. But I know for me, I learn faster when someone shows me exactly how to do it. So the best thing I can do for you is give you hands-on training. Every Friday for the next year, 1 full year, you're going to attend our online live group coaching class and watch John Kamisic set up RKO and other trades right there while you watch. John is formerly with Goldman Sachs, First Options of Chicago, Lind Waldock. He traded for a hedge fund, and he is the expert on the Red Knockout. In fact, he helped me develop it. He's just the kind of person you want to listen to. But I wanted to make sure that you hit the ground running and get the hands-on training to start getting immediate results. This is Dennis Meixel from East Peoria, Illinois. He said, thanks, great class, exactly what I was looking for. the class, John's group coaching class, gave me a lot of insight into options and the Greeks. I'm a fairly new trader, but I've been putting in the work to move my skills forward. How would it feel to have top picks selected by an ex-Goldman guy every day? So what this means is first you're going to get the Red Knockout System scanner. You're going to get up and running fast with the accelerator video course, and you're going to get hands-on training once a week, every Friday, with the live group coaching. That is a $5,247 valued package. Do you mind if I over-deliver? What I really want is for you to make as much money as possible trading RKO. And I imagine you do too. So every day we're going to rank the day's RKO trades and list them out and give you our top RKO picks so that you can see what we think are the best of the best. This is the RKO watch list, and it's a $1,297 value. Plus, John will add a bonus trade every day from his daily group coaching class. They'll be down here in gold. So you can diversify your trading and get all of the top trades of the day by simply clicking one link to access your curated watch list. So what this means is you're going to get the Red Knockout System, the RKO Accelerator video course, hands-on training every Friday morning, and you're going to cherry pick just the best of the best with the RKO watch list. And finally, this completes everything you need to make the RKO simple to trade. With the RKO indicator, we just put the arrows right on your chart to show you the trigger candle, confirmation candle, even the exit price target. So all the information is laid right out for you. This could not be easier. So that means you get the Red Knockout scanner, the RKO Accelerator video course, weekly group coaching, the watch list, and we're going to put the arrows right there on your chart for you. Plus, you're going to get updates every time we optimize the strategy to make it better for a full year. This is a $7,541 value. RKO works on the following platforms: MetaStock, Thinkorswim, NinjaTrader, TradeStation, TradingView, and others. Now, you may have noticed the Red Knockout trades are all for when the stock is rising. And for that reason, these tend to work better in bullish markets. But the market, it doesn't always go up, does it? And not all stocks always go up. In fact, you're going to have some pretty good bearish moves. So I created the Green Knockout to double your chances of success. So today, you'll get both the Red Knockout and the Green Knockout. So you will have the tools that you need to trade any market up or down. So you're going to get the Red Knockout System scanner, the accelerator video courses, the weekly group coaching, the RKO watch list, the arrows right on your chart, and you're going to get all of this for down trends too with the Green Knockout. Plus, again, you get updates every time we optimize a strategy to make it better for a full year. Buy now. You can see why the RKO trading system is a steal even at $10,041. If all this did for you was identify trades that had a profit of 182.1% or 83.7% or even 25.1%, the question you need to ask yourself is, would it be worth it? That answer is yes. But you're not going to pay $10,041 today because you've made the investment of being here on this live training, and for being one of my action takers. You're the elite. You're better than millions of other traders out there. You put in the effort, and I want you to have the results that you deserve. Get started today for a one-time small, easy investment of only $997 by going to metastock.com/RGKO. Go. That's metastock.com/RGKO. But to get all these bonuses, including the Green Knockout, to maximize your success in any market condition, you have to be one of the first 25 new members today, and you have to take massive action. by going to metastock.com/RGKO. Go. Just to recap one more time, when you open your browser and go to metastock.com/RGKO and sign up today, you're going to get access to the Red Knockout scanner that is going to identify trades with the entry and exit points. On top of that, when you're one of the first 25, you're going to get instant access to the RKO Accelerator video course to get you up and running right away. You are also going to get access to the weekly group coaching where we will go live into the market and you can see exactly how me and my team use the scanner to generate profits in the market. That is every Friday from 9 to 10 Central Time. That's 10 to 11 Eastern Time. You will also get access to the RKO watch list with our top picks of the best trades that John and I are looking to trade with the scanner. This way, you have the best opportunity to generate profits from the scanner by following the exact trades that I'm looking to place. Further, when you open up your browser and type in metastock.com/RGKO, you will also get access to the RKO indicator itself. This way, while we're coaching you live in the market each week, giving you access to my top watch list, so you'll have access to this powerful indicator 24/7 across multiple markets to take full advantage of this great and easy to use indicator. Also, as we run more tests and do more tweaks, as the RKO continues to evolve and we get it performing even better, you will get automatic updates for a year to both the scanner and the indicator. But lastly, when you join us right now, you will get the green knockout as well. You'll have the confidence of knowing that you can trade in any market up or down. But you have to take action today, right now, and be one of the first 25 members right now. So go to metastock.com/RGKO or call 800-882-3040. We have operators standing by at MetaStock. That's 800-882-3040. One more time. That's 800-822-3040. Now, I want to answer, okay, first of all, I want to welcome some of our new RKO members. Welcome and congratulations to Sherry. Welcome and congratulations to, let's see here, Don. Welcome and congratulations to Melanie. Welcome and congratulations to David. Welcome and congratulations to Kevin. Welcome and congratulations to Ashley. Great job stepping up, moving forward, and investing in yourself today. Now, I'm going to answer some of your questions. Please, if you have a question, type it into the questions box so that I can answer it and help you make the decision to invest in yourself and move forward with the Red Knockout Traders Package today. In the meantime, here are some frequently asked questions that I get. What if I can't install it properly? No problem. We send step-by-step instructions in both PDF and video form on exactly how to set it up and use it. Is it time-consuming? No, I know you're busy. Many traders have a busy schedule. I've designed RKO so you can literally trade this system in about 60 seconds per trade. What if I can't figure it out? Well, you get a video tutorial plus hands-on training live every Friday morning. What time is that weekly group coaching live training? It's live every Friday from 9 to 10 Central, which is 10 to 11 Eastern. That's 7 to 8 Pacific. But if that time's not convenient for you or you just want to review, the class is recorded. Another question that I get is sometimes people say, Dan, this is great. I have a small account, but I can see that this is a great way to grow it into a bigger account. But the problem is I have a hard time coming up with the $997. Is there a way to finance this? And that answer is yes. We have a deal with PayPal to offer you both PayPal as a payment option and PayPal credit, so you can lock in the red knockout today when you check out using PayPal and just simply choose PayPal credit. And you do it the same way. Just go to metastock.com/RGKO right now and click the PayPal button to get started right now. All right, so I'm going to answer a few other questions. Stephen asked what time on Fridays. Again, that's 9 to 10 Central. What other questions can I answer to help you move forward today? Yes, you can go to metastock.com/RGKO. You can call 800-882-3040, or you can just go to metastock.com/sales chat, and you can chat with one of the MetaStock people who can help answer your questions and get you signed up right away. Let's see here. About how many RKO signals a day, asks Jonathan. So you'll get, it depends. On up days, you'll get more RKOs. On down days, you'll get more GKOs, but you'll get both. I would say anywhere from an average of 2 on a slow day to 8 or 10 on a busier day. So, which is great, because then you're only taking the best of the best trades, and you get to pick and choose which ones you want, especially if you key off the weekly watch list, where we give you what we think are the best of the best trades, as well as bonus trades from John's daily group coaching. You're going to love it. This is like a brand new tool for your trader's toolbox, and this can make a really big difference in your trading overall today and forever. And you get access to all of this for a full year. And like I said, if we run tests like we like to do, we will give you those updates. You'll just see the updates live. You'll just be finding better and better trades without even having to do anything. If I were to make this any easier for you, I would just come over to your house and trade it for you. It's that easy. And for those of you, I'll tell you what, I don't think I'm supposed to do this, to tell you the truth, but for those of you who join right now during this live training right now, like before it ends, before we go to the next speaker, if there's one, I'm going to give you a gigantic discount to our in-person summit that is in Sonoma, California, June 13th through 15th. That is a $1,999 class, but I'm going to give you the friends and family discount, and that 3-day live in-person class will be just $500. You'll have to email me right after you sign up if you want that. Just say summit in the subject line, and I'll send you an email all about it. But that is an extra little secret bonus that Bobby's probably going to yell at me about. But I believe very, very strongly in the RKO, and I want to put this in your hands today to help you be a better trader, to help you make your trading easier and less stressful and simpler, to give you more trade ideas, to give you only the best trade ideas, and to be able to trade in up or down markets, and to give you the hands-on training that comes along with it. So you're going to get all these bonuses today. And if you're interested in getting a big discount to our in-person event in Sonoma, then once you sign up, just reply back summit, and I'll send you all the information that you need on that. But the important thing today is that you walk out of here with the Red Knockout Traders package and with all of these key bonuses. What other questions can I answer to help you make the decision to get started right now? Do we have any final questions? Let's see here. Oh, the scan. Yeah. So the scanner, all you do is you go to the scanning feature and you click it, and it just shows you a list of all the stocks in that list that meet the criteria that actually have the red knockout setup. Because look, like that was the whole impetus for this. Because without that, I couldn't find them. I know they were there, but there's just too many stocks to go through. I just can't go through 6,000 charts in a day. No human can. So that's why I created the scanner. But then I wanted to make sure everybody knew how to use it, and could just watch a couple short few-minute videos and be up and running. But then I know that I learn better when somebody shows me what to do. So that's why I decided to give the weekly hands-on group coaching training. And then, some people have busy schedules. So I figured, well, I show you how to screen it yourself in the accelerator video course, and John will show you in the weekly group coaching. But what if I just set up a page where we tell you, hey, these are the ones that we like the best, so that you can cherry pick just the best of the best of the best. And then I thought, how can I even make it easier? I'll just put the darn arrows right there on the chart. If I made it any easier, I just come to your house and I trade it for you. But when you get the green knockout, you get the green knockout, so the bearish version, not just for the scanner, but for all of them.
Every week. Hey, millionaire.
Hello? I heard somebody.
Sorry, that was me clicking on the YouTube link because I clicked off and it was playing an ad for me. So sorry about that.
Oh, no big deal.
We do have a question though, because a lot of the viewers that we have are international, because you can use MetaStock anywhere. Have you had any experience with people using this in international markets? Like, does it work in India, for example?
Yes.
Or Australia? Because you can use it anywhere you want to, and it does work, and we do offer a money back guarantee with it. But do a lot of your students use the red green knockout in different countries on different markets?
Yeah, absolutely. It doesn't have to just be U.S. markets. Basically, anything you can create a chart of, you can use the red knockout or the green knockout. You use this on an EKG chart if you need to.
That's good. That covers all of our YouTube questions.
All right. Well, excellent. Thank you, everyone, for sharing your time with me. And I hope that me sharing my system with you was eye-opening and useful. And I hope you will all join me. That said, have a great rest of your day.
All right. Thank you very much, Dan. And again, you can get that if you just go to metastock.com/RGKO. You can call us. We'd be happy to answer any questions you've got. Send charts if you want to see charts, all that kind of stuff. 800-882-3040 or metastock.com/saleschat. A great add-on. Very, very well liked. We're going to make me the presenter. We'll kind of move on a little. We'll move on just a little bit. So if you are curious, it does include commentary, scans, all those things that make the MetaStock add-on so full-featured. And so you're welcome to go ahead and get that. metastock.com/RGKO, 800-882-3040, metastock.com/saleschat. So Steve, I'm sorry, I didn't see the question. I would have sent it through over. I just see the question that you've got. I would have actually asked Dan Passarelli, but you can drop me an email and I'll ask and see if he has that information that's available. So I just saw the same question over and over and over again, and I'm sorry, I just saw it. So unfortunately. All right, let's see. Do want to say thank you. We'll say thank you real quick to Stocks and Commodities Magazine for being a sponsor. Always has been a sponsor of MetaStock and the events that we do. We appreciate them. If you're interested in finding more about stocks and commodities, if you get a subscription, you get a lot of really good articles every month in the mail. But in addition to that, you'll have access to all of their 17,000 articles that they've been publishing since 1982. You can do that at www.traders.com. So there you go. Also, let's see. Also, Gregory, are you available for a second? Greg? All right. Well, let's do a prize then. But I will actually randomly pick a number on this particular case. So the prize that we're going to give away is the Macmillan newsletter bundle. A couple of days ago, Larry Macmillan came in and he talked about, he does a great job. He wrote one of the premier books on options trading, and he does a newsletter service that's available and that you can get. And what we're going to do is we're going to make a month of that available to a random lucky winner. So without further ado, I think Greg can't find his his mute button, but I'm just going to basically randomly, I guess I'll pick a number. I can do that. Let's go up to 4321. So let me do that, Control A, or actually, and that would be a Peggy T in the US. So if you're Peggy T in the US, I'm gonna go, you want a newsletter subscription to Larry Macmillan. I'm gonna go ahead and kind of save your information. I'll send it over to the Macmillan Company and they'll send that over to you. If you want to take advantage of any of the offers that we've done here today, you can go to metastock.com/conf promo. If you want to do that extended trial for MetaStock where you buy a month and get the second and third month for free, you can go to metastock.com/conf promo. If you want to talk to us, we'll be happy to talk to you. 800-882-3040 or metastock.com/saleschat. So without further ado, let me move on to our next presenter. Our next presenter is Buff Dormeier. Buff Dormeier does some really cool volume analysis. He actually, last time we talked to him back in February, he had just launched an ETF based on his studies and his work. And I'm going to go ahead and bring him on here. I'm going to have him talk to us. He's going to talk a little bit about the volume work that he's been doing. Great technician, super smart, as all of them are. Buff, can you hear me? There you are. I'm going to send you an unmute request. And then I'm going to make you the presenter so we can see your screen. All right, Buff, I see your microphone's on.
Yep, can you hear me?
Okay, good, yes. I was wondering if we were going to run into a technical issue there, but not today, or not right now. Okay, I can see you, I can hear you, and just while we're talking, I'm sure people are going to ask, they always do, what are the two symbols for the ETFs that you manage are?
MVFG, MVFD, Monarch Volume Factor, Dividend Monarch Volume Factor Growth are the
Cool.
ETFs that I manage.
Cool. I can hear you, I can see you, you look great. I'm going to get out of your way, it's your turn.
All right. So glad to be with you today. Glad to be with the MetaStock audience, talk about my absolutely most favorite topic, volume. And you may know volume as not only as a valuable piece of market data, an indispensable leading indicator, but what you may not know, it is also the undiscovered market factor, but not just any factor. Volume is the factor that rules them all, because volume is the force that empowers price momentum and sustains trends, making volume the monarch of factor investing. So this volume factor is the missing piece that bridges goals-based planning to technical analysis via tactical asset management. Now, volume is the unknown investment factor. And as your volume evangelist, I'm going to provide you with 4 rational points, all starting with the same letter R. So here's my sermon on the 4 R's of volume. The first R is responsiveness. Volume provides quicker information, or you may have heard the term before, volume leads price, meaning changes in volume generally occur before significant price movements. Number 2 is reliability. Volume confirms price. Think about it like this. Price is the market's testimony. Price is like the DNA of the market, because in price, it contains all the embedded knowledge of the markets. So price is the market's testimony, is the DNA. And if price is the market's testimony, volume is its polygraph. And if price is the DNA of the market, then volume, because it contains all the information, volume is its RNA, because volume validates and substantiates, and like RNA interprets DNA, volume interprets price. The next 3, or the third one here is risk. And if you can, volume can help you differentiate a legitimate trend from a suspect trend, and by identifying trends weakness early on. So if you're employing volume, you should be better positioned to reduce risk in your portfolio. And the final R is returns. If you can identify a good trend, a good strong momentum earlier by infusing volume and analysis in your analysis, and simultaneously increase the probability that trend will continue on in the future, or that momentum will continue on in the future, it can help improve your returns. So I'd like you to think of volume analysis like this. So you're now the pilot of an airplane. And if you want the pilot or the plane to go higher, you would change the trajectory of the plane and aim it higher. But if you did that, and you just did that alone, what direction is the plane going to go? The plane isn't going to go higher, it's going to crash. That's because you failed to also provide the plane with thrust or increased fuel, and the plane will stall. Volume is the fuel of the stock market. It takes more and more people willing to participate at ever increasing prices, providing that capital. Capital is the fuel of the market. Okay, that's the gasoline. That's the choo-choo that makes the train go down the track, is capital. Okay. And so what we're looking at with volume analysis is that we want to make sure that that we have the fuel or the thrust to continue or to begin a new trend. So let's go over this 4-quadrant illustration to illustrate how you use volume in your investing. So the first is here. Let's just use some definitions here. We're going to talk about trend. An uptrend is built on greed. Okay, greed is kind of like that that song. It's needy. It always wants more, more, more. Okay. Next is a downtrend. Downtrend is built off of fear. Fear is kind of a herd mentality. You know, you have fear, you're going to get out and figure it out, the rest out later. Another term, uptrend, a rising volume is driven by, it represents energy, okay? And a falling volume operates under the laws of entropy. So in our first quadrant here, we have a trend that's up, we have rising volume. This is greed with energy, or the market's in a state of an invigorated greed or strong demand. The uptrend is being confirmed by more people willing to participate at ever increasing prices. The outlook for this is bullish. Next, we have a trend that's up, the volume's falling. This is greed, not with energy, but in a state of entropy, or this is defined as a complacent market, or a market under weak demand, and the uptrend is being contradicted by fewer people participating. The outlook for a stock in this quadrant is bearish. Next, we have a market that's down on rising volume. This is fear with energy, or this is an issue under strong supply. The downtrend is being confirmed by more people willing to sell at ever decreasing prices, and the outlook is bearish. And finally, we have a downtrend with falling volume. This is fear with entropy, or the market here is in a state of apathy or weak supply. The downtrend is being contradicted because fewer and fewer people are willing to sell at ever decreasing prices. This is a bottoming formation, and the outlook is bullish. Give you an example of how we could put this together. This is using my volume price confirmation indicator, which is an indicator designed to tell you whether volume is confirming or contradicting the price movement. This is one of the indicators in the MetaStock volume analysis toolbox. This isn't an indicator that you would necessarily want to use alone. It's, again, to confirm trends. So let's just take a look here. I've outlined the trends here of the chart, and you can see the chart is starting off downward. The VPCI, this is the zero line, is below zero. But look, it crosses over a smooth average of itself. This is giving a bullish indication, and then crosses over the zero line. And when that happens, what happens to the trend? The trend starts to go up. Volume was leading the price. Next, at point 2, the VPCI crosses under itself. This is a warning signal. The uptrend now is being contradicted because the VPCI is no longer moving up, but moving down. And eventually it crosses the zero line, and what happens? The stock goes into a downtrend. There's also some patterns that can happen with this indicator, and you can see that this letter is the letter V. When you see a V, it often is a capitulation sign, and that's what happened here. You get a capitulation signal, VPCI starts to move up. Now the downtrend is being contradicted by the VPCI moving up. VPCI moves over the zero line, crosses above itself, and the stock begins to rally. So volume is the force that powers the bull market. And I like to think of volume as being synonymous with force. And if we were to look up the definition of force in the dictionary, Webster's, you might find this: force is a power made operative against support and resistance. And so this takes us to Technical Analysis 101. What is support? Support is an area where buyers reside. And what's resistance? Resistance is an area where the sellers reside. And what's an uptrend? An uptrend is just a rising support line, and a downtrend is a falling resistance line. Now, volume is the force needed to sustain those trends. Since since we're talking about definitions, let's look up another, use another dictionary. And if we were to look at the physics dictionary, you'd find this. Force is a vector quantity that tends to produce an acceleration. So this statement infers that volume plays a crucial role also in momentum analysis, which is going to bring us into our volume factor offense. Okay, so we can better understand volume's role in momentum analysis using Newtonian physics. Okay, and so let's take a look at the first law of motion, the law of motion inertia. So it states that an object at rest remains at rest. An object in motion remains in motion at a constant speed and a straight line unless acted upon by what? An unbalanced force. So we can rewrite this in volume analysis terms that a price trend in motion or a price or a market with momentum tends to remain in motion at a constant speed and in a straight line unless acted upon by unbalanced volume. My old friend Joe Granville would have liked to say unbalanced volume, but staying with the physics definition, unbalanced volume. So what I want you to get out of this, volume is the cause. Price is just the effect. So if you're using momentum without incorporating volume, then you're solely focused on the effect and you're ignoring the cause. So what we're going to do is we're going to start off by looking at some momentum illustrations that don't include this unbalanced force or avoid a volume in their calculations. So the first one here, we're going to look at the RSI, the relative strength index. Okay. Now I want you to understand there are two primary types of momentum. The first is internal momentum. Internal momentum is what is the momentum, and it's all about relativity. How is momentum relative to itself? Meaning, how is the stock gaining momentum compared to where it's to its past, or is it losing momentum compared to its past? So RSI is looking at this internal momentum, comparing is the stock gaining or losing velocity. Okay. The other type of momentum is external momentum. External momentum is comparing it to something else. Okay, like for instance, you might compare a stock to an index like the S&P. Well, let's stick here with the internal momentum and look at some studies. So here's a study done by S&P researcher Richard Tortello, who from 1992 to 2007, he studied and backtested thousands of indicators and fundamental ratios, and he published his results in the book called Quantitative Strategies to Achieve Alpha. Now, the majority of those thousands of indicators were fundamental. However, of all the thousands of indicators he tested, it was RSI that had the strongest alpha. So here are the results of his study from 1992 to 2007, broken down by the quintiles. Okay, so you can see the top quintile outperformed the market by 6%. That's 6% annualized. But the stocks with the least amount of RSI momentum, stocks with the weakest RSI going forward, produced the weakest returns, losing approximately 3% versus the benchmark, or lost 3% in alpha versus gaining 6% by the top versus the last decile, or excuse me, quintile. So notice in Tortillo's study from 92 to 2007 that the stocks with the highest RSI had the best results, and the stocks with the lowest RSI had the worst results. Now, I did my own study to verify this, and my study was on RSI from 2002 to 2023, and I used the Russell 3000 index members. Okay, and what I found is almost the exact opposite of performance. The top decile, the stocks with the highest RSI, underperformed by about 2% versus those with the lowest RSI, or by decile, outproduced by 7% of alpha. So lost 2 versus gaining 7. Okay, so thus the results show the exact opposite results. And what that tells you is when I'm going to go over this probably a few times, that momentum can really work, but sometimes it doesn't, and sometimes it just works differently. So the next one we're going to study is RS. Okay, RS is relative strength. So here we have a stock. Here we have its RSI, which is comparing its momentum to its previous momentum. And this is RS, which compares the stock to in this case, the S&P 500. And you can run this in these charts come from the MetaStock program. Okay, so this is RSI, this is RS. Relative to, this is momentum relative to the S&P. So again, we're going to look at Tortillo's studies, and in all those thousands of indicators he studied, relative strength was also near the top of the list. It was easily in the top 1% of all the indicators that he studied. And relative strength, the stocks in the top quintile outperformed by 3%. And the ones, again, in the bottom quintile underperformed by about 3%. Now, we did our own study on this relative strength, and we found confirmation that RS, relative strength, did indeed, in fact, work. We got about go back here. We found that RS, top decile, outperformed or produced about 4% of alpha. But in addition to that, we also found that the stocks with the weakest RS outperformed as well, almost by 5%. So both extremes did well in our study from 2002 to 2023. Okay, now let's move on to the next law of motion, the law of force, or volume in technical terms. So this definition, the law of second law of motion, the law of momentum, the acceleration of an object depends on the mass of the object and the amount of force applied. So we can redefine this in technical volume analysis terms. The more volume or force being applied to price, the stronger the expectation of momentum. So here's the analogy. Understanding the amount of force required to move a security at a given distance at a particular speed. So the price acceleration or momentum is powered through volume. Okay, so we're going to do this now is we're going to empower our RSI or infuse our relative strength index with volume. And how do we do that? We do that through another indicator called the money flow index. And to simplify this, the money flow index is the same indicator as RSI, except it includes volume in the calculation. So volume MFI is a volume weighted RSI. So with the MFI, you're weighting the RSI to what's happening here on the bottom chart with the volume. So we're adding that volume information into the RSI. So here we have the RSI and here we have the MFI. Okay, so what happens when we do this? So when we infuse the RSI here with the MFI, we take this bottom decile 2% of underperformance and we turn it into 2% of outperformance. So we got a 4% delta between simply by adding volume into our calculation. We took a losing strategy and that lost 2% and we made it a winning strategy. Moving on to the third and final law of motion. The third law of motion is action and reaction, or in volume analysis terms, this is price volume asymmetry. Okay, the law of action and reaction states every action has an equal and opposite reaction. And so the analogy here is the difference between price and volume exposes an asymmetry between price momentum and the volume. Now, don't underestimate this. This is the key. This, of all the factors, is the strongest one, but it's the one everyone misses out on. Okay, think about it like this. Demand is pushing and then supply pushes back, and we are going to use this symmetry, this delta between price momentum and volume to expose what that looks like. So to give you an example of this, we looked earlier at the VPCI, the volume price confirmation indicator. Remember, I told you this isn't an indicator that you want to use by itself. It's used to verify what's happening with momentum, but most importantly, trends. But in this study, we're going to use it all by itself, not as a confirmation indicator, but use it as its own indicator. And so what we did is we took the S&P 500 and we invested in the top 10% of the stocks that showed the strongest or the highest VPCI scores. Okay, and then we bought those top 10. And then when they sell out of the top 50, that's when we sell them. And that strategy is the red line here, which produced 3% of alpha over the previous 2 decades, from 2000 to 2020. Okay. Now, what happens when we do the same thing with momentum? So here, and what we're doing is we're using another indicator that you have available in that MetaStock suite, my volume analysis suite, called the VMI. And actually, this is I think relatively newly added. Okay, so this is the VMI, and what we're doing with the VMI is we're taking the difference between the RSI and the MFI, which is the asymmetry between price momentum and volume adjusted or volume weighted momentum. And what happens when we do that? We move our returns from approximately 12% to almost 20% by investing in those stocks that have the highest VMI, or a symmetry between price, momentum, and volume. So let's review this, okay? Newton's first law of motion. Volume is the unbalanced force that causes price change. Okay, price is the effect, volume is the cause. The second law of motion. Price acceleration or momentum is powered through volume. Okay, volume is the fuel. Okay, and the third law of motion, the difference between momentum and volume adjusted momentum exposes an asymmetry between price and volume momentum. So let's go over the strategies that we discussed. One, we had a winning strategy of stocks with had strong relative strength, but we also showed good results, even actually a little better results, the stocks with the weakest relative strength. Well, by using absolute relative strength, we can capture stocks both in the top decile and the bottom decile. So we're going to use absolute relative strength, which includes both of these. Then we're going to add to that this VPCI that confirms the momentum or the trend. And then we're going to add in our VMI, which is the asymmetry between price, momentum, and volume. And we're going to put all this together into one indicator, okay, or one, and we're going to study that, and we're going to invest in the top deciles, or the deciles of this trait: relative strength, VPCI, and VMI. Okay, so this is kind of what it looks like. This is RS. This is the VPCI, and this is the VMI, a volume momentum indicator. Okay, we're going to invest in the stocks that have the highest combination of scores between these. And what happens? Our 12% return is almost doubled to actually it's a 24.5% annualized return from 2002 to February of 2023 using this combination of absolute relative strength, VPCI, and the VMI, which is MFI is simple. It's just MFI minus RSI, the delta there. To kind of put this in terms, if you would have started in 2000 and put $10,000 into, say, a Roth IRA, in the Russell 3000, this does have in the Russell 3000 with survivor bias, it does have survivor bias to the study. It would have grown to 123,000, compared to just $10,000 over 2 decades would have grown to over $1 million using this combination. And here are the annualized returns. So hopefully by now, I have proved to you that volume is not only a factor, but it is the factor that rules them all. But if not, let me leave you with this one last nugget. The FAMA French model is considered the gold standard of factor investing. To be considered or to be labeled a factor, that factor has to have a p-value of 0.05. The p-value uses the null hypothesis. It's just the probability of chance. A p-value of 5 or 0.05 means there's only a 5% chance that the results are random. That this came by random chance. And the lower the p-value, the stronger. So the factors that have the strongest p-values don't clear the 0.05, but go all the way down to 0.01. Those factors would include quality is one of the strongest factors, and momentum are the two strongest factors. They have p-values of right around 0.01. So this Dr. Matthew Ludy, he took a couple of my tools that you have available in the MetaStock volume add-on, and he published the results in JADE, which is the Journal of Accounting and Business and Economics. And here's what his results were: is that the volume factor didn't have a p-value of 0.05, meaning Barry cleared it, or 0.01, meaning that it was the top. It didn't even have a p-value of 0.001. Had a value of 0.001, which means that it's literally off the charts. It's in a class of its own volume. This volume factor. It's 100 times greater than the next best factors. So one of the things I did here is that in your MetaStock toolbox, my volume add-on, you can screen using my volume setups. Okay, and so this weekend I ran that screen and pulled up a few stocks that that came off of the screen. So first of all, these are the signals that you get. A red arrow means it's the short signal. A green arrow is a buy signal. Okay, the indicators that it's using are we didn't explain this in this presentation, but one of the indicators in here is my trend thrust indicator. And the trend thrust indicator is kind of, think about it like, if you're familiar with the MACD, it's like the MACD on super steroids, because it uses volume ratios to adapt an adaptive indicator, the MACD settings to improve it, is to make it more responsive and more reliable. To give you an example of some of the studies on TTI, just quickly, the MACD works about a third of the time, which you would expect because stocks trend about a third of the time. When you add on, when you use the TTI, it increases the success rate from 33% to over 50%. And of course, it improves all the other statistics as well. So the next is the VPCI here. We've talked about that before. And then this right here is the VMI we talked about. So this is Chubb, and this is one that got a double signal. We got a signal here early in the first quarter to start the year. And then we got another signal just last week. So this was the first one, and then it re-signaled here again just last week. This is on holding ON, and again we got a signal here, exit, and now we just got back in it again right here with the green arrow. Okay, on very high volume, a rising VMI, a rising VPCI, and a rising TTI. Okay, now here's another one, GDS. GDS is a stock you see that in a strong downtrend, but notice the VPCI or the TTI is turning up. Okay, and so is the VMI. The VPCI is flat, but if you're in a this is a triangle pattern. Anytime you're in a triangle pattern, just a hint, I don't use the VPCI. Triangles kind of aren't really the way the triangles formations form. It's not a good. I would ignore the BPCI in this triangle formation. But we get a really nice signal. We got another buy signal last week on the on GDS Holdings on the setup, and then finally here we have Louisiana Pacific. Again, a good strong high TTI and a VMI well over 0 and a breakout here on the charts. You can see some of the former signals here. I didn't explain these. The green is if you're short, that's your stop loss. The red is your stop loss. This is what I call the anti-volume stop loss. This is worth it in and of itself. This tells you when to exit a trade. Okay, it uses support, volatility and volume to determine where your stop point is. So if you want to learn more information, you can check out my website, buffdormeier.com. In addition to that, I got on July 2nd, I have a new book coming out on this very topic, The Volume Factor, and it's available for pre-order on my website, buffdormeier.com. And of course, it's available in all the major bookstores. So with that, Jeff, that concludes what I had to share with you today. Do you have any questions from the group or any comments from you? Can you hear me? Yeah, I'm here.
I'm sorry, I thought I had unmuted myself. Buff, we have a question from the chat. Neil wants to know, how long do you look back with your volume studies?
What am I? Okay, so
what's your look back period? Typically, when you start looking at doing testing with your studies, how long do you go back? Do you go back years, decades?
So I had 2 decades in my study. Okay. A little bit over 2 decades of back testing. Also the time, the time frame. When you sit, you can manipulate a lot of things by changing time frames. So what I always do is I always use the calendar. And so what I'm looking at when I show my those back test results, I'm looking at 1 quarter. I reconstitute the portfolio every quarter based on 2 quarters of data. So I'm looking at the VMI over the past 2 quarters, or the VPCI over the past 2 quarters, and then every quarter I re-rank them. So that's how we do it. That way it's unbiased. We're not manipulating, trying to figure out, optimize it by trying to find what's the best combination. It's strictly based on the calendar.
How do you how often, out of curiosity, do you rebalance your ETFs?
So the ETFs play offense, defense, and special teams. The offense is rebalanced every quarter, very similar to what I showed here. So every quarter I re-rank the stocks or the ETFs that go into the portfolio. So every quarter I'm re-ranking them, and the portfolio can be completely, and usually is, completely reconstituted every quarter at the end of each quarter. So it's approximately 400% turnover every year, because we're reconstituting it every quarter. Now they also play defense, and that means that when I look at the broad market, we may move if the broad market breaks down and capital flows turn negative, like 2022, then we will take risk off of the portfolio and move into a defensive posture. And we look at that every week. So at the end of every week, we look and see if the market is looking strong as far as capital flows, or is that trend turned down? Right now, the trend in capital flows is really strong and has been since the beginning of 2023. Volume has been strongly leading the price trend. And then the final piece is what I call special teams. Special teams is how do you, once you're in a defensive posture, how do you transition back to offense? Okay, this is a critical concept because trend followers, if you're following the trend, the most powerful point of a bull market is generally its birth. It's when it flips from going strongly down to suddenly going strongly up. Okay, that's how most bull markets are born, on the capitulation of a bear market. So the special teams is identifying those capitulation points to position you early, sometimes even before the market bottoms out. So using volume, but more as a sentiment indicator. And that's using some tools with that VPCI that I showed. So, and that's done it can be done not on a quarterly basis or a weekly basis, but that we can look at every day. If we're in a defensive posture, we get a capitulation sign that's looked at, every day, because that's when that happens, we want to be spot on and exercising that right away.
Okay, perfect. Buff, I want to say thank you for joining us and talk a little bit more about everything that we put together in our add-on with you. But I want to say thank you for all the work you've done, and thanks for joining us today.
Yeah, so just to summarize, okay, think about it like this. What did Yoda always say before engaging in an important mission? May the force be with you. Volume, my friends, is the force of the capital markets. So remember, volume is the force, and you, as a trader or investor, want to make sure you're on the right side of it.
Very good, and may the force be with you, Buff. All right, let me do this, and let's go ahead and kind of just talk about everything that is actually included in the add-on. So go ahead and push some buttons here, kind of take the presentation, show my screen, show my camera. I need to set this all up as a kind of a batch process that just happens. I just say take over, and because sometimes I forget things and that kind of stuff. Let me go ahead and just kind of talk a little bit about this add-on. Everything that Buff talked about is available as systems. We developed 2 expert systems with him. We just actually reworked this too at the I think it was the beginning of this year, if I'm not mistaken. But we got 2 expert systems, 2 scans, 2 system tests, 24 custom indicators in 2 systems. And this here's a list of the indicators that are in there. I'm not going to kind of read that all out to you, but it does include the systems, the ability to go and test, the ability to scan, the ability to find that out, and really some really impressive volume studies by a guy who literally runs a hedge fund, and all of the studies that he uses, all the stuff that is in the white paper that's available from him. So normally the cost for Buff Dormeier's analysis toolkit is $149 per month. If you're interested in picking it up, you can get $99 per month as a permanent price. And if you do that, we're going to give you 2 extra months for free. So you can do that in a number of different ways. You can give us a call. The phone number is 800. Let me go ahead and type this out, 800-882-3040. You can also go to metastock.com/saleschat. And you can also go to metastock.com/promo, where all of the MetaStock offers will be. So very, very much appreciate Buff for coming in, showing that to us. and just another great tool. I do want to say thank you. I think it's CMT's turn. I want to say thank you to all of our sponsors, Stocks and Commodities Magazine, Chartered Market Technicians, Technotrader. CMT is very well respected, very well reputed organization. Tyler talked a little bit earlier today. If you're interested in joining the courses for the next CMT certification, get in touch with them, cmtassociation.org. You can call them at 646-652-3300. And of course, we are MetaStock. You can pick up all of this stuff. Greg, are you with me this time? Uh-oh.
Sorry, I couldn't
So Greg was your last time.
I was so panicked to try and get with you. I was stammering with the button to turn the mic off.
The mute button is elusive, isn't it?
It is elusive. It's very small, and it's kind of hard to see because this particular laptop is about 3 feet away from my face, and I'm old, and I can't see things that far.
Yeah.
So there.
Well, it's like when I was trying to ask those questions to Buff and get in the way with Buff. Like, I thought I was turned on, and I was like, "Hey, yeah, here's a question from Neil." And then like, why is not? Can he not hear me? And
I always try to wait about 3 seconds past when it's uncomfortable when you don't respond to a presenter before I cut in and say, "Well, let's see if we can find Jeff." And then you, as invariably, right when I cut in,
I'm always
you
here.
go ahead and say, "Oh, I'm
I
here."
don't leave. Let's see. So we're gonna give away some MetaStock. We're going to give it away to somebody that's registered. If you're watching us in GoToWebinar, you're already registered. Don't worry about it. If you're watching us right now on YouTube and you haven't, there's a button that you can click on. It's a highlighted comment, and you can click on that and you can register and enter to the prize. Right now, what we're going to do is give away the Mega MetaStock prize. So what you're going to get is you're going to get 3 months of MetaStock. MetaStock's been rated #1 in its price category for 31 years in a row. It helps you scan the markets, test trading ideas, helps you do forecasting, helps you get real-time alerts, commentary signals. It says starting at $59 a month, but that's it for the international. If you're here in the US, it's $69. But we're going to give you the real-time version of MetaStock. So we're going to give away, a winner 3 months of MetaStock real time. We're going to give them the Zenith data package. The Zenith data package is that Bloomberg competitor that we've been talking about, the one that has all the Reuters information, the Reuters news. Is supported by 3,000 news reporters, has 30,000 different research reports that are available as part of it. Really, really comprehensive news package. We're going to give you 3 months of that. We're also going to give you 3 months of a service called Learn MetaStock, which will just help you learn everything. And so, Greg, I'm going to have you give me a number. I'm going to go ahead and look at my spreadsheet right
Remind
here.
me the high-end number.
Yeah. I need to remind me. 8541. So anything between 1 and 8,541.
Okay, I've put that into my... I'm certain that this app I got free off the internet works flawlessly to find a random number.
Yeah,
And,
so everybody just wait until Greg watches an ad real quick. And then you can get a number.
No, actually, no. The number is 1544.
1544.
1544. By the way, while you're pulling that up, it occurs to me that MetaStock is rated #1 by Task Magazine about 2/3 of your life, and half of mine.
Yeah. Actually, you're not wrong.
Consecutive.
You're not wrong.
So since I was
very cool.
Since you were like what 10.
Right, exactly. Yeah. Yeah. Well, okay. Because I think it was like about 3 years before I started, they started winning the prizes. So it's not quite that. I wasn't quite 10. Maybe 24. I'd have to do the math, which is late in the day. Anyway, the winner is Nevin V in the USA. So Nevin, I'm going to go ahead and write down your information. I'll reach out to you. We're going to need to make sure that we have a full address that's current. That's an exchange requirement we get from our provider, as well as the exchanges if we give you real-time data. So as long as that all checks out and we can kind of get back from you, we'll get you set up for that, and I will reach out to you Tuesday after Memorial Day. So if you want to get any of the offers that we've talked about today, metastock.com/conf promo, give us a call, 800-882-3040, or metastock.com/saleschat. Thanks for the assist, Greg.
You are welcome. Let me know if you need anything else. I'll be right here for sure.
Okay, sounds good. Our next presenter is Norman Hallett. Norman is a frequent guest here on the conference, and we want to welcome him in here. He does a great job. He's going to talk about if prop trading is a good fit for you, if it's something that you're interested in doing. So let me go ahead and kind of get you over here. Norman, I'm going to go ahead and make you the organizer, or I'm going to make you an organizer so you can see all the questions if you want to. And I'm going to go ahead and make you
no force be with me.
May the force be with you as well. See, I love it when we can get nerdy and talk about Star Wars because, I'll nerd out with anybody.
All right. I enjoyed it. I think you could probably see me here, right?
Let me see. I don't see you, but my GoToWebinar's gotten a little. Okay.
Okay, yeah, you're going to have to let me share it. I see. Hang on 1 second. All right, it's there I am. Okay, we're going to share it again. How's that look? You see anything?
Yeah, Jeff,
Craig, do you see anything?
Yeah, he's there next to you, and I can see his
webinar needs a restart.
Yeah, I can see him, and I can see the prop trading math screen.
Oh, there he is.
There he is.
Yeah.
All my travel stuff here. This is, I think this is Egypt over here. Is the globe of the world. You know, we all actually. It's true. Do you like to travel, Jeff? I never really asked you that. You know, a lot of traders like to travel.
I do, but I also like to come home. If you know what I mean.
Have a family. I don't. You know, I have a wife, and that's it. You know, so. And I like to come home to the dog, though. That's true.
Yeah. It's always good to come home because you get your bed and you're comfortable again. But I do love to travel. Like I've had some really great trips to all kinds of places. So yes, I do.
Listen, I'm on my way to Istanbul to meet my brothers.
That'll be fun. I can't say I've been there.
It's a very cool city because the airport is a central airport. It's like really the jumping place for so many other. I'm just going to kind of say goodbye to my face so that we can concentrate on this. I think you've seen enough of the Hallett face.
Oh, I don't think I could see too much of that, Norman.
Here we go. Okay.
But in any case, I can see you and I can hear you, and I'm going to get out of your way. It's your turn.
I appreciate it. I appreciate you having me. I'm going to assume you saved the best for last, at least for Wednesday. And you've got so many great speakers. It's really, I almost didn't get those words out of my mouth. There's so many great, you know, when I watch The Voice or, you know, You Think You Can Dance, those kinds of things, the person they put on last is usually the favorite. So I'm gonna take that. And let me kind of begin by saying prop trading is probably, from what I can tell, one of the fastest, if not the fastest growing segments in the speculative industry. The fact that you can actually risk somebody else's money, a prop trading firm's money, albeit with very tight parameters, which is really what I want to point to here. It's real. I've been getting money in my account, and as well as many others that I know that work with me on my with my trading plan and so on. And there's others. I'm going to show you some of those figures that it almost didn't sound real when I first saw it. And for you out there, there's probably a few that's still on the fence whether this thing is real. And it is real. Not only is it real, but it's growing at a pace that that's almost mind-bending. I'm going to show you what that pace is. But I want to get into, is it worth it kind of thing? And is it real? Is it worth it? And if it is, how do you go about doing it? And really, everything is really behind the math. So let's get into it. My name is Norman Hallett. I've been a disciplined trader online since 2000. That's also before Jeff was born. But probably not. I think I did the math. Sounds like you're 41 years old, Jeffrey. So that's so I was. You were 21 years old when I started as a disciplined trader. Also put together. I've written several books on building responsible trading plans. and that falls under the Simple Trading Plan moniker, as well as the most recent Their Money, Your Profit, which is really what this prop trading is all about. So let's get into it.
Hey,
And-
Norm, I wanted to jump in because Greg's been teasing me for a while. I just turned 50 last week. So so now I'm officially out of my 40s and into my 50s. So
it was Jeff that was screwed up with the math. He said 30 years, and he said you were 11, and I saw 31 years that you guys have been number one. I didn't. Maybe I was. I got out of math because they started teaching something called imaginary number theory, which, I mean, why deal in the unimaginable? I mean, I don't know. But maybe your cohort was using the imaginary number theory, which
he's older than I am, and it's a little bit harder. I was 19 when we started winning the rewards.
Well, everybody's older than you are when it comes to. Okay. All right. Well, anytime you want to interrupt me, go ahead. It's not really an interruption. It's an addition to my presentation. All right, prop trading math. Let's get into it. I want to ask you a couple of simple questions just to start out. Well, first, let me tell you quickly about me. That is a picture of McMicken Hall at the University of Cincinnati. That's where I graduated with a math degree. I started as engineering. I followed my brother's footsteps, but I really wasn't much of an engineer. So I gathered up all my credits and got out the door. And in the meantime, I was Cincinnati is a work-study school where you go for a quarter, work for a quarter. So I had to pay my way through college, and that's what I did. And I did it at this place called the Prime and Wine Restaurant. I was a server. And when I graduated, I became an assistant manager. And actually, they flew me down to Dallas to open a Prime and Wine down there. But I got into the restaurant business. It was cash business. If you own any of these cars, incidentally, you're a rich person, I think, if it's in good shape. Because that was we're talking now the late 70s. I realized, though, after spending the time, the money in the restaurant business, the money was in the liquor. So I was kind of bought out I was offered a job with a place called American Events Corporation, and I opened the first Park Avenue Club. It was $1,000 membership a year. Again, this was in the late 70s, and we were supposed to be a contender for Studio 54, kind of an alternate. Never quite reached that level. This particular club was on 500 Water Street in Milwaukee. You probably remember that club if you were there. It had all the dancing women and guys, and we had professional dancers coming in, the smoke out of the dry ice coming from the basement up to. It was a trip. But the truth is, you can't stay in that business for very long and keep your sanity. So I moved on, and my brother was he was very into gold at that time. A guy named Harry Brown was the gold bug of choice at that time. So I read his book, and I said, I think I could sell gold. So I took a job selling gold, went to San Francisco, took a job selling gold options, gold and silver options. And it wasn't 3 weeks I was into it where everybody was gone. So I joined the biggest option firm in the country at the time. And within a year and a half, I was the regional vice president and running an office that looked a lot like this. This is not a perfect picture. Couldn't find one of my old operation, but this was, I had 60 traders under me who were responsible for doing the best that they could for their clients. The issue was mostly that anybody that was in the bottom of the production tally and their production for the least profitable traders were those that had very complicated trading plans. I used to take out my red pen and just mark it up. I'm into simple trading plans. Everybody has a thing that previews or that is the dominant force in their trading plan. Buff, for instance, before me, he's a volume guy, all about volume. And I'm all about triggers and high percentage takeoffs from a trigger. In any event, it doesn't matter what you're about. In this particular case, you could have traded any way you wanted as long as it was a responsible way. But based on this, I began my question helping traders with their trading plans. I was bought out of this deal by Payne Weber. They wanted me to be a commodity trading advisor, which I was. I was managing millions for them. But it wound up to be more of a sales job than it was a trading job. I really didn't like it. Only stayed with them a couple of years till I opened up my own thing. As I said, and here I am, fast forward to actually to 2000. I guess that's not so fast, but started the Disciplined Trader. This book right here is still actually available on at Amazon as well. So I've written several books on trading plans. The books have been written about me. The inspirational quotes from the Disciplined Trader actually been written by one of my employees who just took all of my witticisms and put them in a book. Again, Disciplined Trader, because I believe that 90% of traders do little or nothing to help their mental and emotional conditioning to run their trading plans as written. And 90% of traders are unsuccessful or struggle, either break even or mostly actually losing. And I believe those two numbers go together. I believe that if you can just stop the music and put some time, half the time that you put into your trading and reviewing your trades, if you put half that time into your mental discipline, that's going to really take you to different levels. That's another story. Today I'm talking about their money and your profit, which is the new world really of prop trading. So let's get into it. That's all about me. Question for you: how much money did it cost you to trade last year? Mostly, how much money have you lost? You may own your trading platform already. You probably still pay for your data feed or whatever, but there are costs involved in trading your own money. Most of it is in the money lost while trading column. I want you to kind of think of what that was last year, or and just kind of keep that number in your mind, because as I go through the math, I want you to see the relative difference between what you're risking now and getting into the prop trading arena where you're risking their money, and but you get 90 to 100% of the profit. I'm going to show you why that is and why you shouldn't worry about prop trading firms, because they're making plenty of money. But it gives us an opportunity. If you're a capable trader, it's going to give you a tremendous opportunity. The thing about it is most of those who realize the beauty of prop trading are those that have a lot of money, trading 100, 200,000 of their own money and more, and see why should they trade their own money when they could be trading somebody else's money. Put that money in something at 5% and let it make money on its own, but use somebody else's money. I always thought that it was the $5,000 and $10,000, $20,000 trader that would love to be running 100 or 200 or 800,000 like I'm presently trading in these prop trading firms. But let me show you how that works. I did a study on prop trading firms. These are I commissioned a fella. His name is Brady. I call him my young genius. And he went out. I gave him the parameters. How long has the prop trading firm been in business? Are they growing? A number of different parameters. He put it in this study. If you are interested in this study, just email me. Email admin@thedisciplinedtrader.com. Go ahead and email and say, hey, can you send me that study that Norman was showing on that fateful slide? So just email me at admin@thedisciplinedtrader.com and I will send you this study so that you can actually read it. But let's zoom in on the winner. There are really two winners here, Apex and Top Step. I first passed and traded with Top Step, but moved everything to Apex. You've got a choice here, but I'm going to be talking about Apex right now as far as a firm to do. They won the contest when it came to this study, okay? And here are some of the reasons. Apex, in this first box, their monthly average compensation since 15 months ago or 18 months ago, since January of 2023, is almost $11 million. They're at, but that's impressive. So they're writing checks to people like you and me, not writing checks, they wire it into your account. And twice a month you can ask for money. They wire it in your account, over almost $11 million. Their total compensation to customers since 2022, which is not far from when they started, is almost $200 million. But here's the most impressive. If you look at this number and you look at the quick math would say 24 months, let's call it 29 months if you count May, 29 months, but in the last 90 days, they've paid out 73 million of that 178. What does that tell you? It means that they're growing. In fact, if you broke this number down, you'd see that it's a growing number even month by month. So here's a company that's growing. Why? Because they seem to have the best deals for people. I'm going to show you what that looks like. Now, I'm not related to Apex, although I've chosen them in my study. So, and I trade through them, so they kind of love me for that. But here is, I want to concentrate on a $50,000 account with Apex. I zoomed in on a piece of that chart I showed you before in the previous slide. And if you look at, they have different offerings. You can test, you first have to test and qualify. Once you qualify, you can then start trading. They'll fund you for that amount and under the same parameters. I'll show you what those parameters. I don't want to dig too much deep in the math. I want to get too cloudy because there really isn't much, but this is a short presentation and I just want to offer the basics to you. If we concentrate on this $50,000 account, if you want to test for and this is where I believe you should start, it's going to cost you $167 a month. This is not a real figure. This year, they've never charged 167. They've actually given at least 70% off, sometimes 80 or 90. Right now, it's 90% off. So right now, it's $16.70 a month if you wanted to test for the $50,000 account. And what they want you to do is make that 50,000 53,000 before you lose 2,500 from your open trade high. Meaning that if you had just real quickly, I'll only say this once because I don't want to confuse you. You can learn about it if you get a little deeper. But the idea is that if you have a trade on that has $1,000 open trade equity and you let it go back down to break even, they count that against you in this 2,500. I mention it here because I have found that the most responsible way to trade, the way I see it and the way I've had success and others, is that you have to introduce a scalping mechanism, a scalping process to your trade. I've never been a scalper, but I am now when it comes to prop trading. And the reason is because when you get a profit, you don't want to give it back because it counts against your drawdown. So what I like to see done is I like to take two contracts. I'm talking the futures market right now. There's prop trading for option traders. There's prop trading for Forex, but most of them are moving now. I mean, the vast majority, 90%, are just doing futures. It's the cleanest. It's the best way to do it. And what I'm saying to you is that you've got to cross that $3,000. So when this 50,000 becomes 3,000, 53,000 and $1, you stop trading. And now you are funded. They actually fund you with $50,000 under the same parameters. Okay, you could lose that funded account if you hit that red line again. But generally, I'm just giving you kind of a general opinion here. Okay, but let's look at some of the numbers. Okay, in the evaluation stage, I mentioned there are really a few stages, but the main stages are the evaluation stage where they're evaluating you. I'll call it the testing stage. It's listed again I'm talking about the $50,000 account as $167,000. Again, they never do that. They either give you 70, 80, or 90% off. Let's take the middle one. Okay. Well, for this, so they're either charging 49, 34, or 17 a month, not 167. And there is a reset fee. If you blow out this account, if you breach the 2,500, okay, before you reach 53, 25, before you reach 53,000. You're going to bust out the account and they'll ask you, would you like to reset it? All you have to do is pay another $80 and you can reset that. Well, right now they have a $40 reset. They're giving resets for half off. Right now, because they're only charging $16.70, you're better off closing this account and just opening a new one. So $17 a month. Let's continue again with the 34 a month. and there's possible reset. But the idea here is you start with the monthly fee. You likely will not have to pay past the first month. When you get good at this, you can do this very quickly, and it doesn't take a long time to get. But maybe for a very beginner, maybe it's going to take you 2 months. You'll pay right now $17 twice. But in my example here, you're going to pay $34 a month. The example I'm using here that I set up is the 80%, which seems to be the most often they have. Okay, so let's get in. So if it took you 2 months to pass, and you blew it out twice, and you had 2 resets. That's $34 twice and $40 twice. That would be $144 in this particular math. Then you're funded. Now here's what happens when you're funded. You have a choice in a $50,000 account of paying $80 a month, and that's all you ever pay. As you make money in that account, you're going to be paid 90% of what you earn. In fact, they're paying me and everybody else 100% of the first $25,000 that you earn in this $50,000. So it's either 90 or 100%. But the idea is that the cost to you to continue to trade your funded account is $80 a month, or you can just pay one time, lifetime. Before you start trading the funded account, you have to make this decision. Now, of course, because I'm confident in my trading plan, I pay the $140, and I never have another fee again. Okay. They allow different platforms. If you don't have one, they'll give you one, and they have the feed also that they comp you with. So your data feed trading platform, the monthly cost, it's not there. Okay, you either have to pay $180 a month or $140 a month. That is it. So if you choose what I choose, the $140, it costs you $140 is what you cost to test, because you blew out the account twice. You took 2 months and you reset it twice. And the $140, you chose lifetime, $244. And now you have $50,000 in order to trade. And when you trade that money to a profit, you're going to receive 100% of the first 25,000. But let's talk in terms of 90% lifetime of that. Okay. Now, why would they do that? I mean, why would they give you 90% or 100% of the first 25,000? The reason is because most people continue to blow out their accounts. If you're not a successful trader now, you likely won't be a successful trader here unless you make a couple of changes, and I'm going to allude to those changes in a moment. But I've already alluded to one. You've got to do a little bit of scalping, in my opinion, in order to do that. It's very easy to do. Our system that I'm going to be offering you at the end will show you how to do that very simply. But the idea here is that you've got the opportunity to make all this money. Why do they do it? Well, because 90% of traders are still struggling with, they'll get funded, but it won't last very long. You got to go back to the evaluation stage if you blow out your funded account. They are working on these fees on and on and on and on. Don't worry about them. The other thing is that when you're trading somebody else's money, I mean, you got to respect somebody else's money, and of course, there's no name involved in it. It's kind of it's real money, but it's part of a pool of money that you're trading. It's real money, but if you have to, like we had to do in the firm that I showed you those pictures of, we had to call our clients and let them know what was going on. You don't do that. You're trading somebody else's pooled money, but the cortisone level goes down. It's a lot more relaxing to trade other people's money, in this case, other people's corporate money, than it is to trade your own. And so from that standpoint, there's going to be a little bit higher percentage of winners because of that lower cortisol. Again, I'm very much into the mental and emotional part of this, and it does help to trade other people, but still, you have to be a disciplined trader or none of this is going to work. Okay, let me show you what, there's a required minimum balance to request a withdrawal. Let's talk about withdrawing money. Let's say you have that $50,000 account, okay, and you've passed it, you are now qualified and you've been funded. Once you trade that $50,000 to 52.6, you can then start to withdraw money. And what I mean by that is that every 2 weeks, the 1st of the month and the 15th of the month, you can request payout for them on your profit. Now, when you cross, let's say you end that pay period, that 2-week period, and your account is at 52.6. At that point, your red line is $2,500 less than this, or $50,100. If you take out $500, if you ask that, $500 is the minimum you can request, and you can request request as much as $2,000 each pay period in a $50,000 account. So that expands, incidentally. That restriction of only $2,000 a month, or a pay period, so twice a month, is only for the first few months. Once you've asked for money at least once a month for a few months, there is no restriction on how much profit you can take. So again, there's a lot of math I'm throwing out at you. You can look at the replay of this if you want, or you can come aboard with me and we can do this together. But the idea is that once you reach 52.6 and you've closed all your trades, and it's the first of the month, you can now request $500, let's say. If you request $500, this balance is now going to be $52,100, but that red line is still at 50,100. Okay, so you've taken away a little bit of your cushion by doing that. You certainly don't want to ask for $2,000, because then you're going to be right at $50,600, and you're going to be $500 away from the red line. So the idea here is you want to be very cool about what you withdraw in the beginning. You want to build this up. You want to build this to 55, 65, 75, because at 75,000, even if you have a tough couple of weeks, you can easily request $3,000, $4,000, $5,000. So it becomes a business. You've got to think about this as a business. I want to further say that the people who are taking out $100,000 a month, and there are many of them that are taking out $100,000 a month, or even each pay period, they have 20 of these $50,000 accounts. They make one trade in all of them at the same time with what they call a trade copier. They make one trade and they'll make a $300 trade, and with 20 accounts, they've made $6,000. They stop for the day. So this is something that you can build a business around. I'm going to give you a little bit of insight to that, but I just wanted to let you know that once you, in the $50,000 account, once you pass 52.6, you can start withdrawing money. Okay, in $50,000 account, if your balance reaches 52,000, you cannot request a payout because it's not 52.6. Okay, all right. I think I've beaten that. I hate that expression. I've banged that around. It's even worse. All right, let's take a look at something else I wanted to show you, and that is how much money you can take out of each. I've mentioned it to you. Again, in the $50,000 account, you can take out as much. Once you've passed 52.6, you can take out as much as $2,000 each pay period. So each account, I mentioned you can have several, 20, 30. I've got 6 of these $50,000 accounts and 3 150s, but you can, each account is considered a separate standalone account, which means that so it means that if you have 10 of these accounts, you can withdraw the maximum on each account for each of the 2 pay periods. For example, if you have 10 $50,000 accounts, you can withdraw $2,000 from each account for a total of $20,000. You can do that twice a month. So it doesn't take long for this to start to get very, very lucrative. But again, you have to learn how to control your risk, because that red line can creep up to you. Okay, I don't want to go through too much more math except for give you kind of the potential, but I want to show you how some of these big money people are doing it. They use something called trade copier, and what you can do here is, let's say you have 10 $50,000 accounts. Now we're looking into your future, okay? You have 10 $50,000 accounts. You make one trade, as I mentioned. You make $3,000 in one trade, and you're done for the day. Okay. Or you can. This is some of the things I'm testing right now for the people that work with me and I coach. If you can also, instead of doing the same thing with each of them, kind of diversify a little. Same position, but different exposures, the different position sizing. Okay, let's say you do 2 contracts of something in half of those accounts, and 4 contracts in the other half of those accounts, and you're using trade copier, you can actually press one button and they'll put any amount of contracts in any of the accounts that you specify. So all this can be done with one. When you get to that point, don't worry about that now. So here's somebody who's diversified, and but what about if you lose? What if you want to diversify by having 3 different trades in each of these accounts? Let's say you have 3 different accounts. You have one type of trade, 4 accounts. You have another trade, and 5 and the 3 remaining accounts out of your 10 you have. And so this is a possible mix where you have a loser and a couple of winners because your system has 67% where you can get the scalp as our system does, but which is a very high figure incidentally, but I think once you work with us, you'll see why that is. But the idea is that if you can diversify, again, you have a lot of positive outcomes, but when you're in business, you don't want to have one stream of income. Although I will have to say that the majority of $100,000 earners that I've interviewed, and I've really only gotten to 2 of them, there's many, most of them won't even talk to you. This is what they do. They find a good system and they make 1 or 2 trades, and that's it for the day. So you can do it any way you want, but again, that's up to you and the way you want to do it. Okay. So let me just mention diversification. I believe is important, which is why I kind of go for number 3. Again, I'm testing it, but again, I have no problem with any means of diversification or the way others are doing it. Okay, why reinvent the wheel in some cases? Okay, the advantage for those who have limited time to trade. Here's somebody that puts in 1 trade and leaves. So multiple accounts can really help you if you have a limited time to trade. And you can be more aggressive in a few of them than others. So you can diversify in all kinds of different ways, okay? But don't worry about any of this. What I want you to think about is trying just try 1 or 2 $50,000 accounts, qualify and start to work with it, because the potential is there. You just got to get through all of the, I'm not sure that this is, are they real? Get through all of that. It doesn't, nobody's going to take you for $16.70 a month, or their usual twice that, $33 or $34 a month. That's all, that is something that you can get past very quickly. And once you pass and start seeing that money wired into your account, all of the doubts start to go. Okay, look, in today's trading environment, the best approach to risk management is trading somebody else's money and being paid 90%. I mean, I'm just going to let that sit. I mean, I consider it a point of risk management. I mean, the money, your risk is of these fees, the very small fees that you pay, and your time. I mean, you don't want to be spending all, but I mean, you're spending a lot of time now and probably, struggling. If you're struggling, you're losing a lot more money than the numbers I'm showing you. So either way, time is important, okay? But it remains important here. You can be a commodity trading advisor like I was. I was running millions of dollars. I was being paid 20% of my profit, which I had some really great months. They were very high earning years, but there were times where I had lags, where the market was flat, like it has been all week this week, where it was very hard to really make the kind of money that you're capable of making when the markets are not being cooperative. So sometimes I would have no pay. But 20% is different from, 20% of millions of dollars is different from 90% of 50,000. But if you can build that up, you can be easily trading $1 million of somebody else's money. It's happening all the time. Or you can be a prop trader, as I mentioned, as I've just described, okay? So let me show you, prop trading firms are gonna fund you 50, 100, 300,000. I showed you that, and you're gonna earn 90% of that profit. With Apex, you're going to be earning 100% of the first 25,000. This is what it kind of looks like. This is exactly what they send you. Actually, the certificate's starting to look different now. When you qualify, this is one of the accounts that I qualified for 150,000. They send you one when you're qualifying. And as I mentioned, I've got 10. I've qualified for Top Step, but I'm no longer trading with them. And when you actually ask for your money the first time, when you wire into your account, they send you also, this is the first one that back in May of last year, they actually they actually give you a congratulations certificate for earning money. I actually have this, just like we did in the restaurant business. We'd hang up the first dollar bill. I have in my office, where I'm looking at it right now, this certificate for the first $1,000. But then every pay period, you can continue to do the same thing, and just continue to have that money flow in your account when you get good at this. Okay, so let me get to my offer to you. I want to work with you on this. And I'm going to give you a very reasonable offer. I believe it's not for everybody, but if you want to have me help you through this is my offer to you. This is for passing the proper evaluation, getting funded, and then paid. Okay, this is the loaded gun simple trading plan, which we've had for a couple of years and a few years, and I've altered it a bit with the concept of scalping in mind for some of the trades. I believe in scalping. I believe in always putting on two positions, scalping the first one and letting the other one run. I don't want to be in a market where I can't take advantage of a run that happens. So I've developed a system that has you stay away from that red line by continuing to scalp, grabbing money and padding it so that you stay away from that red line, and at the same time leaving the upside open for you. Okay. The core loaded gun simple trading plan is the basic offer. It's part of the offer. It's the basic part. It's a series of videos. It's only a couple of videos, and both of them together they're about an hour and a half. This is with all of the examples. This is a very simple trading plan that works, and it works for prop trading. Okay, it's got videos. It's again a couple of videos. All the rules fit on one sheet of paper. You'll be able to download the basic plan. Okay. Then I have what I call nuances. These nuances are specific small changes, tweaks that you can make in the trading plan that fit you as an individual. Remember I said that it's the mental part that trips up most traders, and you can either get yourself a little bit, you can train your mind to be more, for instance, more patient and wait for the setup to complete. You can do that. I suggest that you do that, but also you can change your trading plan to fit your tendencies so that you don't have to change. And that's what these nuances are about. So I believe in doing both. I believe in training your mind, and I also believe in changing a trading plan to fit. So there are 7 nuances that we have that keep you in a trade or allow you to. I'm an action person. I want to be in as many trades as I possibly can, be responsibly. And to do that, there's a tweak that you can use that does not increase your, none of these nuances increase your risk profile by any reason, by any unreasonable means. Just a couple of ticks usually, in fact, all the time, but yet are responsive to who you are. That's all I'll say about it. But these nuances really have made us famous. Nobody does these nuances because I don't think most trading plans don't understand that there's a nice way to fit the trader also with the plan without changing the risk parameters. So you get those nuances also. And we have monthly get-togethers every last Wednesday. If you were to contract with me today, not contract, but purchase the program that I'm going to offer you, then you can actually make the meeting. It's next Wednesday. It's the last Wednesday of every month. And if you can't make the meetings, you can have the recordings are all posted for you. We talk about updates to the trading plan if there are some of the things that I'm working on. Listen, I'm a guy that's always looking to improve. Things can always get better. They're great, but they can even be better. Why not? Markets change, and you got to change a little bit with the markets. The basic stuff doesn't change, but what happens when you have a flat market like we had the last couple of days when there's no reports that go out? There's a way to handle that with this trading system that can still get you profitable, or at least keep you out of harm's way during times like this. So the monthly get-togethers, I believe, are very important as we share experiences. There are traders with even more experience in form of floor traders, others that own loaded gun, and we talk about some of the successes and some of the struggles for some of the new people. We advise them through the meeting. So this is a great factor that keeps you glued to what we're doing. Okay, I also want to give you unlimited one-on-one coaching for 90 days. You and I will get together on a Zoom meeting, and I will understand your understanding after you've viewed the simple videos of the, you can kind of show me what you know, and I will correct you and adjust you, and we'll get into it. We'll have some laughs, but I want to make sure that you understand the simple trading plan as best as you can. And sometimes it takes 1 or 2 meetings, sometimes it takes 3 or 4. It usually doesn't take more than 1 or 2 meetings, but I want to hold it out for you. 90 days of unlimited coaching. Now, if you find this attractive, there's a limited number of these I can offer you at the price I'm going to offer, and there's a reason. I'll show you why. But I want to, and it's mostly this coaching. I've got to leave my calendar open, and I can't, 10 people can't grab this today, and I have my calendar. I couldn't accommodate you. You'd have to book out 3 weeks. I want you to be able to get a meeting with me right away, within a day, 2 days, a week, maximum. But it's usually a day or 2 or 3 days. Okay. So as soon as you invest in Loaded Gun, you're going to get an email with a calendar link and be able to schedule a personalized one-on-one walkthrough with me. And I'll proceed to learn about your trading background, advise you how to get a quick start. You'll be like one of those 60 people in my room 30, 40 years ago. Oh my God, don't even mention it. But I really loved when I did that. When I saw a trader turn around because he just took out all that crap off his trading plan. It really, I've never lost that feeling, and that's really why I do this this whole thing. As you perfect your running into trading plan, I'm going to be there as many times as you need me. I want to mention one thing. If you decide that if you jump on my offer, this 90 days doesn't start today. Okay, it's going to start with whenever you book your first session. Go ahead and take my offer, because you're probably going to want to do that. Take the offer, and then look at the videos, get a hang of it. Look at some of the get-togethers, the more recent get-togethers, so that you can see some of the things that we've done, and get a basic understanding, and then book the 90 days. Once we have the first meeting, that's when the 90-day clock will start. So if you've got things going on for the month or the next week or whatever, so you don't want to take advantage of my offer, know that, go ahead and do it anyway, because this 90-day starts at our first meeting, whenever you want that to be. I just had somebody that purchased it 4 months ago, but he's been on vacation. He just started he'll be starting his meeting actually tomorrow with me, the 90 days. So whatever, I want to fit your needs on this, because this is an opportunity that is only going to grow. I think it's the death of simulated trading. I've written a paper on this this was well received by the industry. It's been in print a number of times. It's been in several magazines, but I believe that this is the end of why it's the end of simulated trading. Why be a successful simulated trader only to then risk your own money? Here, if you're a successful simulated trader, you get funded with 50, 150. I'm testing now for $250,000 account. So I'm doing a lot of this testing and ideas just so I can hand you the keys. Okay. So I'm always looking for more. Okay. I'm satisfied. I'm very thankful for what I have. And my love and my friends and my wife for 43 years. I'm so thankful for all of that. But why not expand? Why not a little bit more if we can do it? So I want to help you to get where you want to go with prop trading, okay? And the magic of one-on-one coaching, I'll just fly through this: personalized attention, immediate feedback, confidentiality, and trust. Look, it's a very private business. It's you and the computer and your feelings and your hurts and your successes. I want to share that with you, but I want you to be, and I'll share you some of mine, but I want you to know that there is confidentiality and trust between us, okay? Tailored learning style, I've gone through that a little bit with you. Flexibility of scheduling, again, I've mentioned that. Depth of exploration, but here is the piece that really makes it happen. When we meet that first time and you say, yeah, I think I understand it, it's really good. I said, great, let's meet here in 2 weeks. And if you have any other questions, we can discuss it there. So think about making another meeting with me in a couple of weeks. I want to know that you know it. It works, but you got to know, you got to understand it. Again, it's a simple trading plan, but many of the people that start with me have other trading plans or have other notions, and it's okay to employ some of the things that we do, one or two of the things in this Loaded Gun simple trading plan in your in your current plan, there's a lot of people that do it. They take our triggers and so on. But I want you to know that I want you to understand this, and I'm not going to let you go on this. Yeah, I will. I mean, I'm not going to force you to make it, but I want you to look at this as a business. I want you to be serious about this, because this is a dream come true for many traders, especially for the smaller accounts. What I found interesting in the beginning is that it's the larger accounts, as I mentioned, that are doing this without hesitation, prop trading. But it's the $5 and $10 and $20 and $30,000 smaller accounts that really need to focus on this, I believe, because it's really the out. Because once you qualify for a 50, you're going to see your way through several 50s and so on. Okay. The fact that you have my back has made all the difference. I know I've only met you twice, but that's all I needed to understand your process. It's a whole new world for me. Thank you. It's Ronaldo from LA. He was a relatively new trader, but was very serious about it. The kind of seriousness that I want from you if you join. I want you to look at this as a business. Mike, who's a part-time trader out of Atlanta, he says, I passed the Apex $100,000 evaluation, 4 trading days, 4 days trading loaded gun, mostly scalping, but a few runners brought it home, which is what I like to see. I still have a few trading days to finish, but made $6,000 in 4 days this week. Great plan. Thanks so much. Really, thank you, Mike, for taking your time to leave that. And Sandra, who is my star, she said, I'm making some progress now. I really credit your guidance and your voices in my head. I now have 3 funded accounts with Apex. Requested my first small payout from 2 of those accounts yesterday. She requested, as my suggestion, $500 from each of those accounts. So she got $1,000, but that really generated her the excitement for her. She's got a lot more going now, but it's going to do the same for you. And just this month, somebody wrote, Ken wrote, I always call him Craig because he's got 2 first names, but it's Ken. He says that please share with your wife that since funding my first 5 Apex $50,000 account last Thursday and 5 more 2 days later this Tuesday, it doesn't take him long after a while. On these 10 funded accounts, he profited over $21,000 in real money, all in the NASDAQ. So this is real. He's working on 5 more accounts. He's taken that even further. God has so richly blessed me. I think gratitude, is part of what makes a winning trader. I think you got to be grateful for the opportunity, grateful for the wins, grateful for the losses. They all teach us something. So really proud of Ken, okay, who's you think I talk fast. Ken, you'll probably see him at one of the meetings. I want to give you a second bonus, and I'm going to set it all up for you. If you're done for you, set up for your data feed and trading platform. If you don't already have a trading platform, they'll give you one to help you set that up. Also the data feed, give you the data feed. They'll give you that. Apex and Top Step have a more advanced setup that can be confusing to some tech challenge. It took me 10 days to set it up. My guy, I'll send my guy to you. It's a $150 service that we offer for prop traders, but I'm giving it to you as a bonus. I'm going to connect you with my young genius, Brady, who's going to jump into your computer, and then you can just watch his mouse go around. He'll set everything up. I just want you to start trading and not worrying about the technical part of this, the nuance, the geek part, as some call it. All in all, and here's Roger, who did pay the $150 for the service, but it was well worth it. All in all, really went well. Brady is obviously skilled. His cursor went back and forth without explanation. I ended up feeling like I had gotten a bargain, and you're going to get a better bargain because I'm going to give it to you. Okay, here is the entire get funded offer. Okay, the loaded gun simple trading plan. Simple videos. It won't take you long. All the nuances to try to fit. These are optional. You can use them or not use them, but I think you're going to really be excited about that. And the monthly get-togethers. We've got that every month. I think we have 22 or 23 of the past get-togethers that you can take a look at as you develop in this trading plan. You got the bonus of unlimited one-on-one coaching for 90 days. Again, it starts with me. Always with me one-on-one, but it starts the day you want to set up your first meeting. So look at all the videos, learn about it, get going, and then go ahead and make that first meeting. That's when the 90 days will start. So if it looks good to you, grab it now. And the hands-on setup for your data feed and platform if you need it. Okay, here's my personal guarantee. I'm so confident that you're following the loaded gun simple trading plan will result in you getting funded by a prop firm so that you risk their money and not yours and still receive 90% of the profit you generate. Just share your trading experience with me, that you followed the simple rules. Show me the trades that you did either for a couple of days or a few days. Not, you know, just show me that you followed the system and are not making money, and I will refund your purchase price plus $500 for your trouble. I believe in paying for your time if you believe it's been wasted. Okay, so listen, this is a solid guarantee of the quality of this trading plan. Okay, so it's an ironclad guarantee. Just share your trading experience with me, that you follow the simple rules and it didn't work for you, and I'll refund your purchase price plus $500 for your trouble. Okay, so here is the offer. The Loaded Gun Simple Trading Plan, which right on our site right now, if you go to theirmoneyyourprofit.com, you'll see it offered at $24.97, and the larger firms who are getting some of the traders to do it are paying this, and it's a very, very fair price. Okay, unlimited one-on-one coaching for 90 days. I put a value of $2,500. I'm sure it's worth more than that if you ask some of our graduates. And done for your setup fee, maybe call it $250. So a total value of $52.70. But again, I have it right now offered without the setup. I'm throwing that in for Jeffrey. And this is a special group of traders that you're listening to these 5 days. So $24.97 is what you'll see. I want to give you 50% off. So for today, $1,247, okay? $1,247 gets you everything that gets you and I holding hands and getting you funded and beyond, okay? Go to theirmoneyyourprofit.com and use the coupon code today's date, May 22nd. Theirmoneyyourprofit.com, coupon code May 27th. I'm going to be on, when you get to that page, you're going to see on the lower right-hand corner a chat thing if you want to chat. I'll be on, rather than take your time up here, I'll be on that chat for the next 45 minutes, an hour. Just go ahead and go ahead and use that chat to ask me any questions. We may have a little time here for 1 or 2 questions, but I'll be on that chat for you as time expires. Let's work together and get you funded. It's real, it's happening. Let's make it happen for you. Now, because of the calendar limitations that I described before on the one-on-ones, this offer is available for the first 6 traders only. If you're the 7th trader, you're going to get a pop-up window that puts you on a waiting list. But for, let's get started. I'm leaving the country for most of July. So you don't want to wait on this. You want to get going. Let's firm it up, and I'll be available while I'm there, but I'll be available a little bit 1 or 2 of those weeks. It's going to be limited meeting one-on-one. So, but because of the calendar limitations, I can only offer this to the first 6 traders. So theirmoneyyourprofit.com. Use that coupon code May 22nd. Okay, I'm going to look real fast at the and any questions. I enjoy doing this presentation because I kind of relive my own doubts in the beginning and then my own glee because it is real. It's unbelievable. It's almost unbelievable. And it's almost unbelievable. So I wanted to give you that potential. Let's see if I can, if there's any questions. Otherwise, I'm going to let Jeff have the rest of the day off. No, I don't. You can't do any. You can't do with Apex is only futures, no options on that. And most of them are. It's interesting. I have several traders that are with me on this that are their money your profit, and actually have the and actually have usually the triggers that we use in Loaded Gun Trading Plan to buy and sell premium in options. So there could be a use for that even if you're not a prop trader. So, but no, I don't. There are them out there, but very, very few, and a lot of them haven't been around a long time. All right, let's see if there's any other questions. I can look here. Don't see much. Okay, don't see any real questions, which means that I have answered all the possible questions, which is great. Jeffrey, thank you for the opportunity to present here right in the middle of your your fabulous operation here. I look at those. I'm just honored to be among the company that you've put together here, Jeff.
Yeah, absolutely. Thanks for coming, Norman.
Thanks for having me.
All right. Very cool. So we put the chat in there, theirmoneyyourprofit.com. May 22 is the coupon code you want to use for that. So
thank you.
Big thank you, Norm. Very, very interesting.
Okay. Right. It's the future, I think.
All right, cool. Let me go ahead and do this real quick and we'll wrap up for the day. I do want to say thank you to all of the speakers that came in here. But before we do that, I want to say thank you again to all of our fantastic sponsors. I should kind of find it humorous. I forgot to move the camera up when I moved the desk back up, and it actually automatically kind of zoomed in the right place. Anyway, I want to say thank you to Stocks and Commodities Magazine. Been a sponsor of the summits that we do for such a long time. Such a great magazine. Traders.com for that one if you're interested in. CMT Association. Tyler spoke today about how having a CMT designation after your name can help you make better money. If you want to work for a bank, if you want to have more assets under management, more responsibilities, cmtassociation.org. You can get involved in their next classes. And of course, TechnoTrader. Martha's been such a great technician, a CMT herself. They're offering a bunch of free courses, free videos that you can go and sign up for. And I'm going to go ahead and put this in the chat again. And just so that I don't have to type it, I should just put it in a notepad for over here for tomorrow. I want to say, there we go. Had a lot of really good discussions today. Vince Vora came in and talked about his very popular victory method. We had Buff Dormeier talk about his toolkit. I'm trying to remember them all off of the top of my head, and I'm gonna forget because it's been a long day. But it's just been such a privilege to work with all of these great speakers. And if you're interested in any of the products that we offer here, I want to remind you that we offer them with a money-back guarantee. We have the extended trial on our award-winning software that's been rated #1 for so long. Tomorrow we have another day, a little bit shorter tomorrow, but we're going to kick it off with Alex Cole. Fausto Pugliese is going to come and talk about his level 2 strategies and how to spot moves in the market. Marina, the trader chick, is going to come and talk about her day trading plan. We'll have Kevin Nelson come in here and talk about the super trend indicator. Another CMT, John Kosar, is going to come and talk about data-driven decisions. And then Jerry Ellison, always somebody that we love to have in here. Tons of questions on tax strategies and stuff like that. If you're here in the US, you'll want to be here for that one. We have Mark Leibovit. He's going to talk about his volume reversal toolkit. And then last but not least, tomorrow we've got Peter DeLaw, who's going to come in and talk about Magic Trader, his ingredients for a successful trade. So we hope to see you again tomorrow. Thanks for being here today. I hope it was helpful for you. I hope you learned a whole bunch of stuff. We'll see you again in the morning. Thanks for being here.
Hi, Kelly Clement here from MetaStock. Before you go, I have 2 quick things for you. 1, thanks for joining us today. We love having you here at our webinars and viewing our videos. So what I'd like to invite you to do before you go is like and subscribe. Like the video, subscribe to the channel. It helps us a great deal and it helps us bring you more awesome content like today's video. The second thing is we have a great ebook on trading that you can get for free. If you go to metastock.com/YouTube book, you can get a free copy of The Secrets of Successful Traders. It's a great book with lots of content from traders just like yourself who can teach you some of the secrets that they have learned. Thanks for taking a second with me and learning about those 2 things. Thanks for joining us and keep on trading.